about 16, 17%, a lot of damage in the mid and small cap space. So, and serious value emerging. So from a short-term perspective, it's very difficult to say. I think, a small rebound is quite likely in the very short term, given the extensive fall that we've had in recent weeks. But I think a bigger or a more durable bottom is still difficult to say because the policy environment continues to be extremely fluid. And please remember that, if the world is slowing down, India will slow down as well. So, taking those two things into account, I'm not sure if the durable bottom is another 5% lower or is already behind us. It's very difficult to say. From a medium-term perspective, I think one should be constructive and do some bottom-up idea picking here. That's how I think about it.
We were talking about IKS, and we'll have an alert out there for you. Just coming back to you, Ashwini, there's a lock-in which is ending, as Hormuz has pointed out earlier. So I think this is...
it's a 3-month lock-in. 4.2 million shares open up for trade in the market now.
There you have it.
And this is about 2% of the total outstanding shares. Since IPO, the stock's not done too bad. So I guess it's just people rushing to book some profits. 9% down. So all the locked-in investors perhaps want to cash out today. That could explain it.
10% cut now. And I think there's a very large pipeline of stock. Maybe we'll put that data out. I remember seeing in November, humongous. Big lock-ins because we saw such a big IPO boom all the way till December last year. A lot of these 3-month lock-ins, 6-month lock-ins, then of course, a lot of that. It's not that
there's
all
also
of it.
Vishal Mega Mart. That's actually, I have the list in front of me. Maybe quickly just pull up the stocks. Vishal Mega Mart, the 3-month lock-in is ending today. The Sai Life Sciences, there's One MobiKwik. IGI anyway has been absolutely slammed hard. So these are some of the counters where either a 3-month lock-in or different periodic 1-month lock-ins could be ending today. 1-month lock-in today is ending for Ajax Engineering as well.
I'd be most interested in seeing what happens with EMS Limited, because the entire EMS space has been very much in focus. From the issue price, the stock has moved about 200% as well. But from the post-listing high, it's nearly halved. And we have 18-month lock-in ending on EMS listing, which has outstanding equity of about 20%, 1.1 crore shares. So that's MobiKwik, which is lower. Just EMS Limited is the one we'll keep an eye out on. Currently holding in the green, but remember 20% of its equity comes out of lock-in today. The stock's already corrected about 40% from its high, and from the IPO price, it's up about 200%.
Okay. So anyway, since Ashwini, we're on this subject of paying for our past sins, as Prashant very nicely put it. What about these issues? This is another risk that you're now running, right? Where, as we're seeing, this is today's theme. Wherever lock-ins are ending, people are using the opportunity to quickly get out. What would the advice be in general on some of the recent issues? How did you find the quality of paper that came in? And should one be worried? Does this become another trigger to basically get out of any of the recent listings?
Survi, I think, it's not a standard answer. Because some of the IPOs that came in were very expensive and then they traded up. So, valuations became ludicrous. So even if at a 50% decline, some of the stocks that I've looked at recently to try and find out if there's any value are still trading at 50, 60, 70 times price to earnings multiple. And those are not, palatable to me. So I would say that, yes, the opening up of lock-in, if it creates a fall in the stock price and valuations are reasonable, by all means, go for it. Because, my sense is that there is a lot of panic, I wouldn't say panic, but I think a lot of uncertainty that's driving investors to take very short-term calls. And that is an opportunity for medium-term investing. But I would say that the starting point of valuation has to be reasonable. If the valuations are still in the vicinity of 40, 50, 60 or thereabouts, I would stay away. We can find plenty of things which are now in the 10 to 20 PE range, and I think that's where the value picking should be attempted. So it's not so much as selling should be something to worry about. It should be seen as an opportunity if the valuations are right. That's how I think about it. The quality of the paper you asked, some of the quality of the companies is very good, beyond doubt. But there is a valuation that one has to contend with.
And of course, I mean, if you're trading, then this kind of data point becomes very important, right? I mean, you don't want to buy something and the next day, if you're trading specifically.
Yeah.
So this is, I mean, you've got so much to track. The global stuff, local stuff, this is lock-in business now. But of course, that's the nature of things. I think it's coming up a little bit from the lows. And it's a solid business. I mean, I remember speaking with them here on the day of the listing. But of course, it's all about what you pay at the end of the day. Mangalam, what else?
What else? Just ask Ashwini a little about the consumption space once again. I mean, he didn't seem like he's very interested in anything above 10 to 20 PA because that's where value pickings are. But look at Godrej Consumer. That stock opened in the red, and from there, swiftly it's moved higher. It's moved to the high point of trade. And in consumption itself, we look at rural consumption. One of the key proxies is looking at two-wheelers too. So you have TVS Motors too, which too has recovered from the lows. We are seeing some traction in M&M as well. So that's moved to the high point of trade. We have a few stocks which are recovering from lows. Britannia opened about 3% lower, now just about breaking into the green. Hindustan Lever just about flat, but again, recovering from lows is what we've seen. Ashwini, any proxies that you have in the consumption play, specifically because rural is doing better and urban's expected to do better? Is this an investable theme right now?
Yes, it is. I mean, I think, in the small and mid-cap space, there are plenty of domestic consumption-oriented stocks which are trading at extremely attractive valuations with very solid balance sheets and free cash flow profiles. One has to just look deeper. Unfortunately, I'm not in a position to share names. I think even in the large cap space, the consumption companies which are domestic market oriented will probably give you decent returns of mid-teens or so on the next 2 to 3 year basis. Like you said, I think the outlook for the rural demand is a little bit positive and urban demand is expected to come back as well. And I also think that the exporters will continue to get buffeted by the outlook on the rupee dollar and the outlook on tariffs and the uncertainties arising from there. So, that will cause a shift towards the domestic economy. But the one space that I think we should all pay a lot of attention to are the financials. I mean, financials are really very, very attractively valued. I think many of them are evoking the kind of carnage that we saw in 2018, 2019. I don't know if things are as dire this time around because the starting point of capitalization is much higher. And RBI has been extremely vigilant ever since the Yes Bank Diwan Housing ILFS debacle over 2018, 2019. So I would be very surprised if there are a lot more skeletons to tumble out. So I think that's one space which offers a lot of value to me. I think, those are the two spaces, consumers and financials that look very interesting to me.
Very quickly, Ashwini, you briefly mentioned exporters, and I know that you have a view on apparel makers, textile apparel makers, right?
Yes.
Again, space is not done very well. Are we waiting for these tariffs or anything? I mean, what's plaguing the space?
I think, again, they have done extremely well over the last 2 years in terms of select stocks, and valuations in some cases might be a little bit stretched. Second is that there is an uncertainty arising from the outlook to the currency as well as what happens to the US demand in response to all the policy action going on there. So, those are the two worries. But I also think that this is a huge opportunity for India. I think apparel making is a strength for India in many ways. And I hope that the ongoing conversations that are going on with the government of India and the US in terms of putting in place some tariff agreements or preferred partner status, some of that comes through, which will put aside the uncertainty these stocks are facing right now. So I think I'd wait to see the outcome of that. But I think longer term, the opportunity is there. And I don't think this is an industry that can go back to the US in terms of manufacturing. It's just too manpower intensive for it to make sense to do it on mainland US.
Okay. All right. Ashwini, thank you very much. Great to get that perspective from you today. Pleasure having you on the show. You have a good day, and we look forward to the next call soon. Well, the market's actually looking very, very good. I mean, we started with about a 70-point opening gap, and now it's expanded to almost 150 points. So the bulls are in control. The mid-cap market's doing even better. Look at the mid-cap index, up about 1%. It's a nice green shade that we've got going on the screen. Well, for the time being, we're putting the spotlight on the real estate space. There's been some concern in various pockets of the market about whether there's going to be any sort of a dip in perhaps demand for, ultra luxury housing, considering the 5-month-old stock market correction. Well, the next company on our radar is actually from the realty space. We've got Pavitra Shankar, Managing Director at Brigade Enterprises, joining in. Brigade, of course, has been launching lots of premium projects in Bengaluru, in Chennai. So let's get some perspective going. Pavitra, great to have you with us on the show. Thanks for joining in. And I really want to start with that question, just address it head on. First of all, tell us that, what percentage of your revenue classifies as ultra luxury? I mean, I don't know, different developers sort of bucket it differently. For some, it's above 10 CR. For some, it could be above 5 CR. So what is that segment for Brigade? And are you seeing any sort of a slowdown in inquiries, in action in that segment?
Hi, good morning. Thanks for having me. So for Brigade, our portfolio is sort of diversified across mid-segment and upper mid-segment. And definitely now that we're seeing the preference for more premium housing, we have launched a few projects on that account as well. So as far as we are concerned, predominantly 80% of our portfolio is mid and upper mid-segment. And what we deem as premium housing is, I would say, 5 CR plus. So we have one project live in each of our major cities, Brigade Insignia in Bangalore, Brigade Icon in Chennai on Mount Road, and Brigade Gateway Hyderabad in Hyderabad. And all three of them are basically, inventory is above 5 crores. In Bangalore, it's a little bit lower, about 4 crores plus. Chennai goes as far as 7 to 22 crores, and Hyderabad is 5 to 15 crores a unit. And each market has been a little bit different. So Bangalore's been pretty stable. Definitely at launch, things are more active at the time of launch, and then they stabilize. We don't intend to sell out, inventory at the time of launch itself. So we are happy with the pace of sales in Bangalore. In Chennai as well, at the launch time, we sold more than 25% of the inventory, and it is stable. Although I would say Chennai is slightly slower paced than Bangalore when it comes to very premium inventory. And in Icon specifically, it's, much higher than what the Bangalore price ticket size is. And finally, in Hyderabad, we sold more than 200 units at 5 crores to 15 crores, all within the span of a couple of weeks. So Hyderabad is a completely different market entirely. So I would say different markets in Bangalore are different, in the country are different, whether you're looking at 3 southern markets or elsewhere, Mumbai, NCR. I also think it's also, it's also what are the expectations? When it is premium, we don't need to sell right away. We do need to see, stable interest in inquiries, walk-ins, people inquiring about the project, and then the eventual conversion.
But has there been, Pavitra, that's what I'm trying to, what I'm trying to understand from what you say is that Chennai has been, not sluggish, but slightly quiet. Hyderabad, things are flying off the shelves. Bangalore seems to be stable. But has there been some sort of a dip in the level of inquiries or footfalls when you launch these projects vis-a-vis, say, 6 months to a year back?
We didn't really have the very premium projects about a year ago. I would say the market was much more frenzied a year ago because the pricing was still, in the movement of going up and up. I think prices have stabilized across the board, whether you're talking about mid-segment or upper mid-segment or even premium. A lot of that has to do with the price discovery itself by developers. I think all of us know and have the right idea in mind when it comes to pricing at launch. I'd say in the last couple of years, for all of us, it was more of a discovery. Okay, let's launch it at this rate, but very quickly you could take up the rate. Now I think we understand where the market has stabilized, and these are very good numbers. The market has already increased 100 to sometimes 150% in some parts of Bangalore, for example. So we don't expect the rates to increase like that, and therefore I think even the urgency from customers to, take the decision on day one, that level of urgency isn't there. And many of them, seeing the ticket size, they do take their time. This is not the ticket size where someone just comes in on a whim and does the purchase. So they do want to understand, they do want to compare what are the other projects available to them. And I think it's still a careful decision making, which it should be. And because all three of these markets are fairly stable when it comes to inventory movement and all of that. So it's not speculative in any of these three markets.
You take that point, just hold on to that thought, Pavitra, because there is some update coming in on SpiceJet as well. We all were wondering why is it that Ajay Singh has gone ahead and sold his stake at 45 odd rupees, despite, the company recently raising funds at 61 rupees itself. The company said that they've done that to, fund their Spice Health business. Furthermore, he will go ahead and utilize the company has informed the promoter has informed the company of his intention to dispose up to 3.15 crore shares to fund allotment to Spice Health. And the stock has recovered from the lows because they've also said that they will convert about 13.14 crore warrants into equity shares. So the promoter's stake, which is currently fallen because of this sale, will go up to around 33.5% after conversion of these warrants itself. So the rationale has been given. It is to fund the investment in Spice Healthcare, and the promoters increasing their stake is something that the streets taken note of. The stock, which was at around 45 flattish, has recovered a wee bit from the low. So we'll keep an eye out on SpiceJet itself. But let's get back to our conversation with Brigade Enterprises. Pavitra, you had targeted about 63 to 6,500 crores worth sales in FY 24-25. With these launches that have come by, have you made any early projections for FY 26 in terms of launches, collections, and sales?
Do you mean FY 25 or
FY 26?
FY 26. So in the coming year, we will look to increase whatever we've done in this year. I mean, we are fortunate to have received some approvals in the month of March itself. So we are looking to finish out the current year, FY 25, on a strong note. And we're yet to see where those numbers will come up. But that said, all of our launches in the pipeline for FY 26 are still looking good. Approvals seem to be stabilizing, but taking more time than we generally expect. In the coming year, we will have more launches in Hyderabad and Chennai. Those are our new markets of focus, and of course in Bangalore. So we don't really give guidance, but we're hoping to continue to increasing our numbers at the 15% to 20%, depending on the year over year in terms of value.
Pavitra, hi, good morning. Prashant here. So just to take that point forward, I think the planned supply since the start of financial year FY25 was about 12.6 million square feet. How much have you launched so far out of this?
We have, while, at the end of the Q3, we had released some numbers, but since then we've added another 4 million square feet of launch. So thus far, it's almost touching 11 million. So while we had indicated launching about 12.5 in residential, we've touched 11 million, and I'm quite happy with that. Hoping to maybe get a couple more before the year ends. But, the idea is that we'll be selling this over the course of the next couple of years. So while the timing is always, trying to get it within certain quarters, what is happening on ground is still pretty stable. So it's really a question of whether it comes into Q4 or goes into Q1 next year.
Would I be correct in saying, Pavitra, that, of course, nobody wants approvals to be delayed, but the point is delayed approvals were a problem about a year back. I mean, when things were flying off the shelf, right? I mean, very fast. But maybe not so much of a problem. Maybe things will pick up. As you said, you already have some approvals in the month of March. So is that a fair way to look at things? And could you share the planned launch pipeline 26, or is that too early?
Yeah, it's a little early for what we would want to do in FY26. I think we still need some clarity on where this year is going to end out before I can give any kind of indication how next year is going to look, because it is a percentage increase over what we're able to do this financial year. But what I'm trying to say is that things on ground are healthy. I know there are, more comments being made in terms of how is the real estate market doing, but I still feel it's very healthy. And sometimes it is skewed by what we saw over the last couple of years, which was, every single factor that could go well was going well. And the only thing that was being a challenge was just getting the launch out on time. But what's happening on ground is still that you're still getting many walk-ins coming into site. There's a lot of excitement when a project launches. There's much more understanding in terms of what price we should launch at. So in general, I think it's a very stable and still a very good time for developers, and also a good time for people to buy, because we continue to see prices increasing at at a normal rate of say 8 to 10%, as opposed to what it was 30% year over year. So I still think it's a good time for people to buy.
So it's a stable market, and that's perhaps good for customers, and then therefore good for realtors as well. Very quickly, Pavitra, I want to ask you about the other big headline from last week for the sector. I mean, a giant like Blackstone taking such interest in the residential market, right? They've always been huge in commercial, but with this buyout of Kolte Patil, what thoughts in terms of valuation for real estate companies now and for Brigade's own plans? I mean, given this kind of large institutional interest, are you, would you be thinking of raising any further equity capital in the near future?
So we actually did a QIP in August of last year, and we've raised enough funds, and we also have enough funds being generated by our internal accruals itself to fund our land acquisition and business development. So we are quite happy with our equity position today. In terms of other real estate companies, I think everyone's just doing what they need to do in order to be ready to do more land acquisition business development. Someone like Blackstone entering the space, I think, is great. It just adds more formalization to the entire sector. Good luck to them, and good luck to the residential sector. The more quality players, the better.
All right. Pavitra, we'll leave it there. Thank you very much for joining us. Good speaking with you, and look forward to our next one. Well, I think the market's holding up very well. 150 odd points in the green, 22,550. And maybe now, of course, is a decent time to look at the overall market breadth. So 2:1, comfortably, 1,600, 1,650 stocks are higher, and you got about 850, 870 stocks which are lower on my screen. So this is a fairly decent screen to look at. We'll take a quick commercial break here. There were some flashes, by the way, with regards to Trump and Putin, a call. I mean, so we knew that they were supposed to speak this week. Time, date, etc. were unconfirmed, but now we know. And I think these were comments coming in from President Trump himself saying that that call is going to happen tomorrow. And with regards to Russia and Ukraine, he'd be in a position to announce or essentially talk about, resolution in some way. So that is also at the margin important for the market because those hopes of that happening quickly had diminished into the end of last week. We'll take a quick commercial break here. We connect with the management of Patanjali Foods and discuss the quarter gone by, the outlook going forward. Stay tuned.
Because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to come in. And I personally think that AI in many sectors, especially in performing arts and art, will be very short-lived. Because after the age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people realize that the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings, then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do...
Broader markets are doing a lot better. We have transformers and rectifiers, which is up 6%. They won an order worth nearly 700 crores. KEC International, Vivek told us this morning, a 1,200 crore order. That stock continues to do well as well. And we have a bunch of other, infra names, TD Power, etc., which are spiking as we speak as well. But Patanjali Foods, that's the stock on our radar. Jefferies has turned bullish on the stock. In fact, they've initiated coverage on the stock, the buy rating. Target price upwards of 2050 is what their target price is. They expect near double-digit top-line growth coming in for the company, along with margin expansion as well. So to discuss this and talk about the growth outlook, we have Sanjeev Asthana, who's the CEO at Patanjali Foods, joins in now. Thanks a lot, Mr. Asthana, for joining in. Before we get to this business, I just want you to, for our viewers, set the record straight on the insurance foray that has come in from Patanjali Ayurved and has nothing to do with Patanjali Foods. Please, you do it yourself.
So that's absolutely right. It's got nothing to do with Patanjali Foods, the parent company. That's what's there in the marketplace. They're working on it, and we'll see. Of course, it is subject to all the regulatory approvals, etc. But Patanjali Foods per se, either in terms of involvement or otherwise, will have nothing to do with that business.
And no financial liability whatsoever either, right?
None at all.
Perfect. Thank you for setting that record straight. Let's get to business now. You know, the last time you joined us, you did say that oil prices have been volatile. From the highs, we've seen a bit of a decline in edible oil prices, etc. as well. So far, how has business been? How has consumer sentiment improved over the last month? What kind of volume growth can we expect along with margins in your oil business in the fourth quarter?
So two sort of set of events are driving the change on the edible oil side right now. One, that we are clearly witnessing some bit of slowdown in the imports in terms of volume terms. That is more than made up by the oil inflation that we witnessed. But broadly for the year, we are pretty confident of still meeting between 2 and 4% of growth target on the edible oil volume. Pretty confident about exceeding 4% plus of EBITDA margin on the edible oil side. On the FMCG regular businesses of foods and non-food, there is some slowdown we see in the urban area, so that continues. But broadly, we are pretty much within the ballpark range of 8 to 10% target that we are on the food side. The HPC business is still integrating. The first full quarter we'll see in this last fourth quarter now. And pretty much we are on course to achieve 15% growth on the HPC side next year.
Right. So, let's revisit some of those numbers. You said that 4% EBITDA margins in the edible oil business will, maintain. Is that on the cards? And 8 to 10% in FMCG food segment. Will that happen in the fourth quarter, or that's a more medium-term sort of target?
That's pretty much for the annual, business itself. So pretty much on course to both the numbers. And, there's nothing that I foresee now in the balance part of the March for anything to come in which can dramatically change that. There might be minor changes here or there, but pretty much on cards that we should achieve both the numbers.
HPC business, you had earlier targeted about 900 to 1,000 crores in FY25. Will you meet that? And 3,000 to 3,200 crores in FY26?
So that's pretty much on the cards, as I mentioned. So we feel pretty confident about 15% growth rate next year. So that should pretty much take us to the numbers that you mentioned. And this 15% CAGR allows us a lot more, headroom for expansion that I clearly see in non-oral category as well. So oral is a fairly dominant part of a category. We're expecting that pretty much in the home care, personal care, and hair care, also for that expansion to happen now, under the fold of Patanjali Foods now. So next quarter onwards, which is first quarter of next fiscal, we're pretty confident that we should start getting back on stream and build up that 15% growth momentum in the business.
Just a couple of more questions before we let you go, sir. One is on the oil palm plantation. The street believes that this could actually be 20% of your revenues and a decent contribution to your EBITDA as well. When does that happen, and what are your near and medium-term targets here?
So it's happening, every year. Every year, our EBITDA run rate, what used to be about 160, 170 crores, we are upwards of, somewhere around 220 crores odd we make as an EBITDA. So every year that is spiking up. But the big growth in the EBITDA and the contribution to the revenue shall happen maybe in 3 years' time, when all the plantation that momentum that we have of last 2 years, I think will start to fruit. So pretty much from 28, 29 onwards, you will see a big expansion. And that the estimation is broadly that, if the run rate of our targeted sort of plantation size, the margin expansion that we expect to happen. So we should pretty much be nearly 3 times of where we are today in 4 years' time, and pretty much 5 times of where we are today in 8 years' time.
Right, and final question. This is with regards to some of the regulations and macros in general. We heard the Prime Minister speak about, people wanting to reduce, or him wanting people to reduce their intake of oil, etc. Would that be a macro risk to the underlying growth that we're seeing in the oil business? And there were some run-ins that came in from the FSSAI as well. This was specifically on your red chili powder business. So these two continue to remain a bit of risk or the overhang on demand growth itself, right? For oil, if the underlying business itself is not likely to grow as fast because people are staying away from that, could that pose as a risk? And secondly, the risk of regulations, that people move away a little from packaged foods in general.
So I'll address both the questions. So one is what Prime Minister exhorting people to reduce their consumption of edible oil. That is, of course, I think from a health perspective or otherwise, I don't think there's any fundamental shift in reducing the demand per se. And I don't believe that is going to have a big impact. On the per capita consumption, we are significantly lower than the evolved markets of the West and even our Asian peers also. So there's a lot of headroom for growth. And I don't believe that, anytime soon that any substantial reduction, voluntarily or otherwise, will happen on the edible oil consumption. And on the red chili powder, we have already issued, the clarification. It was a very small sort of lot of, which had a problem. Most of it, we have recalled already. And that was pretty much led by, certain challenges which Indian spices had in Singapore and Hong Kong earlier. And so it was part of that process. So we withdrawn. It was very, very small lot and part of a much larger business portfolio. So those are things behind us. And I think, once in a while, this may happen. But pretty much we're working in terms of removing this completely so that quality should not be an issue on any product that Patanjali brings to the marketplace.
All right, we'll leave it there. Thank you very much for taking out the time, speaking with us here at CNBC-TV18, and speak to you again soon, sir. Good luck. There is Patanjali in focus. Well, look at Ola. Stock's down 5%, and it's got decent-sized volumes as well. Actually, volumes are very large on Ola on the downside. Across on the NSE, fifth largest volume loser. So it's going down and is getting sold with large volumes as well. IKS is still down 8%. LTI, Mindtree, of course, that news out of Citi, 4.5% lower. MobiKwik is down 10%, 11% now on MobiKwik. So fair bit on the downside, even though the broader market still remains pretty healthy. 150 on the Nifty and 2:1 broader market advance decline ratio. Tata Technologies is the next company we are focused on. We have Warren Harris, Managing Director and CEO at Tata Technologies, joining us now to talk to us about business and how things are looking. Mr. Harris, thank you very much for joining us as always. Prashant this side. I mean, you derive a fair portion of your revenues from the auto space. And of course, the sector has been reeling with significant uncertainty due to tariffs. There is slowdown due to competition and EV incentives, etc., being rolled back as well. Could you tell us how are your clients behaving amidst all this uncertainty? Are they holding back in handing out new projects, etc.?
Well, I think it's been a choppy environment over the last 12 months. Certainly here in the US, the extreme policy positions that the Republicans and the Democrats were taking made for very difficult investment environment for our customers. The lack of clarity up until November, I think, was very distracting for many of not just the OEMs but also the tier ones in Europe. You cited the runoff of incentives. We've also got the threat from China. So it's been a difficult 12 months, and yet I think at the beginning of this year, despite the tariff kind of overhang and the lack of clear policy clarity here in the United States, I think the environment is starting now to present an investment platform against which, again, we're starting to see the green shoots of improvement. So, whilst it's been a difficult last 12 months, we are hoping that the improvement that we've seen January, February, and March will continue through this calendar year.
Got that point. Mr. Harris, let's talk about the automotive segment in particular, which it was, of course, subdued in the third quarter. Is there any improvement so far in Q4, and what's the outlook for FY26?
We're seeing momentum build, and so we are expecting to finish the fiscal year well, and we are seeing the opportunity for momentum to build in the new fiscal year. We are relatively bullish for not just automotive, but for aerospace and industrial heavy machinery. The growth rates of the addressable space that we are focused upon are double digit, and we expect to intersect with that. And we are hoping that as we move into next year, many of the sort of headwinds and the distractions that we've had to grapple with will be mitigated, and we'll get back to where we were in FY23 and FY24.
Well, you know, the highlight has been the double-digit growth that you are targeting in your addressable market. This across three segments: auto, aero, and industrial machinery. And add to that, the question is this double-digit growth in TAM. Does it translate to double-digit revenue growth as well? Will that be higher than that?
Well, when I refer to the 10-12%, I'm referring to auto, aerospace, and industrial heavy machinery. The addressable space for us is just over $200 billion. And that space, so those are the verticals that we are targeting, those are the verticals that we are focused upon. That space is expected to grow somewhere in the region of 10-12%. That's what Zinnov have confirmed. That's what other industry watch organizations are asserting. So we think that collectively that will provide the type of tailwinds that will support our return to not only growth but double-digit growth as we move into the new fiscal year.
All right, Warren. So double-digit growth as you move into the next financial year. Is it possible for you to break that up into aerospace, industrials, and automotive?
Well, we're expecting, because we're coming off such a, you cited the percentage split of our business. Industrial heavy machinery and aerospace is a much smaller part of our business than automotive, and so we expect percentage growth in those areas to be much higher than what we're seeing in automotive. But we are expecting momentum and growth to sustain across the three verticals that we are targeting, and we are, our confidence is reinforced not just but through the research that's come from the industry watch organizations, but we're seeing it from our customers as well. We're seeing the order book starting to grow. We're starting to see decisions made, and that's informing the type of confidence that underpins the numbers that I've just shared with you.
All right, so growth momentum seems to be coming back. So then let's talk about margins as well. You're at about 18 to 18.5% right now. The company has stated in the past the goal is 20% margins. Do you think that you'll be able to get to those targets maybe next year?
I think in terms of margins, you're absolutely right that our aspirations, our North Star as far as margins are concerned is over 20%. We expect to make improvements to margins next year as the business scales. But I think it's likely to take several years before we get to the 20% mark.
There is so much tariff uncertainty, and you believe that it's not going to be a drag on your growth in this year. I mean, what is it that makes you confident?
Well, I anticipate that the lack of clarity that we've got as far as tariffs are concerned will resolve itself in the next month to 6 weeks. I think that there is clear direction in terms of where the current administration in the United States wants to go, and I think as they're implementing the changes that they have made clear that they want to make, whether we like the tariffs or not, it'll at least provide clarity in terms of the market conditions. And I think it's clarity that's more important than whether we have tariffs or not. I think if the tariffs present themselves as is being suggested, then the market will adjust and investments will be made. And so I think the current uncertainty is likely to be short term, and I think medium to long term we'll know exactly where we stand.
Absolutely. The world awaits for more clarity on that issue of tariffs. Thank you very much, Mr. Harris, for joining in and giving us a sense of the business. We do have to take a very quick break now. On the other side, back with the markets, and we'll get Mitesh to give us some more trading ideas.
Of itself.
We certainly hope so. Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube.
Okay, welcome back. We've got the market, which is at about 22,535, 140 points in the green. A little bit of drop-off coming through in the last couple of minutes or so. I've been sort of highlighting a few things on the downside. Maybe just look at a few things on the upside. KEC was not there in the mix in the morning, but it's the biggest volume-led gainer on the NSE now. 6%, 6.5%, and huge volumes coming through on this one. Muthoot Finance is another one. Muthoot Finance, of course, I mean, the news was that they've crossed 1 lakh crores in gold AUM, gold loan AUM. There's a 5% pop. And of course, I mean, it doesn't look like, this rapid rally in gold prices has impacted disbursements at all. LG Equipment, I mean, we don't talk about this name very often, but it's the third largest volume mover. That's LG Equipment. That's 7.5% on the NSE. That's a big one. And look at something like a MCX. Actually, two exchanges. One is MCX, 4.5% pop, and that's about 5,025. And IEX is up 4% as well. So yeah, there's exchanges, but there's also, Hitachi, which is up 4.5%. Stocks back above 12,500. So that is again, big volumes for a large name in terms of value of the stock. At this point. So there's a fair bit happening on the upside at this point in time. When I can sort of name more names, and we'll do that as we go along. Mitesh is with us for now with what he'd like to do now with this gap up and, of course, what we've had over the last 45 minutes or so. Mitesh, your sense of things, whether this will last, whether we'll be able to build on this, and your trades.
Yeah. Prashant, I think, to me, it looks like that we might actually be able to slightly build on this for the simple reason that, HDFC Bank, which is both a part of the Bank Nifty and the Nifty, is turning positive. We had a buy on ICICI Bank earlier in the day, in the morning call. So I think both these stocks are looking good, and that could lend some strength to the Bank Nifty as well as the Nifty. So I think I'll take the chance that we might, actually hit 22,600, 650 zone, which is about 50, 60 points away from here. And with that kind of view, the stocks that I would recommend as a buy on Woodco with a stop at about 181 and a target of 195 to begin with. Though I suspect we might eventually look at a slightly higher target, but yeah, 195 should be the first target over here. And the second stock, which is on my radar, that's a buy on Indigo Airlines, or Interglobe Aviation Indigo Airlines. That's the one. And this I would recommend buying with a stop below levels of 47.10 for targets of 48.50.
Take that point, Mitesh. Thank you so much for joining in. HDFC Bank doing well, giving it company on the way up. Our ICICI Bank and Kotak Bank as well. Infosys, in fact, too, has picked up. But a lot of stocks on our radar on the downside. Hormaz joins in with the stocks where lock-ins are ending today. Hormaz, a lot of stocks.
Indeed, 7 of them to be very precise, and 19.5 crore shares become eligible to trade as the shareholder lock-ins ending today. But it needs to be specified that, of course, not all of these shares will be sold in the open market. Of course, they only become eligible to trade. And a lion's share of these 19.5 crore shares belong to Vishal Megamart, with almost 15.5 crore shares becoming eligible to trade. 3-month lock-in ending today, 3% of outstanding. Not a significant movement on the stock though, but the one that is seeing significant movement is MobiKwik, and that is where around 6% of the outstanding has become eligible to trade today. 46 lakh shares are becoming freeing up for trade. The stock now below its IPO price. Ajax Engineering is the other one, 30 lakh shares, 3% outstanding, freeing up for trade, and the stock is also below its IPO price. IKS is the other one that is seeing sharp cuts in today's session. 42 lakh shares, or 2% of the outstanding, becoming eligible to trade in today's trading session, and the stock too is down almost 25% from its IPO price. This is before today's fall. Now, Sai Life Sciences is the other one, 4% outstanding, freeing up for trade, 83 lakh shares to be precise, and that too is on the radar today. EMS is the only one that is still having some significant gains from its IPO price despite the correction that it has seen from the top. 1 crore shares, or almost 20% of the outstanding, freeing up for trade. And lastly, Ratnavir Precision, here too 20% of the outstanding becoming eligible to trade, or almost 1 crore shares. So 7 companies, some of them seeing really sharp cuts in today's session.
All right, Hormuz, thank you very much for that. That's IKS, the big one, of course, but there are many other names, as Hormuz highlighted, which are reacting to these lock-ins ending. And it's a fragile kind of trading environment, and it's showing up in a big way, outsized way for these individual single names. Time for a quick commercial break here. On the other side, our segment, Market Masters. Lata will be in conversation with Ashish Gupta of Axis AMC, and they discuss bond markets, whether things are getting a little robust on the bond side. And of course, what's the outlook for the banking space as well? The big story last week was IndusInd, but they'll talk IndusInd and more coming up in just a bit.
Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Market Masters. Even as Indian equity indices are trying to find their feet, Indian bonds have been having the makings of a rally. Inflation, that is CPI inflation, has been coming below expectation for 2 months in a row, Jan and Feb. In fact, February CPI was below the MPC target of 4%. It came in at 3.61. US inflation too came in below expectations for February. The numbers came last week. And then the Reserve Bank has been taking consistent and seminal steps to boost liquidity. How are fixed income markets placed from here on? And more importantly, what may be the impact of this falling cost of capital on banks, NBFCs and corporates in general? For all these questions, I have with me the CIO of Axis Mutual Fund, Ashish Gupta. Ashish is also one of the best experts we have on financial companies in the country, on F&O volumes, all things market. So, Ashish, thank you very much for sparing time for us this morning. Well, for starters, what's your sense about the Reserve Bank rate cut itself? Now people are running away with expectations of even a stance change and maybe double cuts in April. Your take?
So I think given how inflation has softened, and particularly food inflation, which had been a sticky concern for multiple months, I think consensus is quite clearly betting on a rate cut in April, and in fact, potentially 2 rate cuts coming in during the course of the year. So I think that is certainly on the card. But I think what is most encouraging is the fact that the central bank has been very decisive in terms of really addressing the liquidity situation. And I think you also in your show have highlighted over the past few months how challenging both the core liquidity and the banking liquidity was. And I think these steps that central bank has taken over the past couple of months have decisively addressed it. So if I aggregate all their actions on liquidity in terms of VRR, in terms of OMO purchases, in terms of forex swaps, there has been nearly 6 trillion rupees, or actually a little more than that, that's been really provided as support. Okay. So I think that is, for me, the most important really action by the central bank. Rate cuts and the stance change, of course, has come in more recently, particularly post the inflation print.
Okay, so would you therefore say that we are anywhere close to passing on the deposit cuts, considering that the liquidity is seminal? When do you expect the first deposit rate cut from banks?
So I think not before May or June. I think banks are kind of still struggling to kind of raise deposits. Banking liquidity, as you know, has not turned positive. It's expected to turn positive by April, May only, while the core liquidity has turned positive after this step. The banking liquidity deficit, which was more than 3 trillion rupees, has moderated. It's now less than 2 trillion rupees, but it is still not gone in surplus. Most banks, as you know, have a fairly high loan deposit ratio, particularly viewed from the central bank's lens. And they have actually had to pull back some bit on credit growth. So I think banks are still trying their best to step up deposit growth. And I don't think in the coming weeks, deposit rate cuts are expected. I think deposit rate cuts will be preceded by banking liquidity turning into surplus.
Okay. So immediately, banks for the next 2 quarters are in danger of margins getting reduced. Would you say the rate cut beneficiary is more NBFCs then?
Yes. So I think certainly rate cut beneficiaries will be NBFCs. As you know, the repo rates repo rate cuts typically negatively impact bank margins now, because large part, between 40-45% of their loan book is indexed to the repo rate. So in fact, we will see the January rate cut itself leading to from 1st April step down in loan yields for banks, particularly on mortgage loans. So that will impact them. But I think more important is what happens on their credit growth. So even if the margins comes down, but if banks are able to step up credit growth because of better deposits and because of better liquidity, I think that's positive for banks.
Okay. What's your sense about the FII flows itself? Bond has been positive, right, through March and Feb. And the equity flows, the negativity is thinning. Would you take a bet that we are bottoming out in terms of FII outflows?
So I think we see really a couple of indicators as really providing some lead signals to flows. One of them is really how the global bond yields are trending, and secondly, what's happening to the dollar index, right? And if you recall, the dollar index had moved up really after the Trump presidency to nearly 110, and over the past couple of months, it's pulled back to around 103, and actually it's now back down to the level that was there in October. Yes. So I think that is a really positive signal in terms of the direction of FII flows. If I look at US 10-year yields, which in September was around 3.8, they had shot up to nearly 4.75. They have since then pulled back by about 45-50 basis points. And that's also trending positively. But here, I think we don't have really a very strong signal that they will continue to soften. Okay. So I think for FII flows to decisively turn positive, we need global bond yields to soften further. What is happening as well is that in addition to US, now we are seeing bond yields, particularly long bond yields, having moved up in most markets. Right? Yes. So since September, October, if you see, while Indian government bond yields are actually softer by about 10-15 basis points, US yields are up about 50 basis points. UK is up about 35 basis points. Germany is up 30 basis points. Japan is up 20 basis points. In
short point, you are saying that you are very confident that FPI flows are necessarily going to favor us and EMs just yet.
Yeah.
Okay. Well, actually, when I was talking about banks, there was another important question I should have asked you. IndusInd Bank, are your worries behind you? It is in the price. And would you say that this is only an IndusInd problem? Similar mistakes will not be in other banks?
Lata, I'll refrain from talking about specific stocks. But I think... more broadly, I will just say that banks in India are very, very closely regulated, right? And I think banks in India, in terms of their balance sheet health, whether in terms of capital levels, in terms of liquidity levels, they are very comfortable by all global standards as well as historic Indian standards. So I think that is something we should be confident about. I will not want to give a view on a particular stock or entity.
No, I know you all are constrained to give stock-specific views. Mine was more a problem-specific question. It appears that the ALM unit of the bank was a client to the trading unit of the bank. Many banks keep the two separate. And don't allow you to hedge internally. So that's why the worry is, are many banks doing it, and therefore should we see other banks reporting problems? You don't have such worries?
No. And again, I think it's been reported that RBI is now conducting thematic audit across banks on this aspect. So I think we will have those answers in a few days or weeks.
Okay. Well, I asked you about whether FII flows have bottomed out, or rather their outflows have bottomed out. What's your view of Indian equities itself? I mean, we have shown some kind of resilience around that 21,800 or 22,000 mark. Do you think most of our supposed slowdown, our reported slowdown in second quarter and third are now priced in? Are we at a reasonable bottom?
So I think if you look at the economy itself, we saw December quarter GDP print was better than the September quarter. Whether we believe the government forecast for the March quarter or not, but certainly March quarter GDP will be better than December quarter as well. So I think the fact that the fiscal spending came back and capex spending from the government stepped up very meaningfully over the last 2 months, the fact that liquidity tap has been opened up, and also importantly, even on the regulatory front, many constraints on specific entities on lending, some of the caps on CD ratios, lending to NBFCs being eased, migration to new LCR norms being delayed. All those are actually positive in terms of really helping a monetary stimulus to the economy. So I think given that, I believe the economy has bottomed out. Of course, I think we are in a much more uncertain global policy environment, and we need to see really the impact of that, particularly on the investment side. So I think there are those headwinds. The outlook on global growth has also moderated over the past 6 months. You would have seen U.S. growth estimates being pulled down by many economists. So I think those challenges do persist. We have to be watchful what happens on tariffs and therefore potentially on margins for some of the companies. But I think the broader headwinds, which were on the fiscal impulse, the credit impulse, the regulatory impulse, all those have turned.
Fair point. So domestic impulses have at least turned the corner, but we are still vulnerable to global impulses. Therefore, at Axis Mutual Fund, what would be the sectors you all would be bullish on?
So it's actually a lot more company specific across sectors. We are still constructive on investment theme, capex theme. We like the automobile sector. We like financial, as we discussed. NBFC is where we are overweight. Select consumption names because there has been a meaningful correction there as well. And at least we are seeing some signs of pickup in broader consumption. So while urban consumption has slowed over the past couple of months, the broader mass consumption again seems to have kind of found a flow.
Thank you very much, Ashish Gupta, for joining us with your take on all markets, equities, bonds, and of course, in particular, how finance companies are panning out. That's it on this edition of Market Masters and Bazaar. After a break, it'll be time for Chartbusters.
IndusInd Bank is the top Nifty gainer, climbs more than 4% after the recent RBI note comes in and they issue statement assuaging concerns over the bank's financial health. Maruti also surges as it says it will hike prices of cars by up to 4% effective from the 1st of April.
Ola Electric is down over 6% after vehicle registration agency Rosmata Digital Services sues the company in the NCLT for defaulting on payments. Ola strongly disputes the claims made by Rosmata.
Gold financier Muthoot Finance rallies nearly 5% as gold prices touch a record high above $3,000. The company also informs that their gold loan assets under management have crossed the 1 lakh crore mark.
KEC International and Transformers and Rectifiers are up between 5 to 6% after both companies have won new orders. KEC International has won orders worth close to 1,300 crore rupees across businesses, while Transformers and Rectifiers has won an order worth 726 crore.
We also have IKS and MobiKwik both trading lower after the company's post-IPO shareholder lock-in period ends today. Good morning, you're watching us live from the CNBC-TV18 Motilal Oswal studio. This is Chartbusters. I'm Mangalam Malu. With me, Hormas Patakia. Market busting charts this morning. We opened with a gain and we're holding on to those gains, so that's a positive. The mid-cap index one step ahead with nearly 2 stocks advancing for every stock which is declining. The Nifty Bank is the one which is leading the gains. Hi, Hormas.
Hi, Mangalam. And slightly off the highs, but still holding on to gains, as you mentioned, right? And there's a similar level of rejection around 22,600 is where we are seeing some resistance on the index. 22,577, the highs of the day, exactly 100 points lower from those levels. But as Mangalam mentioned, there is plenty of activity within the broader markets, and there are stock-specific moves on enough and more number of stocks that are moving on news flow. We'll get to that in just a bit. But let's also welcome in Shivangi Sarda of Motilal Oswal Financial Services for a quick chart check. Shivangi, good morning. Thank you for joining in. 22,600 is where the Nifty has been facing some resistance over the last couple of trading sessions. Where do we go from here on the index? And couple that up with your stock recommendations as well this morning.
Very good morning, Hormas and Mangalam. Thank you for having me. So we've seen that the indices have been facing some sort of a lackluster move. They have been moving in a range from the last 6 trading sessions, and 22,300 is acting as an important base level here. So that will continue to do so, but the upside, we are facing some resistance around 22,650 levels. There has to be some unwinding required at 22,600 for this level to cross and sustain over these levels. But then again, overall, we've seen that the texture of the market is positive. Support-based buying is intact. So overall, stock-specific action will continue, and we are recommending buy on decline for Nifty, with a support of 22,300 and the next resistance levels at 22,650 marks immediately, and then 22,800 levels. Now, talking about Bank Nifty, of course, there has been heavyweights which have been supporting this index today. And from the last 4 trading sessions, we've seen that the supports have been shifting higher. There has been some underperformance from a very long time in the banking index. But overall, we're seeing that it is now holding above its key exponential moving averages on the daily frame. So we are doing a buy on decline here as well, but the momentum is slightly less as compared to the broader market. We are looking at 48,000, which is a close support here for the upside levels of 49,250 marks. Now, talking about stock-specific ideas, first up on my radar is ICICI Bank. Of course, heavyweight here, and excellent short covering move that we've seen here in the last week. We've seen that after the short covering move, there has been good follow-up buying as well, negation on the weekly basis, and we've seen that the 2-3 weeks losses have been recouped. Heavyweight, and of course, there has been a lot of open interest activity here as well. So recommending a buy here with a target of 1320 levels and a support of 1225 zones. Now, the second pick on my radar is from a pharma space, which is Sun Pharma. We've seen that, pharma space tend to outperform in these kind of a choppy kind of a market. But overall, Sun Pharma has been one of the most resilient stocks, even despite the other names. From the last 6 to 7 trading sessions, we've seen that it has been moving with volume. So price confirmation here as well. Now, on the weekly basis, we've seen that the negation has happened, and a good follow-up is also seen over here. Good amount of open interest activity adding up here as well. So recommending a buy here with a target of 1,800 levels and a support of 1,665 levels.
All right, we take that point. Shivangi, thank you so much for joining in and giving us your view on a bunch of stocks. Speaking about stocks, just keep an eye on Jubilant Foodworks. The stock opened lower and from there it's recovered about 5.5% from lows, currently at the high point of trade. The other one that's doing well is Zomato as well. The next Nifty entrant. So Zomato is the one which, after some correction, has picked pace once again above 200 rupees for that stock as well at the high point. But let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Today we have Kanchi Shah joining in.
So the company that I've chosen for today is Maruti Suzuki India Limited, which is the market leader in the domestic passenger vehicle segment. It is known for offering a car for each customer segment and providing the highest mileage. However, the company's market share has declined to 41% from 50% in 2020 due to intensifying competition from the local and foreign manufacturers. Maruti aims to reclaim its market share of 50% by 2030 by introducing new series of models. It has also entered the electric vehicle segment with the launch of e-Vitara, and it plans to launch 3 additional new EV models by 2030. Currently, the company has a production capacity of 2.35 million units and it plans to expand to 4 million units by 2030. In the third quarter, Maruti held a 49% share in the export market for passenger vehicles. Going forward, the company plans to increase exports particularly to Africa, Latin America and the Middle East. Maruti will be also the exclusive manufacturer for e-Vitara, with plans to export the models to over 100 countries. The overall demand outlook for passenger vehicle remains positive, with the stock currently valued at 25 times FY26 projection, which we feel is an attractive valuation given Maruti's market leadership. Thus, it is a promising investment opportunity.
All right, with that, we'll step into a short break. Come back on the other side. We speak about a bunch of stocks which are moving around, tell you the reasons why, and also focus on the markets. Stay with us.
Welcome back, and shifting focus now to the commodities market. Manisha Gupta is joining us to tell us on the one commodity that she's tracking today. Manisha, good morning.
Morning, and thank you for that. Well, I'm looking at the gold and silver prices because we've hit all-time highs in the Indian markets here. And when you look at the international markets, well, the gold is trading at an all-time high there as well. This is what we've done in sense of charts. In the last 1 week, we've seen gold prices gain up by 4%, 40% up in last 12 months. When you look at the previous year, the gold price has gained up by 28%. And in 2025, the first quarter is still running and we're already up by 14%. Not just gold, you have seen similar gains come in for silver as well, where the prices actually have outperformed in the last 1 week with 6% of gains, 35% up in last 12 months. We've seen silver prices gain up by 22% in last year, and it's up 17% in this quarter already. So strong run-up continuing there. Well, there are major factors that you have seen support continuing from. To begin with, it is about the US dollar index, which is trading at a 5-month lows, and that clearly has been supportive for the precious metal prices. Apart from that, the US data that has come in, whether it is the CPI or the PPI, the inflation numbers were on the weaker side, and that has been supportive as well. And then it is about tariffs as well, where EU is talking about 50% tax on wines, while US says that it will retaliate with nearly 200% going back. And with the kind of inflation data that we have seen come in from the US, the expectation of a Fed rate cut has just about increased. Risk aversion is yet another thing which has been supportive for the safe haven buying in gold and silver, both of those commodities there. Well, the markets also are looking at the kind of buying that we have seen in China. China's central bank has been buying for a 5th straight month. And on the Sunday, we've also seen China come out with a very strong stimulus measure, ensuring that there is increase in consumption from rural, urban India, whether it is about childcare subsidy, whether it's about buying, property buying, etc. There is a lot of money being allotted. And there also is a statement from China suggesting that they will stabilize the stock market. Of course, we are still awaiting details onto that one. But with these Chinese statements as well, there has been supportive. Markets also are looking at the fact that you're looking at weaker economic data from various countries that has been supportive, and then very strong ETF buying. When you look at European Union or US, in this quarter until now, there has been a 46 and a 68 tons of buying in sense of gold via ETFs. That tells you that there is new crop of investors now coming in for gold, and portfolios have been increasing, and that in turn has been supportive as well. A final chart should tell you on what is the expectation going forward from here when it comes to gold. Goldman Sachs, after 3,000 is done, is talking about 3,100. UBS expects the prices to decline and close this year until at around 2,900. 3,000 is what Bank of America is talking about. And Citi expects the prices to gain much higher, up to $3,200 an ounce in this year itself. So, well, bullish cues continue when it comes to gold.
Bullish cues continues when it comes to gold. Manisha has been speaking about Goldman Sachs, UBS, BofA, Citi. She herself has been talking about how gold has been shining, but lately she's been focusing on silver as well. 1 lakh rupees a kilo is what she's been speaking about out there. So we'll just keep an eye out on this. And we don't know how much of the commodities action is, showing in something like an MCX, which has actually seen an up move today. The volumes on that will be something that we'll most definitely keep an eye out on. 5,000 rupees is what MCX had crossed. So that's gold and silver. We're talking about MCX, the listed stock. Pull that one up, and that's the one which is buzzing with decent amount of volumes, up around 5% as we speak, crossing that 5,000 rupee mark on the exchanges as well. There you have it. That is MCX, closer to 5,000 now as we speak. Maruti is the other stock which is in green today. The company is taking hikes once again. Sudarshan joins in to decode all these hikes. Sudarshan, cars are getting very expensive. Maruti in particular, thrice this year so far.
That's so true. So normally price hike news is taken positively, but if you look at today's chart of Maruti stock, the stock is down almost 2% from day's high, and there are reasons to it. While company is saying that certain costs have increased, and due to those, company has taken price hike, and in the last 3 months it's the 3rd price hike. In January the price was increased by up to 4%, even Feb the price was increased by up to 4%, and now effective April 1 again price is going to be increased by up to 4%. Now what are the reasons that company is taking price hike? Okay, company has mentioned about the cost increase, but if you look at the sales also in February, also sales were largely below estimates, and it's mainly because of entry level sales. Both Alto and Espresso sales were down more than 31%, while it was sales were supported by higher segment, basically utility vehicle, where we saw sales have increased by 6%. Now, again, for the month of March, on April 1, sales data, wholesale data will come. But if you look at the data for the March, from March 1 to March 16, retail data that you can see on Vahan website, as of now, the registration for PV industry is down almost 22%, and the entire auto registration is down 15%. So even on the retail front, the numbers are not looking that good, and that might be one of the reasons that these companies are forced to take the price increase.
Indeed, price hikes, cars getting expensive, roads getting difficult to drive on. It's not a good...
And increasingly fines getting 10 times more as well. We'll talk about that in just a bit, but that's a raw nerve that you've
It's not the best time if you're an auto enthusiast, and it's not a good time if you're an Ola Electric shareholder either, because the stock is down 7% now in today's trading session. At the lowest point of the day, below 50 rupees a share now is the stock, and that is after a vehicle registration company, Rosemata Digital Services, is taking the company to the NCLT. Parikshit is joining in with more on this. Parikshit, good morning. What are you picking up?
Well, all of this began on the 19th of February with Ola Electric sending a notification to the stock exchange that it was renegotiating its contract terms with its vehicle registration agencies, including Rosemata Digital Services. Now, why did this happen? One, Ola Electric has a direct selling model as opposed to a dealer model, and dealers usually register vehicles on behalf of customers. Ola hired an agency to do the registrations for the company and also provide high security number plates to customers. Now, Rosemata claims that it's not just about renegotiation of contracts. Ola has actually defaulted on payments for the vehicle registrations carried out, for the high security number plates provided, and also for defaulting on the terms of contract that the two companies had signed. As a result, Rosemata has taken Ola Electric to NCLT in Bengaluru under Section 9 of the IBC to claim the amount in default, which is around 22 crore rupees. We'd like to tell our viewers that there are two insolvency pleas that have been filed. One is for high security number plates, which is around 2 crores, and also one for vehicle registration. The sum for that is around 20 crore rupees. So that's a total of 22 crores, which is being claimed by Rosemata. We're yet to see the complete copy of the petition. Now, as far as the actual numbers go, the Vahan registration numbers for Ola goes, Ola had said on the 19th of February that because of this renegotiation of contract, its numbers would be impacted in the Vahan portal. The registrations would be impacted, but it will normalize in the next few weeks. In February, they sold around 8,600 scooters. In the month of March, to date, they have sold around 7,500 scooters. So they're yet to reach that 25,000 mark, which they had claimed. Ola is also under pressure because they have said that they will be EBITDA positive when they reach a milestone of 50,000 vehicles per month. They've yet to reach that mark. And all these legal cases, including the 10,000 complaints against them with the CCPA, all of them is mounting pressure on the stock as well.
Take that point, Parikshit. Thank you so much for joining in. We here have quizzed Bhavish Agarwal on these points earlier as well. He remains steadfast on his commitment. Let's see whether, the numbers do follow or not. But with that, we'll take a short break. And as we do that, let's tell you some good news that we have to give you. India's business news leader, now just a click away. That's the CNBC-TV18 all-new app, where you get instant access to breaking news, in-depth articles, and all the financial world updates at your fingertips itself. So download the app from either the Apple Store or Google Play Store, or you can just scan that QR code, which is there for you on the screen.
Do you worry today, Sabya, that we are at a point which is almost an existential crisis for a whole host of arts and artisans across this country? I mean, you were talking about the fact that this shouldn't be treated like a charity. It shouldn't be treated like a CSR project. What kind of interventions do you believe we need at this point in time to ensure that we keep this soft power alive?
You know, we don't need to do much because evolution will take care of itself. Because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to come in. And I personally think that AI in many sectors, especially in performing arts and art, will be very short-lived. Because after the age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people realize that the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings, then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do much. Evolution will take care of itself.
We certainly hope so.
Welcome back. You're watching us here on Chartbusters. A bunch of stocks busting charts right now. We have Zaggle Prepaid, which has moved to the high point of trade. Remember, this has been one of those big decliners from the top, has nearly halved and now seeing some bit of bottom fishing if one must. Godfrey Phillips is the other one, which has continued to do well and now is picking more gains, up 4%. In fact, in the month of March itself, the stock is up 14%. And in the last 12 months, the stock has nearly doubled. Remember, over the last 9 or 10 quarters, the company has outperformed the industry when it came to cigarette volume growth. So as a result of which continues to gain market share and market cap as well. So that's Godfrey Phillips. But it's the microfinance sector which continues to struggle, and these woes are not likely to see any difference or any improvement soon. That's the word coming in our latest research in FinStreet. Abhishek joins us now to highlight the pain in this space and what's ailing the microfinance lenders.
Well, CNBC-TV18 was the first one to highlight the pain in the microfinance sector owing to over-leveraging of customers. And the situation is unlikely to change in a hurry. In fact, this may well be the longest cycle of pain for the microfinance industry. So what's happened in the past year or 4 quarters? So several lenders have seen a decline in their AUM. AUM for Fusion Microfinance as well as Spandana Spurti has actually decreased both YOY and quarter-on-quarter. For 9-month FY25, CREDAC, that is Credit Access Grameen, ESAF SFB, Fusion Finance as well as Spandana Spurti have seen a decline in their AUM. Net interest margin of lenders with high microfinance exposures have dropped significantly or sharply year on year. Now, highest decline in net interest margin is seen for ESAF SFB, Fusion Finance as well as Spandana Spurti, while on a sequential basis, that is quarter on quarter, the highest decline is seen for Fusion Finance, Spandana Spurti and Suryodaya Small Finance Bank. Provisions have spiked up a lot for these lenders in the microfinance sector. Now, provisions as percentage of net interest income has increased for almost all the lenders. Provisions have risen on account of higher slippages. Quarterly annualized slippage ratio has jumped for all the lenders focused in the microfinance sector. Some of them have given double-digit quarterly annualized slippage ratio in Q3 FY25. Now, with recovery rate being on very low for the microfinance sector, elevated slippages would mean that there would be higher write-offs for these lenders. Hence, return ratios get impacted. So, return ratios have deteriorated for all the lenders over the past few quarters. Return on asset has fallen a sharply or steep decline seen for all the lenders focused in the microfinance sector. Lenders like Spandana Spurti, Fusion Finance have reported abysmal return on asset as well as return on equity. So from the date of our warning on the stress rising in the microfinance sector, the sector has seen massive underperformance to the benchmark index, that is Nifty. With respect to outlook, let's see what is this sector going ahead. Is that the net worth of some of the lenders have depleted significantly. This can restrain the AUM growth in the near term. Now, interest income of many lenders have declined sharply and this may continue in the near term. Hence, you can expect the net interest margin to remain under pressure in the near term for these lenders. Tighter net interest margin and higher credit costs will impact the return ratios. loan recovery practice in Karnataka has seen restrictions by the state government. This can lead to further delay in repayment of overdues for the lenders, and that's why it can also impact certain key lenders in Q4 FY25. We also need to see whether the Karnataka issue has a spillover impact for other states or not. Now, Kotak Mahindra Bank recently said that pain in the microfinance sector may continue in Q1 FY26. Suppose the asset quality woes, the pickup in business momentum will come into focus. So an early end to the microfinance industry trouble looks unlikely.
Well, Abhishek, thanks a lot for that update. We'll continue to update you on the stress in the microfinance space. But for now, the indices still holding on to some bit of gains off the highs of the day. The Nifty nearing that mark of 22,500. But with that, we call time on this edition of Chartbusters. From Mangalam, me and the team that put this show together, thank you so much for watching. Trading hour on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. Let's track some more stocks. BSE is in focus, and BSE has had a very sharp correction, but UBS today is quite bullish on Bombay Stock Exchange. Hormus is here with details.
You know, after the stock is almost halved, right, from its peak, as BSE 6100 was the peak, almost around 4,000 rupees, and now UBS has gone ahead, initiating coverage, a buy rating, a price target of 53.50, and that implies a potential upside of around 37% from last week's closing price. Now, what they say is that the scaling up of the options turnover is going to be a key driver for BSE going forward, and that the fact that it has diverse revenue streams and it could see better operating margins going forward as well. Now, on the valuation front, UBS is saying that BSE is trading at around 33 times 1 year forward price to earnings, which is around an 11% premium to its historical average. But this valuation multiple is of less relevance considering the fact that BSE has revamped its business model, which makes this valuation multiple premium less relevant going forward. So as of now, positive commentary coming in, not a significant reaction in the stock, but a beaten down name for sure, expecting upside of close to 40% here is UBS.
Thank you so much for that, Hormal, for joining us and telling us what exactly UBS sees as far as the prospects of BSE are concerned. Well, moving on, Soni Patnaik from JM Financial Services joins us for a quick technical check on the market. Thank you so much for joining us, Soni. First up, what are you making of the markets at the current level? Nifty nearing the 22,500 mark now.
Hi, good morning, Vivek and Reema. Thank you so much for having me on your show. See, I think Nifty is very much in a sideways trend. You know, the range bound that we can see continuing for the past 3 to 4 days, somewhere between 22,300 to 22,650 on the upside. The next leg of upside for Nifty can only be seen once the upper end of this range is taken out, that is 22,650 odd levels. A significant number of call writers can be seen present between 22,600 to 22,800, marking the dominance over this resistance level. So as long as this range is not taken out, upside would be difficult. And support also is quite getting stronger towards 22,300 to 22,400. Similarly, if we look at Bank Nifty also continues to be in a range between 48,000 to 49,000 on closing basis. And it's quite clear that Bank Nifty can only see the next level of upside once it has crossed the 49,200 level. So above that, it may head towards 50,000. But until then, the sideways trend continues for both the indices with stock and sector-specific action that can be seen for the markets.
And what about individual stocks, Soni?
So Rima, both would be on the buy side today. The first is a buy on Polycab, which has seen a very strong reversal from supports of 5,000 odd levels, seeing a good reversal on daily charts as well. So one can buy in Polycab at current levels, keeping a stop loss of 49.80 and a target towards 5,200, 5,300 can be seen from current levels. The second buy is in Hindustan Aeronautics, HAL, which is also looking quite strong to cross above its 20 DMA hurdle. So one can buy Hindustan Aeronautics at current levels, keeping a stop loss of 33.60 and a positional target towards 3,600 to 3,700 positionally can be seen.
Thank you so much for joining us, Soni, and taking us through both your views on the markets, the index levels, as well as your individual stock picks. Well, let's now take a short break. Up next, we'll discuss market fundamentals with Sunny Agarwal from Elsewhere Securities.
Do you worry today, Sabya, that we are at a point which is almost an existential crisis for a whole host of arts and artisans across this country? I mean, you were talking about the fact that this shouldn't be treated like a charity. It shouldn't be treated like a CSR project. What kind of interventions?
Welcome back to Trading Hour. Well, one stock that's doing quite well and the top Nifty gainer is Maruti. Some news flow coming in terms of price hikes that the company is planning to undertake. Sudarshan joins in with more details.
So normally any price hike by companies is taken positively, but if you look at the Maruti stock intraday, the stock has fallen to almost 2% from days high, and there are reasons to it. First, now talking about the price increase in the last 3 months or say in 2025, it's the third price increase that company has taken. In January, the price was increased by up to 4%. Again, in Feb, it was increased by up to 4%. Now, effective April 1, company has taken another price increase, and that again would be by up to 4%. Now, why the price hike has been taken? Company is saying certain costs have increased in the last few months, and that's one of the reasons that company has been taking price hike. But apart from cost, if you look at the sales data also, on the wholesale front in February, sales were below estimates, especially because of the sales had taken a sharp knock for the entry-level vehicles. Both Alto and Espresso sales in February were down by more than 30% each. The support came from utility vehicle, for which sales had increased by 6%. Now coming to the retail data, as per Vahan website, for the month of March, that is for the first 2 weeks, for the industry, retail data is for the passenger vehicles is down more than 22%. And for the entire, if you look at the entire auto sales, it's down 15%. And for two-wheelers also, it's down around 14 to 15%. So not only wholesales on the retail front, sales are not looking that great for second consecutive month.
Got that. And what about Tata Motors? HSBC has upgraded the stock, Sudarshan. What's the reason?
So in 2025, it's one of the stocks in the auto pack which has been the biggest underperformer. But now in the last few sessions, today HSBC has come with a positive note. If you look at the last week when CLSA had come out with a note saying that it has the high conviction outperform call on the stock. Now today HSBC has upgraded to buy from hold, but has cut the target to 840 from 930. But still the target price of 840 implies an upside of almost 30% from current levels. And what are the triggers that HSBC is saying for margin expansion? First, that reduction in discounts and warranty costs in JLR. Also, it's expecting a recovery for small commercial vehicles. Some of the positive triggers can be: first, JLR has maintained Q4 EBIT margin guidance of more than 10%, and as per HSBC, it can be a positive or re-rating for if JLR manages to maintain the guidance in Q4. Also, new launches in domestic PV market should help company to hold on or arrest the market share loss. Now, as far as the valuation is concerned, after the recent underperformance, now valuation looks comfortable or say reasonable. Also for JLR, it's currently trading at 1.8 times FY26 estimated EV to EBITDA, which is at the lower end of historical average. So overall, it's looking positive for Tata Motors after the recent underperformance. That's the reason you are seeing so many positive notes coming out in the last few weeks.
Thank you so much for joining us, Sudarshan, and giving us a sense of the auto sector. Well, moving on, Sunny Agarwal from SBI Security joins us now to discuss market fundamentals and its top sectoral picks. Thanks so much for joining us, Sunny. Sunny, while we are talking about the auto space, first up, your view on that particular space, and secondly, you do like a couple of auto ancillary names. Do you feel that the demand outlook is slightly uncertain now?
Yeah, good afternoon, Vivek, and thanks for having me on the show. Yeah, I think within auto space, we are more constructive on certain segments like tractor and SUV. So within tractor, again, this segment we would like to ride through auto ancillary as there is a lot of uncertainty on what will happen on OEM side and which segment is going to do well. A case in point, a stock which we like is Swaraj Engine, which is subsidiary of Mahindra & Mahindra, basically a 3,800 crore market cap company. Recently, they have expanded their diesel engine capacity from 135,000 diesel engines to 195,000 diesel engine. And that capacity came on stream during the first half of this year. And the timing is very right, wherein we are seeing a revival in volumes as far as tractor industry is concerned. So we believe that the company has got a potential to deliver close to 170-180 crore profitability in FY26. Dividend payout ratio is more than 80%, ROE of 35 to 40%. I think trading at a reasonable valuation of 20 times 1 year forward price to earning multiple. So I think again one more play where we find the valuations to be attractive is the Lumax Autotech. Again, a small company wherein the market cap is close to 4,500 crore. And our price target here is close to 850 rupees. The investment thesis remains the same, that they are more of an technology agnostic company wherein they make products like head and tail lamp, plastic tank, door panel. And they have recently went on to acquire 2 new companies, which is IAC India and Green Fuel, which will again give them a head start in terms of growth for FY26 and FY27. So our estimate is that for FY26, the company should post profit of close to 295 to 300 crore. And if we value at 20 times 1 year forward price to earning multiple, our price target is 857. Again, Garware High-Tech Film, a kind of proxy play on auto. So basically, they are into this paint protection film as well as sun control film, where majority of the business is from export market. So they have recently, they are on the verge of expanding their paint protection film business capacity going to double. And our estimate suggests that for FY27, the company is likely to post a profit of 400 crore against the annual run rate of currently 250 crore. So again, a bottom-up growth story, trading at a reasonable valuation.
Lots of auto ancillaries in your pick, Sunny. Hi. I remember in one of the old conversations, you used to like FM Industries. That also makes automotive lighting, lighting components for rear view mirrors, etc. Is that still in your preferred stock list?
Rima, as of now, we would like to remain neutral on FEM. The reason being that we are seeing a slowdown in two-wheeler sales volume in the domestic market. And again, FEM is predominantly linked to two-wheeler sales volume. And that's the reason, as of now, we continue to remain neutral on FEM industry.
In the past, you also liked stocks like a Zomato, Polycab, Nuvama Wealth. Now they generated a lot of wealth over the last, 2 years, riding the upcycle. But things have slowed down from, September, October. Stocks have corrected 30, 40%. What is the call now on these stocks? Because I remember again from our earlier conversations that you used to like them, but the tide has turned.
Definitely, I think tide has turned for both Zomato as well as Polycab, where we have seen, because of increase in competitive intensity, margins may come under pressure over the period of next 2-3 years. And that's the reason we have seen the correction in stock prices. Also coming to the capital market story again, because of the correction in the stock prices across the board, again, the sentiment has turned unfavorable for capital market stories. But if somebody has got a long-term investment horizon, I think we still continue to remain bullish on capital market as a investment theme, wherein a particular theme like asset management companies like Nippon, HDFC, AMC continue to look good, where we believe that AUM still has the potential to grow at 12 to 15% CAGR over next 5 to 10 years. And coming to the wealth manager like Nuvama, yes, we can continue to remain constructive, although in short term, the earnings may get impacted because of the correction in AUM and so on and so forth. But if somebody has got a horizon of 3 to 5 years, I think capital market play continue to remain a good investment theme for next 3 to 5 years.
Got that. Sunny, one particular space, especially last week, that saw quite a bit of selling pressure was actually the cement space. Quite a few of the stocks derated on account of the tax as far as mining is concerned of limestone. You do like JK Lakshmi Cement. In the view of this particular news development, how do you look at that sector, and any other stocks you like other than JK Lakshmi Cement, and what's the rationale for liking JK Lakshmi?
Yeah, so again, basically, if you see the numbers of all the cement companies, you will see that profitability is at kind of 2-year low. For example, for JK Lakshmi Cement, during the December quarter, the EBITDA per ton was close to 450 rupees, and that used to be in the band of 800 to 1,000 2 years back. And September quarter and December quarter has been really a lackluster quarter for the entire cement industry. And with usually, if you see the March quarter is a seasonally strong quarter, so we are expecting a revival in terms of EBITDA per ton. And if I take a 2-year horizon, our estimates are penciling that EBITDA per ton should go up by 200 rupees on a per ton basis for FY26 and FY26, 26 and 27. And if I look at valuation, right now JK Lakshmi has got a capacity of close to 16 million ton. Will add 4 million ton in next 2 years and has aspiration to hit 30 million ton by 30. So on valuation front, trading at $100 to EV per ton. And even on EV to EBITDA, if I take 2 year forward number, trading at less than 10 times EV EBITDA. So I think the company has got a potential to go back to its earlier annual pattern rate of 550 crore which is the currently subdued number. So if somebody has got a long-term horizon, definitely JK Lakshmi is one of the our top pick as far as mid-size cement player is concerned. And another player which we like is Star Cement from this basically a Northeast-based player. Recently, we have seen Ultratech taking 10% stake over there. Again, a relatively better play area where we have seen cement pricing holding on compared to the rest of the India. So Star Cement here, we have got a price target of 250 and with investment horizon of 12 to 18 months.
Thank you very much for that. We didn't get to ask you, your construct on the market, but I'll just put it out there on the viewers. He believes the bulls are retired herd, but they're not out. India's long-term growth story is very much intact. For FY25 to 27, we could still see a double-digit earnings growth. Nifty is trading at 18.5 times below the 10-year average of 20.3. Mid-caps are trading at 24.9, again below the 10-year average of 28.6, and market cap to GDP is now at the 10-year average. So valuations are now relatively in a comfortable zone. We will slip into a break, but as we do that, here is some good news for all our viewers, because India's business news leader is now just a click away. We're introducing the all-new app. Get instant access to breaking news, all our articles, financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you could just scan the QR code on your screen.
This point in time to ensure that we keep this soft power alive?
We don't need to do much because evolution will take care of itself. Because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to come in. And I personally think that AI in many sectors, especially in performing arts and art, will be very short-lived. Because after the age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people realize that the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings, then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do much. Evolution will take care of itself.
We certainly hope so.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big...
Welcome back. The Nifty is comfortably above 22,500. SBI Life is your top gainer. Bajaj Finserv on the front foot, 3.5%. And the other two stocks with a gain of more than 3% included Dr. Reddy's and Innocent Bank. Trend, after a rough start to 2025, is rebounding today, 2.7% higher. Generally, private sector banks are up and about. So Axis Bank, ICICI Bank contributing to the bull case today. But let's talk about the microfinance sector because that continues to struggle and the woes are not likely to end anytime soon or see a difference. Abhishek is here to highlight the pain in the microfinance sector and what's ailing the MFIs.
Well, CNBC-TV18 was the first one to highlight the pain in the microfinance sector owing to over-leveraging of customers. And the situation is unlikely to change in a hurry. In fact, this may well be the longest cycle of pain for the microfinance industry. So what's happened in the past year or 4 quarters? So several lenders have seen a decline in their AUM. AUM for Fusion Microfinance as well as Spandana Spurti has actually decreased both YOY and quarter-on-quarter. For 9-month FY25, CREDAC, that is Credit Access Grameen, ESAF SFB, Fusion Finance as well as Spandana Spurti have seen a decline in their AUM. Net interest margin of lenders with high microfinance exposures have dropped significantly or sharply year on year. Now, highest decline in net interest margin is seen for ESAF SFB, Fusion Finance as well as Spandana Spurti, while on a sequential basis, that is quarter on quarter, the highest decline is seen for Fusion Finance, Spandana Spurti and Suryodaya Small Finance Bank. Provisions have spiked up a lot for these lenders in the microfinance sector. Now, provisions as percentage of net interest income has increased for almost all the lenders. Provisions have risen on account of higher slippages. Quarterly annualized slippage ratio has jumped for all the lenders focused in the microfinance sector. Some of them have given double-digit quarterly annualized slippage ratio in Q3 FY25. Now, with recovery rate being on very low for the microfinance sector, elevated slippages would mean that there would be higher write-offs for these lenders. Hence, return ratios get impacted. So, return ratios have deteriorated for all the lenders over the past few quarters. Return on asset has fallen a sharply or steep decline seen for all the lenders focused in the microfinance sector. Lenders like Spandana Spurti, Fusion Finance have reported abysmal return on asset as well as return on equity. So from the date of our warning on the stress rising in the microfinance sector, the sector has seen massive underperformance to the benchmark index, that is Nifty. With respect to outlook, let's see what is this sector going ahead. Is that the net worth of some of the lenders have depleted significantly. This can restrain the AUM growth in the near term. Now, interest income of many lenders have declined sharply and this may continue in the near term. Hence, you can expect the net interest margin to remain under pressure in the near term for these lenders. Tighter net interest margin and higher credit costs will impact the return ratios. Loan recovery practice in Karnataka has seen restrictions by the state government. This can lead to further delay in repayment of overdues for the lenders, and that's why it can also impact certain key lenders in Q4 FY25. We also need to see whether the Karnataka issue has a spillover impact for other states or not. Now, Kotak Mahindra Bank recently said that pain in the microfinance sector may continue in Q1 FY26. Suppose the asset quality woes, the pickup in business momentum will come into focus. So an early end to the microfinance industry trouble looks unlikely.
Well, a very interesting piece out there from Abhishek. But moving on, it's now time for a short break. We'll get him on the markets on the other side.
Code the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
On a bottom-up basis, now I find a lot of companies that look very interesting on valuation. So I think bulk of the damage is done. From a medium-term perspective, I think one should be constructive and do some bottom-up idea picking here. In the small and mid-cap space, there are plenty of domestic consumption-oriented stocks which are trading at extremely attractive valuations with very solid balance sheets and free cash flow profiles. One has to just look deeper. Unfortunately, I'm not in a position to share names. The one space that I think we should all pay a lot of attention to are the financials. I mean, financials are really very, very attractively valued.
Welcome back. The market's doing well right now, specifically the Nifty Bank. Axis Bank has moved to the high point of trade, as has ICICI Bank. But what's also supporting the cause of the frontline index is Infosys. Infosys has moved to the high point of trade, so just keep an eye out on that. IT was a bit of a drag. Infosys has a higher weight out there, and that stock not falling. In fact, moving to the higher end of today's trading range has kept the IT index afloat as well, and that explains the up move that we're seeing on the Nifty. However, one stock which really stands out is Trent, which is up around 3%. It's been a very volatile stock lately after a near 40% decline, but today's up move is also coinciding with a notification that the company gave to the exchanges that over the next few days they will be meeting a bunch of analysts. So yes, last 3 months down 26%, from its high it's down 40%. On March 20th, they will be meeting analysts / investors from the likes of Jefferies, and then you'll have some others as well. JP Morgan and Jefferies, the meeting was on March 20th. Thereafter, the next day, March 21st, you have Tata AIG, you have Franklin Templeton, you have Federated Hermes, all of them meeting the company as well. So maybe some sort of guidance, some sort of growth prospects, some more detail on the way business is growing is something we'll get out of those meetings, and these analysts may perhaps put pen to paper as well. So we'll keep an eye out on that. Stock, remember, like I said, down 38% from its highs. But another stock which is down fairly from its highs is BSE, and today there's a UBS note, Hormaz.
Indeed, and the stock is almost halved from its peak, right? 6100 was the peak, 6133 to be more precise. So almost down 50% from those levels. And after this fall, BSE has gone ahead and initiated coverage on the stock with a buy recommendation, a price target of 53.50, and that is implying a potential upside of around 37%. Now, what UBS is saying is that scaling up of the options turnover is going to be the key driver for BSE going forward, and the fact that it has diverse revenue streams, it is expecting operating margins to improve. So positive factors bode well for BSE going forward. And it also says that this current valuation that BSE is trading at, which is around 33 times FY 1 year forward PE, which is around 11% premium to its historical average, that is of less relevance now, considering the fact that BSE has revamped its business model. So after this historical premium to its historical valuation does not have much relevance, and as a result of which it has gone ahead and given this buy recommendation, 53.50 target, almost a 40% upside, but that also comes after the stock has almost halved from the top.
Take that point entirely. That's BSE for you, and there's a note that has come in. The other one that I'm looking at is Patanjali Foods. It's marginally in the green today. This is the Insight Edge segment this morning. There's a note that came in from Jefferies where they've initiated coverage on the stock. They have a target price of 2,050 rupees. The reason why they like is because the company has diversified away from its commoditized oil business itself, and this diversified consumer franchise is something that as per Jefferies can deliver double-digit revenue growth and margin expansion going forward as well. Remember, ever since Patanjali Foods, Patanjali acquired Ruchi Soya and is now moving into margin accretive portfolios, nearly 70% of the company's valuation is now derived by its newer diversifications. So those are things we'll keep an eye out on. They first bought the foods business of Patanjali Ayurved and the biscuits, etc. And now they recently bought the home care and personal care business as well. So all these factors working in favor of the company. What's not is the volatility that we're seeing in edible oil prices itself. Moments ago, we had Lata come and talk about that as well. So earlier today, we spoke with Sanjeev Asthana, who's the CEO at Patanjali Foods, who expects margin expansion to continue for their palm oil plantation business and 8 to 10% margin for their foods and FMCG business, along with 4% EBIT margins for their edible oil business as well. And for all those who are wondering over the weekend, is Patanjali getting into insurance? Yes, it is, but not Patanjali Foods. It is Patanjali Ayurved, which has no financial bearing with Patanjali Foods itself, and that's something that the management clarified as well. So let's hear out what they had to say in our special Insight Edge segment.
We are clearly witnessing some bit of slowdown in the imports in terms of volume terms. That is more than made up by the oil inflation that we witnessed. But broadly, for the year, we are pretty confident of still meeting between 2 and 4% of growth target on the edible oil volume. Pretty confident about exceeding 4% plus of EBITDA margin on the edible oil side. On the FMCG regular businesses of foods and non-food, there is some slowdown we see in the urban area, so that continues. But broadly, we are pretty much within the ballpark range of 8 to 10% target that we are on the food side. The HPC business is still integrating. The first full quarter we'll see in this last fourth quarter now. And pretty much we are on course to achieve 15% growth on the HPC side next year. Every year, our EBITDA run rate, what used to be about 160, 170 crores, we are upwards of, somewhere around 220 crores odd we make as an EBITDA. So every year that is spiking up. But the big growth in the EBITDA and the contribution to the revenue shall happen maybe in 3 years' time, when all the plantation that momentum that we have of last 2 years, I think will start to fruit. So pretty much from 28, 29 onwards, you will see a big expansion. And that the estimation is broadly that, if the run rate of our targeted sort of plantation size, the margin expansion that we expect to happen. So we should pretty much be nearly 3 times of where we are today in 4 years' time.
That was Patanjali Foods in our Insight Edge segment. The Nifty has now slightly slipped below that mark of 22,500. Still holding on to gains of around about 100 points, but still off the highs of the sessions, 0.5% higher now on the index. 22,490 is where we stand. Take a short break. Saumil Mehta of Mirae Asset Sharekhan joins in on the other side to give you a quick chart check as well as some trading strategies. Stay tuned.
Do you worry today, Sabya, that we are at a point which is almost an existential crisis for a whole host of arts and artisans across this country? I mean, you were talking about the fact that this shouldn't be treated like a charity. It shouldn't be treated like a CSR project. What kind of interventions do you believe we need at this point in time to ensure that we keep this soft power alive?
You know, we don't need to do much because
Welcome back. Just keep an eye on two things in the market right now. We are seeing, one, the Nifty below that 22,500 mark, and secondly, the advanced decline lines. They should come up for you. They've crisscrossed, and now we have more stocks which are declining versus the number of stocks which are advancing. So we'll keep an eye out on this trend, because just as we speak, for most part of today's trading session, the green line was above the red line, and now they've just intersected, and we have 1,400 stocks declining for 1,200 stocks which are advancing. So we'll keep an eye out on this trend in the second half of this trade. But perfect to look at the way the market's set up from an F&O perspective. What we've seen is that the Nifty has been facing resistance upwards of 22,500, at least on the last 4 occasions. If you look at March 11th, March 12th, March 13th, 14th was a holiday, March 17th, that's today, the high has been 22,577. In fact, March 12th high and March 17th high have both been the same. And what today's high also tells you is the inability for the market to cross that 20-day moving average. The Nifty itself, 22,587 is the 20-day moving average. Nifty earlier as well was trying to make an excursion towards that when the moving average was a lot higher, faced some supply, and today went within 10 points of the 20-day moving average and saw some supply come in. What happens is, next is what happens to Nifty Bank. That's how we'll look at the frontline index, because the Nifty Bank is doing well. It's led higher by HDFC Bank, by ICICI Bank, by Axis, and also by Kotak Mahindra Bank. So all these big weights are powering the Nifty Bank ahead. The Nifty Bank is about 300 points away from the 20-day moving average on that one as well. So even the Nifty Bank is struggling to get past the 20-day moving average. So those are a couple of levels that we'll most definitely keep an eye out on. On the Nifty itself, it's the 22,500 mark which has seen the most amount of action. 22,500 put has a premium of 100 rupees, telling you 22,400 is an important support. 22,500 call as well comes up for you. That has a premium of 124 rupees, telling you 22,600 is an important resistance. So narrow range that you're looking at, 22,400 at the lower level, 22,600 at the higher level. A lot of short positions being added on LTI Mindtree, but a couple of long positions being added in the markets as well right now. The broader markets, you do have some, pharma names, Muthoot Finance, all of them seeing long positions being added in the F&O space.
Continuing to come off the highs now is the Nifty 22,450 is where we stand, almost a 40-point downtake in just a few minutes. Just before we go to Saumil Mehta, just highlighting a couple of mid-cap IT names that are getting absolutely hammered in today's session. First Source is one of them. He's down 8% now, is the top loser on the Nifty 500 index, and almost every stock on the mid-cap IT segment is facing some bit of selling pressure today. Happiest Minds is one of them, that's down 4%. Sonata Software is down 3.5%. LTI Mindtree is down 3.5%. as is Zensar. So mid-cap IT not having a very good day at the office in today's trading session. Most of them too at the lowest point of the day. But Saumil Mehta of Mirae Asset Share Khan is joining us now on the show. Saumil, good afternoon. Thank you for joining in. Yet again, a familiar resistance at 22,600 for the index. What are the charts indicating here? And do we see a prolonged consolidation phase? And couple that up with your stock-specific recommendations as well for the afternoon.
Good afternoon. The bias remains positive. However, it's been consolidating. Nifty has been consolidating in a range. The lower end is 22,300. The upper end is 22,600. Any close about 22,600, I think the uptrend confirmation comes in, and the next target would be 22,900, which is very close to 40 daily exponential moving average, which is my target as well. However, the stocks are looking very good. Bank Nifty is looking good. Reliance is looking good. Heavyweights are looking good. So bias remains positive overall for a target of 22,900. My stocks would be, the first one would be Hoodco. Buy on the, it's making an inverted head and shoulder pattern. Stop loss would be 180. Target would be 200. Trend, it has made a small ending diagonal pattern on the hourly charts, and it's breaking on the upside. So the target should be 5350 and the stop loss would be 5,000.
All right. And individual stocks, so what do you have on your list apart from Trend?
Trend, one more stock I would give would be VBL. The stop loss would be 485 and the target would be 540.
Yeah, Varun Beverages is also another one that is picking pace. Typically, it's this time, post-winter, as we move towards summer, that some of these beverage makers do well, and Varun Beverages entering into season is moved higher, up around 3%. But good time to step into a short break, and as we do that, let's get you some good news. All you viewers, you have the India Business News Leader, which is now just a click away. That's CNBC-TV18's all-new app, for which you get instant access to breaking news, in-depth articles, and all the financial world updates, all of them at your fingertips itself. You can download the CNBC-TV18 app now from either the Apple Store or the Google Play Store, or you can just scan this QR code on your screen.
Of itself, because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to come in, and I personally think that AI in many sectors, especially in performing arts and art, will be very short-lived, because after the age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people realize that the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings, then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do much. Evolution will take care of itself.
We certainly hope so.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com.
Welcome back, and we're shifting focus to the auto space now. Two contrasting fortunes now. Maruti is one of them, and that is doing well for itself. It's slightly off the highs of the day though, and that is after the company announced a price hike. In fact, it has now slipped into the red as we speak, and it is going to hike the prices of its cars starting April. And Sudarshan is here to tell us more on that. Sudarshan, yet another price hike from Maruti.
That's true, yet another price hike. So first hike that company had announced in the recent past was in December 2024, which was effective January 1, 2025. And again in January, company had announced another price increase, which was effective Feb 1. Now today's announcement would be effective April 1. And all the 3 price hike that company has announced in the recent past was up to 4% each. Now today, company has announced price hike, but despite that, you are seeing that share price has fallen more than 2% from day's high. And the reason that company has mentioned about the price hike is because it's saying that certain costs have increased. But apart from the cost increase, if you look at the sales data also, wholesale data for the month of February, it was below estimates, especially the entry-level segment. Both Alto and Espresso sales had fallen more than 30% each, and the support came from the utility vehicle segment, for which sales had increased just by 6%. For March, from March 1 to March 16, retail data also, if you see for PV industry, not just from Maruti, PV industry, this is the data, and for which registration is down 22%. So it's not only the wholesale data, even retail data has been disappointing for second consecutive month. So there are certain reasons for which these companies, not only Maruti, even other companies also in the recent past have announced price increase. Now, the second stock that has been in focus from the auto sector is Tata Motors. In the last 1 or 2 weeks, we have seen several positive notes. Last week, both CLSA and ICICI Securities had upgraded Tata Motors. Now today, HSBC has come out with a positive note. It has upgraded the stock to buy from hold, but has cut target price to 840 from 930. But still, the 840 target price implies an upside of almost 30% from current levels. So what does HSBC say? It says that just a second. It says that JLR has maintained Q4 EBIT margin guidance of more than 10%. If and JLR manages to hold on to that guidance, it might be positive trigger for the stock. Also, the valuation front, after the recent underperformance, valuation has become reasonable, not only for Tata Motors, even for JLR. So considering all these factors, these brokerages in the recent past have upgraded or turned positive on Tata Motors. And today also, amongst all the stocks, it's the one stock which is higher in trade.
Take that point, Sudarshan. Indeed, Tata Motors is the one which is up around 0.5%. But remember, it's also fallen about 44% from the top as well. Brokerage is now finding the valuations a little more compelling. Though the market has now come off considerably from the highs. We have the Nifty, which is holding on in the green just by about 45 points. So from today's high, it's down about 125 points. What is it that's leading the market lower? Just pull up the intraday chart of Reliance. That's the one that should come up for you. It was a heavyweight that the street was hoping for, seeing some respite in this morning. Mitesh also made a call on that stock after the big decline that we've seen in the stock earlier, and some bit of an up move. A lot of them believe that this is in oversold territory and maybe could be a case for an up move, but that hasn't been the case for Reliance. It's actually dragged the Nifty lower. In the IT pack, we have Wipro, which also has been a bit of an underperformer, and that stock too has moved to the low point of trade. And finally, before we slip into that short break, pull up the intraday chart of IndusInd Bank. IndusInd Bank at in early trade was up nearly 4.5%, closer to 5%, as it got that relief in terms of RBI coming in and assuaging people's concerns about their deposits, etc. This does not take away from the fact that the company's net worth still stands impacted by the derivatives loss, and the stock was down about 27-28 odd %. What the RBI had said is that you as depositors, your money is safe in IndusInd Bank, and this was to avoid a run on the bank kind of situation. But financially, they still stand to lose the money that they do when in the derivatives transactions that the company did inform the exchanges. So from the highs, IndusInd Bank too is lower. The assuaging of concerns from the RBI was mainly for customers, not necessarily for investors. With that, we take a short break, and as we do that, let's get you a small programming note. HSBC India and CNBC-TV18, we're back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact, and shaping the future. Nominations are now open. You can scan the QR code and submit your entry for the SME Champion Awards Season 2.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
On a bottom-up basis, now I find a lot of companies that look very interesting on valuation. So I think bulk of the damage is done. From a medium-term perspective, I think one should be constructive and do some bottom-up idea picking here. In the small and mid-cap space, there are plenty of domestic consumption-oriented stocks which are trading at extremely attractive valuations with very solid balance sheets and free cash flow profiles. One has to just look deeper. Unfortunately, I'm not in a position to share names. The one space that I think we should all pay a lot of attention to are the financials. I mean, financials are really very, very attractively valued.
Market in the green, but off highs at the start of the trading week. Healthcare, financials and metal stocks lead. IndusInd Bank rises 3% after RBI assures depositors of the bank's financial health. Asian markets rise as China announces a plan to boost consumption and reports strong industrial production, retail sales and fixed asset investments data. US futures, however, trade lower after US Treasury Secretary Scott Bessent dismisses worries about the market fall, saying the corrections are healthy. SpyChat up 2% as promoter Ajay Singh converts warrant to shares, boosting his shareholding in the company from 29.1% to 33.4%. KC International gains on order wins. Ola falls over 6% as its vehicle registration agency initiates insolvency proceedings against Ola over unpaid dues. End of 3 and 1 month shared lock-in period sends stocks of IKS, MobiKwik and SciLife down to 2 to 10%. International Gemological Institute falls as a 3-month lock-in period for IPO investors is set to end tomorrow. Maruti announces a 4% price hike across models starting April, citing rising costs. The company's third price hike this year and comes even as passenger vehicles registration for the first 2 weeks of March fall 22%. Hello, good afternoon. You've tuned into Business Lunch, coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala, and thank you so much, as always, for tuning into CNBC-TV18. A quick look at what the market is doing today, right? We've opened up in the green, managing to hold on to green, but off the day's highest point as of now, 22,450 levels is what we're seeing in terms of the Nifty coming in, up 0.2% as of now. Let's see if this is going to be sustaining in the green for the second half of the trading session. That's going to be important to watch out for. As of now, the mid and small cap, the broader end of the market, that's seeing an outperformance coming in. Nifty mid cap is up almost 0.4%, while small cap is up almost 0.5% in today's trading session. So some bit of an outperformance from the broader markets. Nifty Bank, that's the interesting one as well. Nifty Bank is up almost 0.6% in trade today as of now. Also, I want to check out on some of these contributors today of what is supporting the Nifty 50. So we have the banking side, and that is why the banks are also, Nifty Bank overall is holding on, because we have ICICI Bank, Axis Bank, we have Bajaj Finance from the financial side, which is managing to hold on to and support the market in today's trading session. On the downside, and what is dragging the market is Reliance, ITC, TCS as well as L&T is what we're seeing in terms of a drag coming in. Index-wise, when you're looking at it in terms of a mover, let's see Nifty Pharma. That's managing to hold on to some bit of a gain in today's trading session. So that will be interesting to watch out for. But let's get started with some of these individual stocks that are buzzing in trade today and in focus. And this is IndusInd Bank that we're talking about today. It's coming in among the top Nifty 50 gainers after the RBI has eased concerns on the bank, about the bank, with a statement stating that the bank is well capitalized and financially stable. Sudarshan is joining in with us to give us more details on this one. Sudarshan, good afternoon, and finally at least some bit of a green coming in for IndusInd Bank after last week.
Good afternoon, Vinay. That's true, because last week IndusInd Bank was under pressure because after company had announced that due to certain accounting mismatch, its net worth would be impacted by around 2.35% or say 2.4%. And because of there were several reports, and now on March 15th, RBI has come out with a statement, and that's the emphatic statement saying that bank's financials remain healthy, and second, it continues to be well capitalized. It has mentioned few ratios. First is capital adequacy ratio. It says that bank's capital adequacy ratio was at 16.46% and provisioning coverage ratio was at 70.2% as of Q3 FY25, and both these ratios were healthy. Also, one ratio that RBI has mentioned was liquidity coverage. It said that as of Q3 FY25, LCR was at 113%, much above the regulatory norm requirement, that is 100%. So all the major ratios too remain healthy, and there is no concern on this front as well. And it is said that bank has engaged external audit team to comprehensively review current system, and it has asked bank's board and management to have remedial action completed this quarter, that is by Q4 FY25. And that's the reason you are seeing that IndusInd Bank today is one of the top Nifty gainers, up around 2% now also.
Okay, Sudarshan, thank you so much for that. But let's move on. And Ola Electric, that has slumped in trade after its vehicle registration company, that's Rosberta Digital Services, has asked and takes the company to the NCLT. Now, Parikshat is joining in with us to give us more details on this. Parikshat, good afternoon. And what is this latest update that you're picking up on this front? Ola Electric, as of now, is trading with cuts of 7%.
Rosberta Digital Services Private Limited has filed a case against Ola Electric for defaulting on payments worth 22 crore rupees. Now, what exactly has happened? Rosberta is a vehicle registration agency and also a provider of high security number plates. This company had been contracted by Ola Electric for registering its scooters sold and also providing number plates to customers. This is because Ola Electric has a direct sales model and does not have dealership. If we recall, on the 19th of February, the company had sent a notification to the stock exchange saying that it is renegotiating the contract with Rosberta, another vehicle registration agency, because of which the numbers, the registration numbers for the company on the Vahan portal, on the vehicle registration portal of the government, may be impacted, and this will be normalized in the coming few weeks. Rosberta is saying that Ola Electric has actually not paid money for the vehicle registrations carried out in the past and for providing high security number plates, and they've defaulted on the contract as well. This is the reason why Rosberta has taken Ola Electric to NCLT, the bench in Bengaluru. This is under Section 9 of the IBC. Let's see what happens. But Ola in the month of March to date has sold around 7,500 vehicles. They claim that they sold 25,000 vehicles in the month of February, but we are yet to see the numbers being normalized in the month of March as well.
Okay, and as we slip into the break, let's listen into Ashwini Agarwal, founder and partner at Demeter Advisors, who spoke about new listings, stock valuations, exports, as well as more.
On a bottom-up basis, now I find a lot of companies that look very interesting on valuation. So I think bulk of the damage is done. From a medium-term perspective, I think one should be constructive and do some bottom-up idea picking here. In the small and mid-cap space, there are plenty of domestic consumption-oriented stocks which are trading at extremely attractive valuations with very solid balance sheets and free cash flow profiles. One has to just look deeper. Unfortunately, I'm not in a position to share names. The one space that I think we should all pay a lot of attention to are the financials. I mean, financials are really very, very attractively valued.
Do you worry today, Sabya, that we are at a point which is almost an existential crisis for a whole host of arts and artisans across this country? I mean, you were talking about the fact that this shouldn't be treated like a charity. It shouldn't be treated like a CSR project. What kind of interventions do you believe we need at this point in time to ensure that we keep this soft power alive?
You know, we don't need to do much because evolution will take care of itself. Because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to come in. And I personally think that AI in many sectors, especially in performing arts and art, will be very short-lived. Because after the age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people
Welcome back to Business Lunch on CNBC-TV18. Now let's move on. US President Donald Trump has said that he has no intention of creating exemptions on steel and aluminum tariffs. Speaking to reporters, he added that reciprocal tariffs will be imposed on April 2nd.
I have no intention of it, though. April 2nd is a liberating day for our country. We're going to be getting back some of the wealth that very, very foolish presidents gave away because they had no clue what they were doing. And April 2nd, I would have made it April 1st, but you know what April 1st is? April Fool's Day. I figured, I don't like doing it, but I made it April 2nd. But it's a liberation day for our country because we're going to be getting back a lot of the wealth that we so foolishly gave up to other countries, including friend and foe. If they're charging us, we're charging them. It's no longer they charge us and we don't charge them.
An exclusive conversation with CNBC, U.S. Treasury Secretary Scott Bessent says that he is not worried about the recent market correction. And he also talks about the 200% tariff imposition on EU. Listen in.
I'm not concerned about a little bit of volatility over 3 weeks, because if you look over the long term, the reason stocks are a safe and great investment is because you're looking over the long term. If you start looking at micro horizons, stocks become very risky. So we are focused over the medium long term, and I can't tell you that the market's going to go up today, tomorrow, next week, but I can tell you that if we put proper policies in place, it's going to lay the groundwork for both real income gains and job gains and continued asset gains. I was with the Business Roundtable yesterday. I think it was 135 CEOs, and I talked to them about our plan, which includes tariffs, deregulation, and what I call reprivatizing the government and bringing down this incredible level of government spending. And one or two items with one trading block, I'm not sure why that's a big deal for the market. Look, that's the nature of these reciprocal tariffs, that all President Trump is asking is for countries to take theirs off. So we have identified some strategic industries, the steel, aluminum, likely autos, but everything else is up for grabs, and that's going to be a decision that's made by our trading partners.
Also, earlier today, we spoke to Ed Yardney, President at Yardney Research, to get his views on Trump tariff policies and its effect on the U.S. economy. Listen in.
The other problem is I'd like to see the market do better on a day when Trump is talking about tariffs. I've come to the conclusion that any day without Trump talking about tariffs is a good day for the markets. Well, I think a lot of us on Wall Street are disappointed with Scott Bessent. We thought he was one of us. We thought he was a market guy and that he understood that markets mattered. But now he's kind of dismissing us. He's not one of us anymore. And they're kind of like messing around with nitroglycerin. This is very, very dangerous to, basically tell people that the administration doesn't care very much if we have a recession, because the short-term pain is going to be for long-term gain. I hope he just doesn't remain bullheaded about his tariffs. He has bragged many times and called himself tariff man. And I think all of us on Wall Street, including myself, had the illusion, maybe delusion, that all Trump was really going to do was bluster. He was going to huff and was puff. And then once he threatened the tariffs, that there'd be negotiations to bring the tariffs down. Tariffs are bad news. And right now, it's interesting to see that foreign stock markets are outperforming the U.S. stock market, suggesting that at the end of the day, tariffs might be actually worse for the United States than for the rest of the world. This time around, the Fed has indicated quite explicitly there are no hurry to lower interest rates. They think the economy is still resilient. Meanwhile, they have all the uncertainty as the rest of us do with regards to tariffs and whether tariffs might boost inflation. And the last thing they want to do is lower interest rates.
Moving on, Rockefeller International's chairman Richard Sharma also agreed that the with the U.S. Treasury Secretary Scott Bessent on how government spending should be a major concern for markets. Listen in.
This is, President Trump's favorite policy tool, and he can't help himself but use that. But the only hope here is that if they do settle on just using reciprocal tariffs, because a lot of governments around the world will be quite happy, or not happy, or at least be forced to reduce their tariff rates, and then you have the law of comparative advantage which plays itself out. But the bigger point here for me, Carl, is this, that the American economy over the last couple of years was artificially juiced up by very heavy government spending, by running deficits that no country in the world has been running. And that was unsustainable. And the idea that America could go on that way and nothing needed to be changed, I think that was just not correct. So in a way, the correction we're seeing in the markets and even in some of the spending patterns, I think was inevitable given this bubble we had in American exceptionalism and in government.
And in other geopolitical developments, US President Trump has confirmed that he would be speaking to the Russian President Vladimir Putin tomorrow. This comes as the US pushes for a ceasefire in Ukraine. Let's listen in to his comments.
We're doing pretty well, I think, with Russia. We'll see if we have something to announce maybe by Tuesday. I'll be speaking to President Putin on Tuesday. And a lot of work's been done over the weekend. We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance. We'll be talking about land, we'll be talking about power plants. That's up, it's a big question. But I think we have a lot of it already discussed very much by both sides.
You'll ask him?
Ukraine and Russia.
You'll ask him?
We're already talking about that. Dividing up certain nations. Yeah, and they've been working on that.
Okay, on that note, we're going to slip into a very short break. And as we slip into the break, here is some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you can just scan the QR code on the screen there.
That the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings. Then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do much. Evolution will take care of itself.
We certainly hope so.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the...
Welcome back. You're tuned into Business Lunch on CNBC-TV18. Now let's move on to the recently appointed U.S. Director of National Intelligence, Tulsi Gabbard, arrived in Mumbai yesterday as a part of her multinational trip to the Indo-Pacific. Earlier today, she met with the Defence Minister Rajnath Singh in New Delhi. This marks the first high-level trip to India by a senior official of the Donald Trump administration. She set to address the Raisi and Zina dialogue on the 18th of March. Key macro data that tracks the Chinese economy trickled in earlier today. The retail sales rose by 4%, up 3.7% previously, driven by holiday spending during the Lunar New Year. Industrial production grew by 5.9%, although slightly down from the previous print. Lastly, the fixed asset investment jumped 4.1%, surpassing their expectations. To further boost domestic consumption, China unveiled the Special Action Plan aimed to increase demand and rising income. Other than that, the plan includes a childcare subsidy scheme. Officials have intensified efforts to implement consumer-targeted stimulus measures as China combats a deflationary pressure and the threat of U.S. tariffs. And moving on, the chief Asia economist at HSBC, Frederick Newman, also gave his take on the consumption rebound in China, even as the U.S. economy slows. Let's listen into what he had to say.
Tad better, not exactly surging demand, but remember, we've been talking for months now. We wanted to see the consumer finally wake up, and there's a sense here that he's at least starting to, stop yawning and maybe look a little bit more confident into the future, because just as the trade war really gets going, exports have slowed in China first couple of months of the year. So we need consumption to wake up. And today we got the first signs of really a marginal uptick. And of course, over the weekend, further messages by the government that they want to focus really on consumer spending. And this, by the way, comes in the context of the U.S. consumer looking a bit tired. So we really need China's consumption to pick up in the coming months for a healthy global economy, not just for China's sake.
And moving on, a SpaceX crew capsule arrived at the International Space Station yesterday with the crew that will replace NASA's 2 stranded astronauts. This will allow Bush Wilmore and Sunita Williams to return home after being stranded in the orbit for over 9 months due to the delays and technical issues. They were welcomed by the station's 7-member crew, who have remained there after problems with Boeing Starliner capsules forced NASA to bring it back to Earth without them last year. NASA has announced that Butch and Sunita will reach Earth on Tuesday. Okay, and with that, we're absolutely out of time on this edition of Business Lunch on CNBC TV 18, leaving the Nifty with gains of almost 0.3%. Thank you so much for tuning in. Up next, your Midcap Reader.
All the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
On a bottom-up basis, now I find a lot of companies that look very interesting on valuation. So I think bulk of the damage is done. From a medium-term perspective, I think one should be constructive and do some bottom-up idea picking here. In the small and mid-cap space, there are plenty of domestic consumption-oriented stocks which are trading at extremely attractive valuations with very solid balance sheets and free cash flow profiles. One has to just look deeper. Unfortunately, I'm not in a position to share names. The one space that I think we should all pay a lot of attention to are the financials. I mean, financials are really very, very attractively valued.
Welcome back. Is still holding on to some of those gains, but some of the movers in today's trading session, Vivek had just highlighted BSE earlier in the show. It's off the highs of the day, but it's faced significant drubbing at the hands of the street from its highs, the highs of around 61.33, and since then the stock is down almost 50% from those levels. And it's after this fall is when UBS has now gone on to initiate coverage on the stock with the buy recommendation, a 53.50 price target, expecting a potential upside of 37% from current levels. What they're saying is that scaling up of the options turnover is going to be a key driver for BSE going forward, and the fact that it has diversified revenue streams, that is a positive, and its operating margins are also likely to improve going forward. That is another positive that UBS is highlighting for BSE going forward. Now, the current valuations at around 33 times 1 year forward price to earnings, that is around an 11% premium to its historical average. But UBS is saying that this valuation metric does not have enough relevance now that BSE has revamped its business model completely. So this valuation multiple premium has less relevance for the stock going forward. And so it's a 37% upside that the stock is UBS is projecting on BSE. The stock not doing much today, still 1% higher, but has corrected significantly from the top.
Thank you so much, Hormaz, for taking us through what exactly is transpiring as far as the listed stock BSE is concerned, not the exchange, which is generally in focus. We also have to keep in mind that the stock is in the F&O band, right? So cannot take fresh F&O positions. You can only square off existing positions that you have. But the other stock in radar is SpiceJet. It's in focus after promoter Ajay Singh sells 1.15 crore shares via block deals. Sudarshan joins in to tell us more and what exactly could be the reason for this particular stake sale.
So last Friday, SpiceJet's one of the promoters, Ajay Singh, who is also CMD, has sold nearly 1% stake via block deals, and that was for worth rupees 52 crore at a price of rupees 45.34 per share. Now today there is another announcement. So basically it has two promoters, Spice Health and CMD Ajay Singh. Now Spice Health has certain warrants of 13.34 crore shares. Now SpiceJet has announced that Spice Health will convert those warrants into equity shares. Now to fund those certain part of warrants, CMD Ajay Singh will be selling 3.14 crore shares to fund that conversion, and after that promoter stake will increase to more than 33% from current holding of around 29%. It's a little more than 29%. But if you look at the stock performance today also, it's like almost flat. In 2025, it's down almost 20%. And if you look its performance against the peers, look at the market share. It has been losing the market share, whereas Indigo has been gaining the market share. Last month, for the month of January, its market share was around 3.2%, which is down almost 250 basis points year on year if you compare against January of 2024. So, but today's announcement is largely positive because at the end of the day, the money will come in the company and the total money that will be infused is around rupees 300 crore. So, but stock performance today also, it's almost flat.
Indeed. So it's been in the news is SpiceJet selling shares, now increasing stake as well. Now earlier today, we also spoke to Sanjeev Asthana, who is the CEO at Patanjali Foods. Now he expects margin expansion to continue for the palm oil plantation business. Listen to what he had to say.
We are clearly witnessing some bit of slowdown in the imports in terms of volume terms. That is more than made up by the oil inflation that we witnessed. But broadly, for the year, we are pretty confident of still meeting between 2 and 4% of growth target on the edible oil volume. Pretty confident about exceeding 4% plus of EBITDA margin on the edible oil side. On the FMCG regular businesses of foods and non-food, there is some slowdown we see in the urban area, so that continues. But broadly, we are pretty much within the ballpark range of 8 to 10% target that we are on the food side. The HPC business is still integrating. The first full quarter we'll see in this last fourth quarter now. And pretty much we are on course to achieve 15% growth on the HPC side next year. Every year, our EBITDA run rate, what used to be about 160, 170 crores, we are upwards of, somewhere around 220 crores odd we make as an EBITDA. So every year that is spiking up. But the big growth in the EBITDA and the contribution to the revenue shall happen maybe in 3 years' time, when all the plantation that momentum that we have of last 2 years, I think will start to fruit. So pretty much from 28, 29 onwards, you will see a big expansion. And that the estimation is broadly that, if the run rate of our targeted sort of plantation size, the margin expansion that we expect to happen, so we should pretty much be nearly 3 times of where we are today in 4 years' time.
Well, that's a very interesting conversation we had earlier today with the management of Patanjali Foods. But with that, it's all the time we have on this edition on Midcap Radar from the entire team. Thank you very much for watching. Your stocks when we return.
I thought, I should leave. I should go back to India. We will figure out what is it that we will do. There was no idea for free will. So I came. Rahul also left at the same time. Then we spent almost a month or 2 to figure out, okay, now what next? So it always started from the family, then solving some,
the
consumer
business
problems.
Plan, the business plan came later. First,
Always.
But how do we ensure that we're in the
That
same?
has always been the priority. What you see in front of the label is very different than what is on the back of the label.
And then very different from what's actually inside the bottle.
Exactly. I guess so far we are in some 2,000 stores. In next 2 years, we can easily target anywhere between 15 to 20,000, right? When you go deeper into any category, you also understand the good, bad, ugly side of it. It's a misconception, to be honest. I think the percentage of spend required for R&D eventually is much lesser that you need for your marketing. Investing in R&D is much better ROI than always doing it in marketing.
do you worry today, Sabya, that we are at a point which is almost an existential crisis for a whole host of arts and artisans across this country? I mean, you were talking about the fact that this shouldn't be treated like a charity. It shouldn't be treated like a CSR project. What kind of interventions do you believe we need at this point in time to ensure that we keep this soft power alive?
We don't need to do much because evolution will take care of itself. Because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to come in. And I personally think that AI...
Hello, good afternoon. You've tuned into Your Stocks, coming in live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. And markets also a pretty picture coming in right now on the screen. And we're seeing a bit of a jump up coming in for the markets. Nifty is trading with gains of almost 0.5%. You're seeing the Sensex, mid-cap, as well as the Bank Nifty managing to hold on to good gains. Look at the Nifty. It's coming almost back to those near those days high level as of now for the Nifty 50. In terms of the Nifty mid and small cap also, they are outperforming today the benchmark indices. So yes, Nifty mid cap and small cap have picked up some bit of a pace as well. Nifty mid cap is up 0.7%, small cap is up 0.8% in today's trading session. Nifty Bank is where the outperformance is coming in from. And in terms of some of these gainers that we've seen in the last 1 hour, let's pull up HEG. That's gained almost 1-2% in trade as well. So that is something interesting to watch out for in terms of HEG as a stock move, and especially in the last 1 hour, we've seen that some bit of an up move there. Other than that, we have Manappuram Finance also, as well as the Rainbow Children Hospital. That is also managing to see some bit of a pickup in the last hour of trading session, last 1 hour of the trading session. So keep an eye out on that. You can see the spike up, like I said, in Manappuram Finance as well, moved up to the green side. So let's see whether this is going to be sustaining. But yes, that's how the market setup is looking like. But this is a show where we solve all your stock-related queries. And for that, we do have Richard Jain of Motilal Oswal Financial Services joining in with us, and we will be joined by Gaurang also a short while from now as well. But Richard, good afternoon, and thank you so much as always for joining in with us. Monday surely is looking exciting for the markets. Any thoughts in terms of the levels that we should keep an eye out on? Is this sustainable? Or, maybe again tomorrow is going to be a day where we see the fall coming in and the whole week is gone in the red then?
Yeah, very good afternoon, Vinny. Well, Vinny, if you see the last few trading sessions, the markets have seen some consolidation on the index front. The level that we are watching for is the 20-day exponential moving average, which has not been surpassed since 12th of February. So almost more than a month that the markets have, the Nifty has traded below its 20-day MA, which is now around 22,620. So it needs to surpass that 22,620 mark for a deeper pullback move to happen. So I think overall the near-term trend remains sideways, and 22,620 is the immediate hurdle which needs to be surpassed for any kind of up move to come in the Nifty.
Okay. Richard, on that note, let's get started with the queries coming in as well. And the first one is for Ola Electric. We have Prasanna now writing to us from Hyderabad. He's holding 2,500 shares of Ola Electric. This is at a price of 76 rupees per share. Wants to know whether to continue to hold this, look to sell, or at current levels. What's your view coming in on this? Richard, especially today also, we are seeing that news flow coming in where one of its vendors also has filed, for an insolvency plea for Ola Electric. So, on that front, the stock also hit a 52-week low today. Concerns are not stopping for Ola Electric. On the charts, what is it that you are seeing and understanding?
So there's limited historical data since not much time that the stock has listed, but definitely after listing, the stock has consistently formed that lower top, low bottom structure, and the technical trend is still not positive. Difficult to give any support levels, so I won't advise to do any kind of averaging strategy over here since the trend still remains down. But yes, the momentum readings are a bit oversold, so in case if you get any pullback moves, take a review again if you get pullback towards 58 to 60 kind of range where next resistance for the stock is placed. So I won't advise to do any kind of averaging, but maybe sell and buy strategy could be kept in the stock.
Okay, yeah, maybe not enough data to judge, but as of now, at least averaging is out of the option. Do not look at that. Maybe sell on rise is what Richard is suggesting as an option coming in for the stock. That's Ola Electric. Today, as of now, is down 7% in trade. Let's move on to the next query. We have this is on IREDA. So this is coming in from Riju Srivastav. He's writing to us from Indore. 70 shares of the IREDA they're holding. This is at a price of 130 rupees is the buy price. Currently, the stock is at 140 rupees. So making some bit of the profit on this one. Overall, on the prospects of the company, IREDA, how is this stock looking on the charts to you? What are we watching out for in terms of levels? And, should the viewer follow a strategy of maybe adding some more? Or, what are we watching out for? Last 6 months, 38% decline. And now, what's the trajectory you have here?
So certainly, along with the broader markets and most of the PSU names, the stock has also corrected. I think in the month of July 24, the stock made a high somewhere around 300 levels, and it's down by 50% from more than 50%, in fact, from that highs. But the good thing is the buy price, that it is not at that higher levels, and on the weekly chart, the support for the stock is coming around 125. Not much below the original buy price. So I would recommend to continue to hold on and have some patience. Maybe this is a stock which one should not look from a very short-term perspective, because the momentum is not there for the near term. But definitely considering, if you have vision for a bit mid to longer term, then you should continue to hold on to the stock. 125 is a good support where you can consider adding more if you wish to.
Okay, keep an eye out on those support levels as well. That's interesting to watch out for. Let's move on to the next query then for today. This one is coming in from Akshay, who's writing to us from Bangalore, holding 750 shares of Tata Power. This is at a price of 389 rupees per share. Currently, the stock is trading at 351. So they're making some bit of a loss on this one. Overall in Q3 also the performance was largely revenues was below, but EBITDA and the profits of the company was something that had done well. Rujit, overall when we're looking at a stock move right now that is coming in for Tata Power, specifically in the last 1-2 months, 6 months, let's look at that, right? It's down 21%. And this fall has continued for some time. So Tata Power, does it become interesting on the charts? And as a long term, if the viewer is holding it for the long term, what are the levels they should keep an eye out on?
The stock is very important support around 330 to 320 range. And since the price rise, we have already seen a corrective phase from the highs of around 500. The price rise downside seems to be very limited here on. We could see some time-wise correction, which we have been witnessing since last couple of weeks. If you look at the volumes since last couple of weeks, we have not seen any high volumes coming in the stock. So possibility of some time-wise correction is there, where the stock would consolidate within the broad range of 320, 330 on the lower side and 380 to 400 on the higher side. But yes, if you have a positions from a bit mid to long-term perspective, and since the price-wise correction has already been done, I think it's better to have some patience and continue to ride this trend.
Patience and continue to ride the trend. That's the word coming in from Rujit on Tata Power. Gaurang Shah is also joining in with us from Geojit Financial Services. Now, Gaurang, good afternoon. I would also like your view coming in on Tata Power. The viewer has bought this at a price of around 389 rupees. And overall, for the long-term perspective on the fundamentals, Tata Power continues to be a good bet?
First of all, thank you, Vinny, for having me on this platform. Good afternoon to everyone. Apologies, Vinny, I had some connectivity issues. I had some problem because of the Wi-Fi. On Tata Power, well, at Geojit Financial Services, we remain extremely positive on the entire power generation, power transmission, power distribution, and power ancillary pack. On Tata Power specifically, we've been maintaining a positive view for a very long time. And if I'm not mistaken, our targets are somewhere close to about 450. But I'm quite sure in the coming future, earnings will definitely encourage us to move our target upwards. So currently we have a buy and a hold on Tata Power.
Okay, buy and a hold on Tata Power. That's the view coming in from Gaurang. Let's move on to the next query. IDFC First Bank. Now, Chandan is writing to us from Visakhapatnam. 200 shares of IDFC First Bank, price of 81 rupees per share. Currently is what he's holding it at, so making some bit of a loss on this one. Whether he should hold this counter or look to exit this one? Ruchit, your view coming in on the technicals first for IDFC First Bank. The stock has been falling in the last 6 months, last 1 year also. We're seeing the decline. Your thoughts?
So if I compare this stock with other stocks within the banking space, then it has been an underperformer within the banking space. So technically, the trend still remains negative, although the momentum readings are oversold, and hence we could see some in-between pullback moves. But I would recommend to shift to some other private sector names such as Kotak Bank, maybe, which is looking quite positive, where the stock has given a breakout after about 4 years of consolidation phase. So I think even ICICI Bank, to an extent, looks that downside seems to be very limited over here. So I think since this has been an underperformer, there are no signs of reversals as of now. So if he's looking for midterm perspective, then Kotak Bank maybe is a better option rather than IDFC Bank to shift it.
Absolutely. Kotak is a better option than IDFC First Bank. Gaurang, your view on the fundamentals for IDFC First Bank. Would you also suggest maybe moving out of IDFC First Bank and looking at another bank? Or would you suggest the viewer to continue to hold this one?
Vinny, I think it's prudent to understand why this underperformance. And if you're a long-term investor, Vinny, our sense is that first of all, stay invested in IDFC First Bank. Sub 50, your downside is extremely protected, and that's somewhere around 50 is where the stock is trading right now. Now, why this underperformance was primarily because of the stress on balance sheet in terms of the MFI exposure, which of course the management was vocal enough post second and third quarter. And the management is also guided that in the fourth quarter, they expect this problems related to the MFI segment to get subdued. And in the new financial year, possibly they'll get back onto the path of growth trajectory. We're maintaining an accumulate stance on IDFC First Bank. So if you've gotten at higher level, I think these are possibly, comfort zones wherein you can add more if somebody wants to invest fresh. We would advise that. Our targets are 71 on IDFC First Bank, long-term fundamental.
Okay, keep an eye out on those levels. Good bet on the long term is what Gaurang is saying. But on that note, we're actually going to slip into a very short break, viewers. But here's some good news coming in for y'all. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app from Apple Store or Google Play Store, or just scan the QR code on your screen.
In many sectors, especially in performing arts and art, will be very short-lived, because after the age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people realize that the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings, then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do much. Evolution will take care of itself.
We certainly hope so.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the
Welcome back to Your Stocks in CNBC TV18. We still have with us Richard Jain of Motilal Oswal Financial Services and Gaurang Shah of Geojit Financial Services to solve all your stock-related queries. Let's move on and talk about the next query for today, and this one is on KPIT Tech. Narasimha is writing to us from Hyderabad, holding 250 shares of KPIT Tech at a price of 1,558 rupees. Wants to know the outlook on the stock for the long term for this one, and currently making some bit of a loss on this one. Gaurang, your view for this stock, KPIT Tech, mid-cap IT name. You know, in the past we've seen that very, very sharp run-up. Numbers were very good. But IT as a story now, and KPIT Tech specifically, how are you seeing this move, Gaurang?
So, Vinny, I would not hesitate to say that this is one of the consistent performers when it comes to small stroke mid-cap IT names. There has been problem with the Indian IT sector with the kind of statements that have been coming out from the US with respect to tariffs, budgetary cuts, IT spend getting a backseat, etc., etc. But even in that kind of a scenario, even if you look at it today, KPIT Tech is, I think, smartly up plus 3%. All-time high was somewhere close to about 2,000 rupees, if I'm not mistaken, and if my memory serves me right. We have a buy recommendation on KPIT Tech. Now, if you did invest in KPIT at 1,500 plus, I don't see any reason why you should hesitate to invest at current levels of 1,250 or thereabouts. So hold on to it. If you have investable amount, you can average. If somebody wants to make a fresh long-term investment, we would recommend that. Our target is 1,760 on fundamental long term.
Okay, 1,760 on fundamental long term. And yeah, the highest that it had been was around 1,928. So yes, close to the 2,000 mark is what we were watching out for. Richard, your view coming in on the technicals, you know, after hitting those highs, which I was just talking about, somewhere around in, June and September times when we saw it moving. After that, we've seen that some bit of a fall that has come in for KPIT Tech since September, October. Now, what are the levels that you are keeping an eye out on the technicals? And would you also suggest that maybe the viewer could add some more in for a long-term story?
I think it's one can keep holding the existing positions if he's a long-term investor. Although prices have seen a correction, but if I just look at the historical data and post that COVID rally, which we had seen, the stock has not breached its weekly 200 EMA even once. And that weekly 200 EMA is now placed somewhere around 1,060 to 1,100, around 1,100 kind of levels. So I think, considering that the price-wise downside seems to be very limited from here on. So I think at current levels or maybe on some dip if we get in the short term, because of that fall that we are witnessing in most of the IT names, then you can look to add more positions at lower levels. But these are not the levels where you should worry much and look to book any kind of losses on existing positions. So continue to hold the existing positions, and any kind of dips if we get towards that maybe 1,100, 1,150, that would be a good range to add more positions over there.
Okay, let's move on to the next query then. L&T, this is the stock we'll talk about. Rohit Jain is writing to us from Mumbai. Holding 300 shares of L&T. This is at a price of 2,585 rupees per share. Long-term investor wants to know whether to continue to hold this one or look to sell this one. Gaurang, L&T, your view?
This has been one of the greatest wealth creators, according to my understanding, and has been one of the most investor-friendly companies, Vinny. We've been maintaining a positive stance on L&T for a very, very long time. Our targets on the fundamental side stands somewhere close to about 4,200, close to about 4,200. The good part about this investment is the level of investment. I think it's a very decent, safe, if I can say, use that word, in terms of investment, 2,500 or thereabouts. So no need to rush and book out. If you're a long-term investor, stay invested. And I think on performance, Vinny, if the earnings are better than expected, we expect Cap Goods Engineering to do well. And L&T is a flagship company in that particular sector. So hold on with a long-term target of somewhere close to 4,200.
Absolutely. Keep an eye out on those levels. Ruchit, what are the levels that you're keeping an eye out on, and would your view also be hold for the viewer?
Yes, I completely agree and have a similar view that no one should hold on if he's a long-term investor in the stock. If we look at the bit positional chart, then the stock has already seen a good time-wise corrective phase in last 1.5 years. And 3,000, 2,900 is a very strong support zone even on a longer-term chart. So downside seems to be very limited on here on. And even in this time-wise corrective phase, the stock is now trading around the lower end. That is the support end of this entire corrective phase. So continue to hold on. At least from a near-term perspective, one can expect a pullback move towards somewhere around 3,450 to 3,500 kind of range. But even the long-term charts are still positive, and hence I would advise to continue to hold on the existing positions.
Okay, let's move on to the next query. And this one is from Vijay Javedkar, who's writing to us from New Delhi. 3,500 shares of ITC they're holding. Price is 207. So yes, they've been holding in and they've got a good run up. Stock price is currently at 408. Wants to know, should he continue to hold this one or exit this one? Gaurang, your view on ITC, given that they're making such a good profit, at least some bit of that benefit, should they take or continue to hold this?
Well, that's the big billion-dollar question, really, because people in stock market don't have enough of enough. Even if they make 2x money, the way this investor is making, he bought in at about 205, 210. ITC trading at about 408 or 410. We've seen a higher level of 550, if I'm not mistaken. Correct me if I'm wrong. So, as a disclosure, Vinny, we have a positive coverage on ITC as well from a long-term point of view. Hotel business got listed as a separate entity. Currently, we have a target of somewhere close to about 450. So, and again, the best part about this investment is the investment price of about 205, which is, according to me, again, a very, very comfortable zone to stay invested from a long-term point of view. So, if you're not not in need of money, stay invested. 450 is the target, as I mentioned, long-term.
Okay. And Ruchit, your view coming in on this one, would you also tell the viewer to continue to hold or maybe get some money out? Other things are becoming valuable as well. Look at that also.
Well, these are not the levels where one should look to exit from ITC. So definitely hold on the existing position. And the good thing is the margin of safety, yes. Even the corrective phase on a longer term chart, the support base is around 370, 380, which is much higher than his buy price. So I think, yes, since he's a long-term investor, the buy price is good. The price-wise correction has been done. So downside seems to be limited from here on. So continue to hold on the positions.
Okay, continue to hold on to your positions at ITC. That's a view coming in from both our experts for today. Let's move on to the next query. Raghav Mohan is writing to us from Shimla, and this one is on Metro Brands. 10 shares of Metro Brands, price is 1,150 rupees per share. What is the outlook on this stock on the technicals, Ruchit? What are we watching out for? Obviously, around the buy price only. So what should they be doing with this now?
The short-term trend is not that positive for the stock. There has been a low-top, low-bottom structure, and the previous swing lows are somewhere around 1,000 rupees. So I think any kind of pullback move towards 1130, 1150, maybe this is where the immediate resistance would be placed, where one can look to exit the existing portion. So 1130 to 1,000, I think this is a broad range where we should see some consolidation in the stock for a few months.
Okay. So that was actually the last query for today. So thank you so much, Ruchit, as well as Gaurang, for joining in with us and helping our viewers solve all their stock-related queries. And with that, we're absolutely out of time, leaving the Nifty with gains of 0.5% in trade. But with that, closing bell will take the action forward, so don't go anywhere.
Architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The other problem is I'd like to see the market do better on a day when Trump is talking about tariffs. I've come to the conclusion that any day without Trump talking about tariffs is a good day for the markets. Well, I think a lot of us on Wall Street are disappointed with Scott Bessent. We thought he was one of us. We thought he was a market guy and that he understood that markets mattered. But now he's kind of dismissing us. He's not one of us anymore. And they're kind of like messing around with nitroglycerin. This is very, very dangerous to basically tell people that the administration doesn't care very much if we have a recession, because the short-term pain is going to be for long-term gain. This time around, the Fed has indicated quite explicitly there are no hurry to lower interest rates. They think the economy is still resilient. Meanwhile, they have all the uncertainty, as the rest of us do, with regards to tariffs and whether tariffs might boost inflation. And the last thing they want to do is lower interest rates.
On a bottom-up basis, now I find a lot of companies that look very interesting on valuation. So I think bulk of the damage is done. From a medium-term perspective, I think one should be constructive and do some bottom-up idea picking here. In the small and mid-cap space, there are plenty of domestic consumption-oriented stocks which are trading at extremely attractive valuations with very solid balance sheets and free cash flow profiles. One has to just look deeper. Unfortunately, I'm not in a position to share names. The one space that I think we should all pay a lot of attention to are the financials. I mean, financials are really...
To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Nikkei trading with gains of 1.25%. The Shanghai Composite is trading above the flat line.
If you start looking at micro horizons, stocks become very risky. So we are focused over the medium long term.
The upside break above 22,676 is needed. We left off at 22,400. Nifty is starting at about 22,433. Small green, small up, about 0.25%.
On a bottom-up basis, now I find a lot of companies that look very interesting on valuation.
We've hit all-time highs in the Indian markets here. And when you look at the international markets, well, the gold is trading at an all-time high there as well.
In Bengaluru under Section 9 of the IPC to claim the amount in default, which is around 22 crore rupees.
The Nifty is holding up with a gain of about 100 points and now just conquered the 22,500 mark, up 0.5%.
Our forecast was also 2.3%, so this is just marginally.
We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance.
It's green on the screen. The mid caps and small cap markets faring slightly better, and the market breadth advance decline ratio is actually quite good in favor of advances.
Well, that is the day so far, and have to say it is turning out to be a pretty decent day, even though we sold off, but the market has been bought back from the lows. I mean, actually, the market went to being absolutely flat. We've got 100 points on the Nifty. Advance decline is the problem. It's a little negative. Declines outnumbering advances. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Survi. Guys, hi. Afternoon.
Hi, afternoon. Steady session, but those advanced decline lines have crisscrossed, right? In the morning, you had more stocks advancing, and now that's turned.
But you know, it's still, because we were watching all of this last week, it's still better than last week, because last week, while the Nifty was flat, you still had the mid-caps falling. And for the week as a whole, the mid-cap index was down, the small-cap index was down about 4%. So from that comparison, at least there's still some green in the broader market. Maybe not as healthy as in the morning, but I guess green is still a good color to have.
No, absolutely. And I think, I was just looking at this. It's a simple data point. Lots of data points that people are talking about. But so the number of stocks on the NSE 500, which are above what you call in technicals the Lakshman Rekha, 200-day moving average.
Yeah.
Right? That is about 12% now. Okay. Only 12% of stocks are above the 200-day moving average. This is long-term average, right? Which basically it's another, typically, between 10 and 15, the number, when it reaches 10 to 15%, you basically get a price bottom, at least. That we're at about 12.5%. So I think that is...
almost there, so to speak.
Almost. I think we're there. I think in terms of price-wise, I think the damage is done.
Yeah.
So price-wise, the bottom has been made. Now, of course, where the market heads from here, whether there is a recovery, what kind. I think that day we had... I think it was Sunil Singhani, was there a W-shaped recovery? Many Ws basically, not one W. So maybe that kind of a market. So chip shop, we'll see. But price-wise, I think a lot of the damage is perhaps already in. 22,500 on the Nifty for now. Actually, today the Nifty did cross, hit the 20-day. I was talking about the 200 earlier, but the 20 is the simplest, closest average, daily average. We crossed the 20-day moving average and then have come off. So I think the high is 24,577, 22,560 is the 20-day. So there was we took that out and then we're sort of trading under it. So that remains the level to take out on the upside. Sectorally, I think banks are doing well, actually private banks mostly. And then you've got this healthcare and pharma as a space, which is also doing quite well. IT is down, FMCG as a pack is slightly lower. So that's about it. That's the broader picture so far. Reema.
Sorry, I lost my chain of thoughts, but just getting back to the markets, today was a fairly steady trading session and the Nifty has been holding 22,500. As Prashant pointed out, resistance now is trying to get back above that 20 DMA, which is 22,587. So about 80-90 points from that level. Banks have outperformed for the third consecutive session, and that's a positive. And now, the 20 DMA for the Nifty Bank is about 300 points away. So, considering the recent outperformance in banks, is it poised for more gains? That remains to be seen. But large private sector banks, NBFC, insurance companies are doing very well. So, the Nifty gainers include an SBI Life, the Bajaj Finance Twins, Finserv and Bajaj Finance. Axis Bank is a big mover on the back of the rise in gold prices. Look at the way Muthoot Finance has moved, 4.5% higher. Pharma is the other pocket of strength. So Dr. Reddy's, Cipla, Sun Pharma, even where there is good US FDA news flow like Alchem Zydus are up and about in trade. But IT continues to remain the pain point for the market. Wipro's lost about 1.5%, but midcap IT, LTI, Mindtree 3% gone, Zensar, Hexaware are all under pressure today.
Persos is now down 8%. Yeah. So it's a big hit, no doubt. Away from that, IT definitely is a weak spot. Actually, just to talk a little more about this mid-cap market movement, there are some stocks that are falling on news. Now, IT obviously is a sentiment issue. There are others that have had a rough day today because of some sort of a news flow or the other. And we'll talk more about it as we go forward. Recent listings wherever shareholder lock-in periods have ended. And there's been a lot of price damage on some individual stocks. I'll just take two names as examples. IKS, we've been tracking this since the morning. MobiKwik, the price damage is between 6% to 10% on some of these stocks. Look at that, 12.5% now on IKS. MobiKwik is down about 6-7%. On IGI, International Gemological Institute, the certification company, their lock-in period is actually ending tomorrow, 3-month lock-in. The stocks anyway, it's half from the peak and it's still under some pressure. So that's one issue in the market where, investor shareholder lock-in periods are ending. The other casualty of the day has been Ola Electric. And again, we'll tell you about that as well as we go forward. Ola is down 6-7%. There are some concerns building up about one of their, vendors taking them towards the bankruptcy court. But having said that, there are enough gainers as well. Reema mentioned Muthoot. Look at the action and traction in the capital goods space. Hitachi Energy, GE, Vernova, TND. These are stocks doing very, very well. KC bagged orders worth over 1,200 crores. So that stock's been up since morning as well. So there's plenty of excitement. I mean, let's not take away from that. Nuvama is doing very well. Some of the capital market plays, beaten down plays, IEX, Nuvama, exchanges, wealth managers. There's some buying, very selective buying that's happening in this side of the market as well. So very mixed trends. All is not lost in the mid-cap market. It's looking better than it did for most of last week. That's a short point. Well, so what are the trading strategies for the last hour? What can you look at? We've got Mitesh joining in as always. Let's get some thoughts going. Mitesh, on the index, Nifty, Bank Nifty, what's the take now? And what about individual stocks?
I think it's the Bank Nifty which is showing more strength. I talked about 48,600 as the target area. I think we might head towards those levels. Disclaimer, we have some positively biased call spreads on Bank Nifty, so there's vested interest. And once we clear that, I think good chance that we are looking at 48,850, 900 zones as well. So quite positive on the banking names. In fact, I have State Bank of India as a recommendation. It's been subdued today when the Bank Nifty is done well, but it's now at the hourly averages, so interesting level to buy. Keep a stop at about levels of 714, look for a target of 750 to about 755 on the upside. And the other stock which I have, that's buy on PI Industries with a stop at about 33.30 and a target of 34.50.
Got that. Let's talk about the cement sector. Now, DAM Capital is bullish on many of the cement stocks. They see demand uptick from December 2024 onwards. It's already started, driven by a revival in government capex. Nimesh joins in with more details from that note. Nimesh.
Arima, while you highlighted the DAM road, which I'm going to highlight as well, but in general, I'll tell you from a market perspective, not only sell-side analysts, but even some of the buy-side, fund managers have turned a bit constructive on the cement sector, and that's the reason why you're seeing a bit of uptake in cement stocks of late. Coming to DAM Capital note, which came today, they clearly say that the tides are turning for the cement sector, and hence they've done some upgrades as well. For them, the top sector pick is Shree Cement with a target price of 32,000 and Ultratech with a target price of close to 12,200. However, they've upgraded Ambuja Cement to a buy today with a target price of 555. They believe after the recent correction, the valuations have turned quite favorable with a very limited downside risk on that stock. So that's the reason why they've upgraded Ambuja Cement today. They also have, interestingly, they have a counter and buy on Ramco Cement. Remember last week, there were a couple of sell reports on Ramco as well after that Tamil Nadu order, which had an impact on both Dalmia and Ramco. So, but DAM has a buy report with a target price of 905, and they were neutral on Dalmia as well as Nuvoco and ACC. So that's the stock-specific recommendation from DAM. Now, coming to the thesis on why they've turned bullish and a bit constructive on the sector. One, the demand uptick from December onwards on the back of the revival in the government capex, that is likely to sustain according to the DAM road. So they expect Q4 to be quite strong, followed by Q1 as well. So that's the first big reason. The second big reason is that they believe that the industry is nearing to a massive consolidation phase, which has gone between 23 to 25. You've seen a lot of acquisitions happening by both the Ambuja Group as well as Ultratech Group. So that seems to be nearing now because there are not many enough candidates left for takeovers. So that's the DAM Capital expectations now. On back of all this, they expect that the pricing intensity is going to lower, which means that the industry profitability will come to a mean reversion. And that's the key reason why they've turned constructive, and they've today upgraded Ambuja Cements to buy, but they're very, very bullish on the likes of Shree Cement as well as Ultratech Cement.
Thank you very much for that. In that entire cement pack, Shree Cement has fallen the least, or it's still closest to its 52-week high. It's just about 3 to 4% away from its 52-week high, Shree Cement, while Ambuja, which DAM Capital has turned incrementally more bullish, has fallen about 30% from its recent highs. Dipan Mehta, thanks Nimesh once again. Dipan Mehta from Elixir Equities is now with us on the show. Afternoon, Nigel's not there to ask you about cement, so let me ask you.
I can tell you Dipan's answer, by the way. Go on.
Why don't you start, and then maybe Dipan's changed his...
I don't think he likes the space, but maybe he's changed his view.
Dipan, have you?
So, Rima, please tell Nigel that it is an absolute wrong time to switch out of cement as an industry that he is following, because I agree with the DAM Capital report. I feel that cement stocks have bottomed out, and this mean reversion is something that we also have been thinking about a lot over here, and especially the consolidation. And again, the stock selected, that is Ambuja, ACC, I think they are best placed in terms of risk return profile. Normally, I don't like cement or any commodities, but I think they're at a nice sweet spot. where you can have a nice trading rally over the next 3 to 6 months. The base effect is fantastic for cement. So when they report numbers for this quarter, next 3-4 quarters, you will see some fabulous alpha over there. So positive on cement. Valuations, you can keep on arguing. They've always been on the higher side. But even if the valuations remain at these levels, I think there's certainly a case to be overweight in cement.
That's really interesting, Deepan. So you're saying, if nothing else, it's at least at a nice trading point. I mean, a good trading inflection. You could perhaps look at it from that perspective, right? So you're going to play that bounce in the sales numbers, in the volumes. That's what you're looking at?
That's right. And I think whenever quarterly numbers out, maybe not so much for this quarter, but next quarter onwards, you will really see a very good change, growth in profits and revenues. So I think more positive news flow can be expected from the cement this point on. And that will improve the sentiment and certainly it will drive stock prices higher. That's my assessment at this point of time.
Very interesting. Got it.
And which cement stock? Sorry, I missed that if you already answered. If you have to play for trading and investment.
Yeah, I think ACC Ambuja fit that criteria. They are reasonably valued. And I thought that their December quarter numbers were very impressive as compared to the rest of the industry. And the Adani Group is now, getting the efficiencies out in terms of productivity and in terms of logistics also. And I think they are best placed to take advantage of the consolidation. They are aggressive when it comes to acquisitions as well. So I would put these two companies high on the list.
Interesting. So cement finally makes the cut for Deepan. Got that, Deepan. Let's talk about another pocket of the market, where you have been cautious in the past. I'm talking about IT. And we know that large cap IT you don't like. There's no growth, so you don't believe in paying when there is hardly any growth. But what about mid caps? And this is where it's getting a little murky. Rima earlier was telling us about, I think there's some reports in the market about maybe Citi cutting back on how much it's spending on external IT vendors or contractors. Maybe that's why LTI Mindtree could be down. But even Firstsource, a lot of mid-cap companies that typically have had better growth rates than their large-cap peers, there's some pressure building up there as well. Anything you like here or anything where there's maybe an opportunity? Mid-cap IT.
See, Surbi, one of the best-kept secrets of the managements of software companies is they are not explaining how these GCCs are really creating a lot of competitive pressure for them and how that's going to impact the medium long-term prospects of all the IT companies, software companies. Because if you see the entire growth coming in the software sector, the hiring or the renting of new places, a lot of it is being done by GCCs. So maybe there's a kind of a disruption taking place within the industry where instead of giving contracts to Infosys, TCS, or any IT company, the Fortune 500 are going ahead and setting up their own captive development centers, and that is certainly impacting the performance of the listed players. So that's something which kind of worries me. And secondly, I think within software, you have to be extremely selective and go for players who have very strong domain knowledge or doing something different, like, for example, Persistent Systems, which has got a very strong presence in the technology segment, and there are good tech spending still taking place over there. Or a Coforge, I think, which has a differentiated marketing strategy, which is why it's still able to get so much of revenue going. And then I was very optimistic on the ERD space and the auto space like KPIT, Tata Elxsi to an extent, but I think one needs to be a bit cautious over there. So apart from one or two software companies, by and large, we need to be a bit cautious. And as I said, we are exploring the effect of these GCCs and what that effect is having on the overall software industry.
That's an excellent point and a point really well made. And I've seen this with my own observations across industry, including some of the larger banks as well and the larger MNCs when they are hiring far more than just simple it's not simple BPO operations anymore. I mean, they're looking at data scientists, they're looking at very high level programmers, coders. So yeah, there seems to be clear competition. It's a good point Deepan brings up.
Yeah, all the hiring surveys seem to point that for the last 18 months, 2 years, IT services hiring has slowed down while GCC hiring has ramped up to such a great extent. But the basic worry for the IT companies from last week has been that if US economy slows down, if inflation in the US is high, then what happens to tech budgets? Will they come under pressure? So that's reason number one. And today the news flow is that Citigroup, which is a large US bank, there is a TOI report and they're talking about reducing their dependence on external contractors. The word it uses is contractors and not vendors. They want to reduce their dependence on external contractors from 50 to 20%. They want to beef up their internal tech team. by hiring more people from 48,000, bring that up to 50,000. And the key reason is regulatory, because in the past they've had to pay fines for not adhering to data governance standards. There have been a penalty paid for fraud. So therefore, they want to focus more on their internal tech team. Now, the question is this money which is going to be taken away from external IT vendors? If that is the case, then companies like LTI, Mindtree and many others, even like a TCS, Infi, Wipro, no company discloses the client details, but analysts I spoke to said that for LTI, Mindtree, Citigroup is their top 2 client, but even others, large IT companies, work for Citigroup. So there could be some vendor consolidation if they're planning to bring down their dependence on external vendors. Some companies may lose wallet share in the process. But if they're reducing the dependence on subcontractors, then it's unlikely to have much of an impact. But anyway, the sentiment for IT has been so muted and bleak since last week. I think the Nifty IT index was down, 4.5% last week. So this news flow is certainly not helping. But let's talk about Ola Electric, because that's the big loser today after a vehicle registration company, Rose Merita Digital Services, is taking the company to NCLT. Parikshit joins in with more.
Well, yes, this is indeed an important story. Ola's troubles have been mounting. They face almost 10,000 consumer complaints, and this is with the Central Consumer Protection Authority. The government has sought more details on those complaints. Now, to top it all, their vehicle registration agency, there were 2 of them. One of them, Rose Merita Digital Services, they filed a case against the company in NCLT under Section 9 of the Insolvency and Bankruptcy Code for default of payments. They are saying that Ola Electric has not paid them 22 crore rupees for registering vehicles on behalf of Ola and also providing high security number plates to companies. Now, Ola is a direct selling model, and that's why they hire agencies to register their vehicles. Now, this is important. Why? Because first of all, Ola has had a string of troubles, including a dip in sales also over the past few months. Secondly, the Vahan data, or the Ministry of Road Transport and Highways data, indicates they sold only 8,600 vehicles in the month of February. The company claims, and they said this in a stock exchange filing, that they sold 25,000 units in the month of February. So there is a big gap. Now, one, according to motor vehicle rules, you cannot sell vehicles without registration. Secondly, even if you do sell without registration, it has to be a temporary registration, which is valid for a 1-month maximum period. So Ola also needs to explain whether the vehicles that they claim to have sold in the month of February and also now in March, are these temporary registrations? Are they doing them on their own? How are they going to go about doing registrations future? How will they explain this difference between what they claim as 25,000 units sold in the month of February versus 8,600 on the government portal? Also, 7,500 units sold in the month of March to date. So are these vehicles actually sold in February and are now being registered? So a lot of questions there for Ola as well. And perhaps all these factors may be impacting the stock price.
All right, got it. Thanks very much, Parikshit. So literally, yeah, you're right. Troubles are mounting for Ola Electric as well. Deepan, I mean, this has been a tough one right from the beginning. I mean, I think it's been several weeks and months now of parent pressure. Ola sub 50. What would your advice be if someone's still holding on to the stock? I mean, exit at every opportunity, or what would you say? Because there's too many clouds now surrounding Ola.
Yeah, that's right. I think very disappointing performance post-listing, and does raise a lot of questions. But, this is the reality of investing in equities. I don't track it that closely because I never liked the IPO or the business model as yet. And, not sure when the roadmap to profitability is, although the management says give us 3 or 4 quarters. Let's wait and see. I would say intuitively that these levels also one can exit out of the stock, but that's a very tough call to make because you're sitting on losses, So I think it's a very individualistic decision.
Fair point. Since we're on the subject of autos, Deepan, let me ask you about Maruti. It was pretty interesting. I was speaking to an auto analyst in the morning from BNP Paribas. Now, they're taking a call. The stock hasn't done anything, so they were expecting some revival, and that's a stock they're betting on. But the fact is that none of the headlines, none of the numbers are still good. Maruti has undertaken yet another price hike. It's their 3rd hike this year. I think it's a 4% hike again. And this at a time when sales are not moving. The registration data for March so far, first 2 weeks, suggests that PV registrations are still down 20%, 22% in fact, if I have the right number. So what do you make of the environment? I mean, big players like Hyundai, Maruti, would you look at these stocks at all?
No, Surbi, I think first of all, the disclosure, we are invested in Maruti, but long-term prospects are great. But I think the better stock in the auto industry would be M&M. They've been gaining consistent market share and now are the second largest auto company in India. They've overtaken Hyundai as well. And they're in a sweet spot because their models are doing well and they're in a category which is really where the growth is in the auto industry. And the other company, every time we talk about it, is Eicher Motors. And again, Nigel is not there. We'll miss him for that. So these are the two companies I think we are positive in the auto industry. But as a sector, I think one needs to be a bit cautious and maybe slightly neutral as well. Maybe brace ourselves for a couple of soft quarters. But then once the interest rate reduction starts to kick in, then you may see a reversal in the prospects and improvement in volume sales.
Street is also increasingly getting bullish on Tata Motors after the underperformance last year and in the beginning of the year. So today, HSBC has upgraded Tata Motors to a buy from a hold. Target price is at 840, so that's about a 30% upside from current levels. And the key triggers for the upgrade are reduction in discounts and warranty costs in JLR, recovery in domestic small CVs, and valuations too after the recent underperformance look reasonable. So today HSBC, but Sudarshan was telling us last week, even ICICI Securities and CLSA upgraded Tata Motors and they'd held that analyst call too. Dipan, quick word on Tata Motors. It's still not on your buy list in the auto pack.
No. Still too much of uncertainty around JLR, so it's best to avoid it.
There's also the other aspect of tariffs, right?
Yeah.
JLR, all cars are made in UK or the EU region. And we don't know, 2nd of April, tariffs go up. Although, I mean, one can argue and say that in that product category, that price segment, it doesn't matter. But cost could go up in that sense. Deepan, thank you very much.
BMW has actually warned of lower profit margins for this year because of tariffs. So I think this came out a couple of hours back. So therefore, IT analysts were watching KPIT Tech.
Okay, all right. Deepan, thank you very much for joining us and good speaking with you as always. We take a break here. We'll just come back after that. Just some good news for you, the viewer. Now, the business news leader is just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the app from the Apple Store or the Google Play Store. Or just scan the QR code now on your screen.
Attractively valued.
Welcome back. Well, just about 7 minutes to go before the day winds down. It's been a good, steady day so far with the mid-cap index outperforming the Nifty. We have Sudeep Bandyopadhyay joining in. Sudeep, good to have you on. You know, actually, even banks and financials overall have done really well. So, quick two-part question to you. First of all, what would your advice be to people on IndusInd Bank, whether existing shareholders who didn't sell out and are kind of, holding at higher levels, and those who are watching these events, watching the price damage and wondering if this is a buying opportunity? So specific advice on IndusInd Bank, and then anything else that you'll buy in financials.
As far as IndusInd Bank is concerned, I'm a little worried still. I think there is an overall scrutiny of the book which is going on and which should happen, and that's happening. So let us wait and watch where things stand. The problem is a bit complex, and we need to understand. Internal review has given a figure, but the external review needs to be completed, and only then we will know whether the problem is contained with that net impact of 1,500 crore, or there is more to it. So as far as I'm concerned, I would advise caution. But if you're an aggressive investor, want to take a bit of a speculative bet, then IndusInd does look great, because it's about quoting at 0.7 book or FY27 book. And I think it's definitely much, much cheaper than many other banks. The bank, the net worth is strong. Promoter has already expressed his intention to support if necessary. So under the circumstances, I think the challenge is not much, except we don't know what is the damage. So if you're a conservative investor, stay on the sidelines, keep watching. If you're an aggressive investor, go and buy. That is my suggestion. As far as BFSI is concerned, I do like SBI quite a bit. And at current level, SBI definitely merits a buying from a long-term investor's point of view.
Sudeep, on a lighter note, aggressive investors will be hard to find nowadays. They all become conservative investors, mostly.
Well, Prashant, I was meaning that somebody who is willing to take a bit of a risk.
I know.
But old habits die hard, na, Prashant? You were just saying, when will the momentum come back? Abhi bahut ho gaya. How long can you just keep buying a stock and looking at the price, and the price is not moving?
Yeah, no,
so it'll come back.
It'll come back, but I can tell you, the reason it is not coming back is because people are scared. You buy something, and more often than not, it's going down.
Yeah.
So that's why it's not as if people are not finding things interesting. It's just that, you're waiting for the other guy to jump in first, I guess, and show that maybe the market is ready to move on from this corrective phase. Sudeep, I don't know if you track IKS. When a lock-in ends and a 12-13% cut, I mean, who sells 6, 7, 8% lower? I mean, it started there and then continued to fall.
I think overall, this issue has become quite big. A lot of these institutional investors, so-called qualified institutions buy and with lock-in, and they just wait for the lock-in to end and exit. Also, I must say that this is a phenomenon which we are witnessing now, because overall the market has come down significantly, and some of these investors probably wanted an exit or a part exit quite some time back. They were just waiting for the lock-in to end, and I think that's the reason we are saying it's not that always we see this kind of reaction in good quality stocks. Or stocks where there is definitely long-term fundamentals, long-term structural benefit. But I think the circumstances are such that a lot of FIIs are waiting to sell.
Okay, by the way, I just want to point out that US futures are still a little shaky. And European markets as well are flat at best right now. So we don't have a very big risk-on trade playing out in the Western markets. Europe is flat. And the reason why US futures, at least for the time being, are a little measured is probably because of those comments that we had from the US Treasury Secretary, Scott Bessent, and he spoke on Sunday to the US networks, and basically he said that, what's there to worry? If there is a market correction, so be it. And sometimes we have to ensure that things don't go in an overdrive. In fact, maybe we can just play out specifically Mr. Bessent's sound bites, because that's something the market has heard very carefully, and maybe that disappointment is keeping a lid on US futures, at least for the time being.
I was with the Business Roundtable yesterday. I think it was 135 CEOs, and I talked to them about our plan. which includes tariffs, deregulation, and what I call reprivatizing the government and bringing down this incredible level of government spending. And one or two items with one trading block, I'm not sure why that's a big deal for the market. Look, that's the nature of these reciprocal tariffs, that all President Trump is asking is for countries to take theirs off. So we have identified some strategic industries, the steel, aluminum, likely autos, but everything else is up for grabs, and that's going to be a decision that's made by our trading partners.
Well, basically, the fact is that neither the US president nor the administration seems too concerned with the market fall, and that's what seems to be spooking investors. Sudeep, very quickly before we get to the close, any other buying idea?
I think like defense. I think, after a long time, I think defense does look very interesting. Globally, the rearmament is happening, and there is a lot of opportunities coming up in Europe, and particularly in defense electronics does look very good. Of course, we have BEL, which is a very good company, and they're doing well. Continuously, order wins are being announced on a daily basis. And beyond that, I think the opportunity which is staring them on the face is huge. And I think they are up for grabbing those opportunities. It's a well-managed company, so acquiring BEL at current level does make tremendous sense.
Yeah, absolutely. Sudeep, stay with us. We're going to just take a quick commercial break here, and we're going to come back to you as we wrap up markets. So 115 points higher on the Nifty. Nifty Bank ending higher, largely led by the private bank pack. Healthcare, pharma are two areas which participated in the upside if you want to look at sectors. What did poorly was FMCG as a space and the IT services index, which was also lower. And having said all of this, of course, market breadth left a lot to be desired. On my screen, 1,800 stocks were higher and about 1,100 stocks, 1,800 stocks were lower and about 1,100 stocks ending the day in the green. So that's the overall picture. A lot of names on the downside, but actually, one caveat is that volumes, if you really want to look at it, I think it generally also maybe a little low volume day. We'll get the numbers and compare it with the average. But in terms of volumes, what we saw, bulk of the volumes on stocks which were higher, even as advanced decline was negative. What was down didn't have too much by way of volume. Maybe just the top 5-6 names had volume. After that, lots of names lower, but on pretty very, very thinly traded in that sense, which was not the case on stocks which were higher. So here, much longer, 15, 20, 25 names with 5, 6, 10% gains with decent sized volumes as well. So that's the overall kind of take. But of course, lot moved, Rima.
Indeed. So just on the way down, you had stocks like MobiKwik, IKS, where the lock-in ended, and these stocks got hit very hard. MobiKwik ending with a cut of about 8.5%. IKS down 10%. Ola Electric, negative news, subsidiary being taken to the NCLT. So that is under pressure. On the way up, you had strength in a couple of these financial names. So Karur Vysya Bank in the mid-cap banking space had a gain of more than about 5.5%. KC International, the order win boosting the prospect, and Samhi Hotels makes it on the price and volume charts, and pharma on the whole also had a pretty good day with names like Dr. Reddy's, Cipla, Sun Pharma ending higher. That brings us to a close on this show, but don't go anywhere. On the other side is Markets Forward. Markets start the week on a good note this trading week, but ends off the day's high. FMCG stocks drag, pharma financials gain. The Nifty ends at 22,500. Sensex closes near 74,200.
And China's comprehensive plan to boost consumption brings a cheer among Asian markets. It unveils a slew of measures to increase income and stabilize the markets. Meanwhile, U.S. markets react sharply after U.S. Treasury Secretary Scott Bessent says that correction in the U.S. market are healthy and dismisses worries around fall in the market.
Shares of MobiKwik, IKS, SciLife under pressure owing to the expiry of the lock-in period for shareholders. Lock-in period of 7 companies ended today, freeing 19 crore shares of these companies eligible to trade in the open market.
Hello, good from CNBC-TV18. Your Quota Show, where we aim to get you all the key data points to gear up for the next trading day. I'm Vinny Motiwala. With me is Reema Tendulkar as well. Reema, good day coming in for the markets. We've started on a positive note as well, where Nifty is closing above the 22,500 mark.
Yeah, indeed. We had positive global cues to begin trade with. There was a rally on Wall Street. They rebounded. So we started off with strength. And the good part is Nifty, even by close, managed to hold on to the 22,500 mark. It did come off from the highs. At one point of time, the Nifty got very close to its 20-day moving average, which is 22,587. So from the opening highs, we did come off. But on the whole, you would say this was a steady trading session. Banks did well. Banks outperforming for the 3rd consecutive day, so that's a positive. The Nifty Banking Index ending with a gain of about 0.7%. Mid-caps did well. The mid-cap index also outperforming to some extent. The only disappointment is the advanced decline ratio, because when we started trade, we had about 3 stocks advancing for 2 stocks declining, and those 2 lines crisscrossed. And by the end of it, nearly 1,700 stocks declining for about 1,000 stocks advancing. So that was a bit disappointing. The financials, whether it's insurance, whether they're NBFCs, whether they're large private sector banks, all did well. So take a look at the top Nifty gainers today. So on that list, you've got an SBI Life, nearly 4% up, Bajaj Finserv, Axis Bank. So strong moves, Bajaj Finance ending nearly 2% higher. Pharma and metals. Nifty Pharma sectorally led the gains today. Metals did well, the Nifty Metal Index ending up. And on the way down, IT. The Nifty IT Index recovered from the day's low, but still, it underperformed. I think the Nifty IT Index ended flat, but as you can see, by about 12:15, a recovery started in Nifty IT Index, so it ended flat, but still underperformed.
Absolutely, but interestingly, Reema, a couple of names in the pharma side also. Actually, pharma saw a lot of buying interest coming in today. Do not forget, Nifty Pharma has seen a sharper fall in the recent times as well. So Nifty Pharma names, whether you look at Biocon, Dr. Reddy's, Granules, they were among the top movers in today's trading session. Nifty Pharma among the top sectoral gainer, ending with gains of more than 1.5%. Other than that, chemical stocks, that also saw a lot of interest, and we're seeing a lot of green coming in on the screen. So Coromandel International, UPL, Chambal Fertilizers among the names that were buzzing in trade, and cement stocks too obviously were some of those names which were seeing some bit of an interest coming in. So Dalmia Bharat, JK Lakshmi Cement, all of them saw a bit of a green on the screen today. But yes, that's how we saw the market setup looking like. But on that note, we'll get started with the first segment for the show today, and we have Vivek with us on the big ball, who's here to tell us which are the important stocks that were moving in trade today and the movers for today. Vivek?
Well, thank you so much for that. Again, a session where you actually saw the advanced decline ratio to be quite strong, broad end of the markets doing quite well. Amongst the gainers, something that you just alluded to, the entire pharma pack saw a bit of a bounce. You've seen a significant sell-off on back of tariff worries, but today you saw a significant amount of bounce back from the intraday lows. In fact, Dr. Reddy ending almost 4% higher as far as the entire pharma pack was concerned. Some of the other names, names like Biocon too, did quite well in the session. The other stock on the list is KC International, an order win share coming in, a company on track to go ahead and meet the FY25 order inflow guidance of close to 25,000 crore, almost 35 to 40% jump as far as FY24 is concerned. Back of that, one of the top gainers as far as the NSE 500 index was concerned. This entire cement pack, remember, last week fell on worries and as well as the derating on account of taxation coming in as far as limestone mining was concerned. But today, the entire pack, Shree Cement, Ramco Cement is the name that we're talking about, Dalmia Bharat, all of them rebounding quite sharply in the session today. Kirloskar Oil Engines for the other stock on the radar. Motilal Oswal came out with an interesting note. They expect demand to pick up as far as the HP diesel gensets are concerned. On the back of that, almost 2.5% higher. And Muthoot Finance, one stock that continued to see significant sell throughout this trading session, was Muthoot Finance. This on the back of the fact that the AUM of the gold loan business crossed almost 1 lakh crore. Along with that, prices still remaining quite strong. Amongst the list of laggards, something that you just alluded to, LTI Mindtree, one of the key clients, Citigroup, going ahead and saying that they're looking to reduce dependence on external IT vendors. Back of that, stock ended lower by 2.5%. Firstsource Solutions, again, mid-cap IT under pressure today. Select names saw much more selling pressure. Firstsource down almost 8%. And lastly, IKS, something that we'll just discuss later as well. There was a share lock-in that will be ending tomorrow. Almost 2% of the equity now eligible for sale. Under the back of that, IKS too saw significant selling pressure today.
Thank you very much for that, Vivek. Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital, and Jay Thakkar from ICICI Securities are with us on the show. Gentlemen, afternoon. Jay, let me start with you. Good day today, fairly steady. What is the setup looking like for tomorrow, the rest of the week?
Good afternoon to you, Rima, and good afternoon to Vinny. Well, overall, I would say that yes, the start of the week has been positive. For the last week, we saw Rima being a truncated week. Markets more or less traded quite sideways after a strong bounce back initially. That is, at the start of the month, which we saw Nifty bounce back from those 21,960 to 22,000 levels until 22,700 plus levels. And thereafter, we saw some profit booking from the higher levels and consolidation for the entire week. Now, this start indicates that there is a very high chance of a breakout on the upside from this consolidation of a week or so on the Nifty, which can help Nifty to bounce back until 22,800 to 23,000 levels, which is also a house view that, we can see a bounce back till this upper end of the range, which was earlier acting as a support, now might act as a resistance, but then those levels can be tested. Also, if you look at the derivatives data, Rima, then, the PCR has improved in almost all the indices. If you see from Nifty, Bank Nifty, Nifty has been relatively outperforming, when the PCR has jumped to 1.34. Else, there has been a good put base now, which provides the comfort on the long side, at least for a bounce back until, 22,800, 23,000 levels. It's just that, a couple of sectors like Nifty Realty, Nifty Infra, Nifty IT, as you were also mentioning, are underperforming and are not able to bounce back. Also might be, Nifty Auto. These are the couple of sectors which are not participating. Else, if we look at the major names like, banking, financial services, Reliance, maybe Kotak Bank from the private sector bank. These are all the stocks which are really looking positive and might have Nifty, inch higher. And globally, we have seen the volatility cooling off a bit. Here to the IVs or India, which has been consolidating between 13, 14. The crude has dropped. The XY has pulled off quite a lot from the highs. So this all evidences makes a strong case for a bounce back till 22,800 to 23,000 until the recent lows are held.
Okay. Sudeep, what is your thought coming in on the market side as well as in terms of the pharma sector, which has seen a bit of a pressure in the recent time as well. We've seen that fall coming in, those uncertainties, and there was a bit of a jitter. Today, it's a different story for Nifty Pharma, right? Top sectoral gainer. We are seeing gain across the board coming in. Your thoughts here?
We have to still be a little careful as far as pharma is concerned. There is there's a huge amount of talk going around on around the tariff thing, and if there are tariffs, of course, long term nobody benefits, and I think it is not in the interest of US. But the reality is tariffs are going to probably come. And if that happens, I think initially, at least the margins of the pharma companies, Indian pharma companies, which are manufacturing in India and exporting to US will get depressed in a significant manner. Under these circumstances, one has to play pharma. I think better to focus on domestic focused pharma companies or pharma companies which have a significant manufacturing facilities in US. So, in both the categories, if I look, I think my favorite has been Mankind Pharma, 95% domestic business, or Piramal Pharma, which also valuation-wise does look attractive and which has a significant manufacturing base in US. Of course, the CDMO business is doing well, hospital generics doing well. So there are a lot of positives on Piramal Pharma, but more important, under the circumstances with tariff sword looming large, I think both these companies do look good from my point of view. If you're not a too risk prone an investor, if you're not an aggressive investor.
Got that. That's been your mantra today, right? Aggressive investors can go out there and buy some shares. So we'll get your view on stocks like MobiKwik, IKS, Sai Life, because they tumbled as their lock-in period ended today. Hormus has compiled the data. There are 7 companies where the lock-in period ended today, and stocks got hit, Hormus, to say the least.
Oh, yes, they did. And most of those reactions came in stocks like IKS and in MobiKwik as well. But we start off with that, right? 19.5 crore shares, 7 companies. Of course, you need to mention the fact that the lock-in period ending does not mean that all of those shares will be sold off in the open market today itself. Of course, they just become eligible to be traded. And a lion's share of that 19.5 crore shares come from Vishal Mega Mart. There's around 15.5 crore shares to one company itself, 3% of the outstanding equity, and it's one of those recent listings that is still continuing to hold above its IPO price. You mentioned MobiKwik, that was one of them that has seen a significant price damage, and here too, 46 lakh shares, 6% of total equity. The stock is down almost 65% from its post-listing highs. Ajax Engineering too, 3% outstanding. That stock too is trading below its IPO price. IKS as the one biggest underperformer of the day today among those whose lock-in period was ending. That stock too is trading well below its listing price, now tumbling towards its IPO price. And around 2% equity became eligible to be traded here itself. Sai Life Sciences saw 4% equity. EMS saw 20% equity. And EMS is one of those few names that despite almost correcting 40% from the peak, is still up 3x from its IPO price. And Ratnavir Precision too, another 20% outstanding, becoming eligible to be traded. That stock too has halved from its post-listing high. So interesting names there. It'll be interesting to see how these stocks move from here on with the price damage being done in today's session.
Okay, Hormas, thank you so much for that. Will be surely interesting to see how they move on from here. Jay, just coming to you as well, any of the names that Hormas has mentioned, I know that, they are recent, there's not much in terms of charts that you have, but where you think that's something that you would look at in terms of an interest right now, any of the names?
No, I mean, these stocks really don't have much of the data for me to read into. Hence, I would not be able to comment on these stocks.
Any of these stocks, Ratnavir, IKS, MobiKwik, Vishal Mega Mart, they've all corrected from their highs. Any of them look interesting for a conservative and an aggressive trader? Let's go with conservative first. Sudeep?
Well, okay.
I do like Ajax Engineering. I think the business is solid. And long-term, from a long-term investor's point of view, this looks good. Yes, if you have a bit of a risk appetite, because correction may be deeper at some stage, but you can't wait for that. You can start accumulating this particular stock. MobiKwik, on the other hand, has significant potential, but I believe that there is some further correction possible here. So keep watching. At some point of time, MobiKwik will also be worth buying.
Okay. Surely, MobiKwik will be worth buying after some correction. That's the word coming in there. But let's move on. And shares of Ola Electric, that also slipped in trade after a vehicle registration agency that's Rose Mehta Digital Services sued the company for defaulting of the payments. Parikshit is joining in with us to give us more details on this one.
Well, Ola Electric's stock has been under pressure for multiple reasons. One, the Q3 loss had widened to 564 crores. They also face 10,000 consumer complaints with the CCPA. Those are still under investigation. They've been seeing a dip in deliveries. And now there is this issue, this legal case that one of their vehicle registration agencies, Rose Mehta Digital Services, has filed against Ola Electric for non-payment of dues to the tune of 22 crore rupees. Now, all of this began on the 19th of February with Ola Electric saying that their Vahan registration numbers, vehicle registration numbers in the government portal are going to be impacted because they are renegotiating their contracts with their 2 vehicle registration partners. They sold around 8,600 units in February as per the Vahan data, as per the vehicle registration data of the Ministry of Road Transport and Highways. But Ola itself claimed in a stock exchange filing that they've sold 25,000 vehicles. Now, this definitely does raise some questions because as per the motor vehicle rules in India, you cannot sell a vehicle without registration. Secondly, if you do sell a vehicle without permanent registration, it has to be a temporary registration for a maximum period of 1 month. And after that, an extension has to be applied for with the RTO. Has all of this happened? Were these 8,600 vehicles that were sold in the month of February, as per the Ministry of Road Transport data, were they sold and registered through Ola on their own or through their agency? What about the rest of the vehicles that Ola is claiming? They're saying 25,000 vehicles sold. So were these temporary registrations? That is something that Ola needs to explain. Now, if we add up the Vahan data for February and also for March, in March, they've sold around 7,500 vehicles as per the vehicle registration data till the 11th or 12th of February. So if we even add up this data, it doesn't come to 25,000. So there are some questions there for Ola Electric as to how they are going about registering these vehicles. How long has the temporary registration been going on for? Have they applied for extensions? When are they going to hire an agency for registrations? Are they currently carrying out registrations on their own? So a lot of questions there for Ola Electric as well.
Great, thank you for explaining that so well for us, Ola Electric. Now, the other stock under pressure today was LTIMindtree. And here, these are reports that we picked up from TOI, where they said that Citigroup, which is one of the world's largest banks, they're planning to reduce their dependence on external IT contractors. Instead, they want to strengthen their internal tech teams by hiring more people on their payroll, on the company's payroll. So increase that, beef up their internal tech team from 48,000 to 58,000 by the end of the year. And the key reason, the report goes on to say, is because of regulatory concerns. The company, Citigroup, has had to pay fines for breach of data governance standards. There have been fraud, etc. So therefore, the street was a bit concerned because a large client like Citigroup may have to bring down their tech dependence. If that is the case, then LTIMindtree could be under pressure because analysts I spoke to said LTIMindtree is one of the top 2 vendors for Citigroup, but even the other large IT companies do work for Citigroup. Here the question is only whether it's vendors or contractors. If it's subcontractors, it's unlikely to be a big hit, but if it is vendors, which they're cutting back on, then there could be some vendor consolidation deals. Some companies may lose market share, and therefore it's a bit of an overhang. And what if this trend of doing more work in-house spreads to other companies? Then the pie is only shrinking. And this comes at a time when anyway the street is concerned about growth slowing down in the US economy, therefore tech, large companies in the US tightening their tech budgets. So anyway, that fear, that overhang of weak macros is plaguing IT companies, and this came in as an additional blow. Sudeep, quick word on LTIMindtree. How would you read all the, it's news flow right now? Would it be noise or would you be worried?
Well, I'm worried. In fact, worried not because of the Citibank news flow, more because of what's happening in US. I think there's definitely a possibility of slowdown, and US slowdown is always bad news for Indian IT companies. Most of them have 50%, around 50% plus business coming from US. And if US faces a slowdown, obviously the business prospects, order wins, order enhancement, order execution, everything gets into a problem, margin gets into a problem. On top of it, as you rightly were mentioning, news like what we are getting from Citibank is definitely very, very worrisome because if, instead of outsourcing, insourcing becomes the trend in US amongst large corporates, that will be very bad news for Indian IT companies. So we'll have to watch this space, and it's better to be careful. Instead of focusing on, some of these companies, we should focus on niche IT companies. I do like Coforge quite a bit. One can look at, some of these specific focused IT companies. RateGain Technologies has lost quite a lot, but still it looks attractive at current levels. So some of these focused companies needs to be looked at rather than generic IT companies.
Okay, let's move on and pick up SpiceJet now. That surged in trade, and this came in after promoter Ajay Singh sold 1.15 crore shares via block deals. Now, SpiceJet has said that the fresh infusion will take place through conversion of 13 crore warrants into 13 crore equity shares. So, Darshan is joining in with us to give us more details on this one.
So on Friday, promoter and CMD of SpiceJet, Ajay Singh, sold more than 1 crore shares at a price of ₹45.34 per share, worth ₹52 crore. Now the question that time was why the promoter has sold stake. Now today the company has made another announcement that Ajay Singh will be selling up to 3.14 crore share. And the reason is another promoter, which is Spice Health, will be converting 13.14 crore warrants that it has into equity shares. Now to fund on the certain part of those conversion of warrants, Ajay Singh is selling the stake. Now, once this allotment is done, promoter stake will increase to more than 33%, basically 33.47% from current holding of 29.13%. And now, but if you look, apart from this announcement, if you look at the stock performance over the last few months, it has been underperforming its peers in the last 2 months. Basically, in 2025, the stock is down somewhere around 20%. And on the operational front, it has been underperforming Indigo. On the market share, in January, its market share was around 3.2%, which is down almost 250 basis points. So it has been underperforming peers on the operational front. But as far as this announcement is concerned, it's positive because the fund infusion of around rupees 300 crore will be made in the company.
Thank you very much for that. We also take the opportunity to thank both our guests for joining us today. We'll slip into a break. On the other side, we'll get to the top corporate voices along with the key market events to watch tomorrow. Stay tuned.
Do you worry today, Sabya, that we are at a point which is almost an existential crisis for a whole host of arts and artisans across this country? I mean, you were talking about the fact that this shouldn't be treated like a charity. It shouldn't be treated like a CSR project. What kind of interventions do you believe we need at this point in time to ensure that we keep the...
Welcome back. Let's get to the corporate corner, the top corporate voices of the day. Brigade Enterprises. Management says their portfolio is diversified across mid-segment. In addition, the company is getting more traction from the premium segment. Further, the management guides for sales to grow by 15 to 20% on a year-on-year basis. They're also quite happy with the equity position they're holding at the moment.
Second on our list is Patanjali Foods. The management says that the company will continue to target 4% margins in oil business and 8 to 10% in FMCG. Meanwhile, Patanjali's home and personal care business will grow at 15% year-on-year in FY26.
And it's time now to get you all the chatter from Dalal Street. Nimesh joins in as always. Nimesh.
Hi, Ramayana. So it's a strong day for the markets thanks to some very strong global cues, and India rallied part of it. In terms of sectors, private banks is where I understand there were strong buy flows, and pharma stood out very well despite the overhang of the tariff which might come on April. So that's the overall market. But in terms of individual stocks, the first stock on my list is Power Grid. Within the PSU name, this is one stock which has been consolidating off late, but I understand the buy flows have resumed. So expect high delivery volumes, and there was buying interest in Power Grid today. The second stock is Glenmark Pharma. For the last couple of days, that stock is buzzing in trade. I understand the city is anticipating some corporate development as well. Potentially a value unlocking is what I understand in Glenmark Pharma for one of its molecules. So that's the trigger there. The third stock is Varun Beverages. Again, the stock has been buzzing in the last couple of days. There are buy flows. And also, the street is anticipating very strong Q4 in terms of volume growth. Having said that, there is also a buzz that maybe the promoter entity is on a small creeping in the last couple of days in Varun Beverages. And the last is Dixon Technologies. Has been under pressure in the last couple of days on the back of sell flows. I understand some domestic mutual funds are sellers. And also, Goldman Sachs should have put out a note. They maintain a sell rating. And they believe that the upside looks limited. And the earnings is going to see a bit of a cap as well going forward. So that is the reason why Dixon has been under pressure in the last couple of days.
Okay, Nimesh, thank you so much for that. Surely interesting chatter coming in from the D Street front. But before we wrap up this edition of Markets Forward, we bring you the key events to watch out for in tomorrow's trading session. Vamakshi is here to give us all those details.
Well, good afternoon, Vinny. As far as corporate action is concerned, we'll be watching out for Castrol India. The company goes ex-dividend. Apart from that, lots of board meetings lined up as well. CG Power will be considering an interim dividend for FY25, while TARC will be considering modification in terms of its NCDs. Now, several interesting developments lined up tomorrow. Trump as well as Putin will be speaking as US pushes for Russia-Ukraine ceasefire. NASA also says that Sunita Williams and Butch Wilmore will be returning to Earth after 9 months. RBI will be conducting OMO purchase for an aggregate amount of nearly 50,000 crores. The Delhi government will be implementing Ayushman Bharat scheme. And lastly, US Director of National Intelligence Tulsi Gabbard will be visiting India and is likely to address the Raisina dialogue.
Thank you very much for that. And the big global event for the week will be Wednesday, the Fed meet. Thank you very much, Vamakshi, for joining in. That brings us to a close in this edition of Markets Forward. Thank you for watching.
Alive.
We don't need to do much because evolution will take care of itself. Because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to come in. And I personally think that AI in many sectors, especially in performing arts and art, will be very short-lived. Because after the age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people realize that the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings, then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do much. Evolution will take care of itself.
We certainly hope so.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18.
Hello and welcome to Business 360. I'm Ashmit Kumar and here are the headlines that we're tracking this evening. The Sensex and the Nifty gain after a steady session on the Lal streets. Nifty manages to hold above 22,500 mark. Rupee gains strength against the dollar. Shares of recently listed MobiKwik, IKS and Sai Life tumble after the end of the lock-in period for the IPO investors. The lock-in period is over for 7 companies, freeing up more than 19 crore shares. India's exports and imports see a sharp drop in February amidst the US President Trump's tariff wars. Trade deficit for the first 11 months in FY25 rises 17% to more than $89 billion. Tata Motors and Samvardhan Motherson are likely to bear the brunt of Trump's upcoming reciprocal tariffs as per a Moody's report. Moody's says that Tata Motors subsidiary JLR is exposed to potentially higher tariffs as their cars are manufactured within the European Union. Adds that Samvardhan Motherson generates around 20% of its revenue from the US. Maruti Suzuki to hike vehicle prices by up to 4% from April to offset the impact of rising input costs. This would be the third price hike this year. Tata Motors also announces up to a 2% price hike for its commercial vehicle segment. Shares of Ola Electric hit the lowest level since listing after a contractor seeks to initiate insolvency proceedings against the company. Rosmerta Digital alleges default in payments and moves the company law tribunal. Relief for Gautam Adani and Rajesh Adani in an alleged market regulations violations case that dates back to 2012. The Bombay High Court quashes a November 2019 Sessions Court order that refused to grant them relief. The High Court had stayed the order in December of 2019 itself, with interim relief being extended from time to time. Supreme Court agrees to hear the petition alleging lack of independence at the Comptroller and Auditor General. Claims that the CAG is favouring the ruling government and demands an independent selection panel to appoint the top auditor. US President Donald Trump says he will talk to Russia's Vladimir Putin on Tuesday about ending the war in Ukraine. Trump claims that negotiators have already discussed steps to divide certain assets. China unleashes a new stimulus plan to boost consumption vigorously. Retail, sales and industrial output data beat expectations. Top global CEOs likely to meet President Xi Jinping next week, according to a Bloomberg report. NASA astronauts Sunita Williams and Butch Wilmore scheduled to return home this Wednesday after being stranded at the International Space Station for nearly 9 months. A SpaceX capsule delivered 4 astronauts to the space station in what was a crew swap mission. Well, let's begin with a quick look at the day's market action. The Indian rupee gained some strength against the US dollar today. The rupee gained about 18 paise to end below the 87 levels against the greenback. The dollar index saw a strong rally over the last few weeks, and that appears to be losing steam, at least as of right now. Stock markets were largely steady in trade today. The Sensex gained over 340 points. The Nifty, meanwhile, gained 0.5% and managed to end above the 22,500 mark. Financial stocks gained in trade. The mid-caps outperformed the blue chips, with the index gaining over 330 points. And meanwhile, shares of recently listed MobiKwik, IKS and SciLife tumbled after the end of the lock-in period for the IPO investors. The investors have collectively incurred a loss of 17,000 crore rupees since their listing in December. The erosion in market capitalization from their peaks stands at 30,000 crore rupees. And meanwhile, oil prices edged higher after the United States said that it will keep attacking the Houthis, the Yemeni separatist militant organization, until the Iran-backed group ends the attacks on shipping. The latest airstrikes by the US killed at least 53 people, as per the Houthi rebels. Gold prices, meanwhile, firmed up as geopolitical tensions and economic concerns over the tariff war triggered by the US fueled safe haven demand. Gold has gained around 14% so far this year. Meanwhile, Bitcoin prices remain steady but hovered below the $84,000 mark. Now, India's wholesale inflation rose to a 2-month high of 2.38% in the month of February, led by a rise in costs of manufactured food items, vegetable oils and beverages. However, vegetable prices eased, helping offset some of the inflationary pressures. As per data released this week, retail inflation had eased to a 7-month low for the month of February. And also, India's exports and imports witnessed a sharp drop in February. Exports are down 11% and imports are down 16% in February. The trade deficit for this month stands at $14 billion for the period between April 2024 to February of 2025. The trade deficit between the two of that period has widened by nearly 17% to $89 billion. Imports, meanwhile, rose 7.2%, while exports also jumped 6.2% during the period. This comes at a time the US President Donald Trump has threatened reciprocal tariffs on all countries from the 2nd of April. This also comes at a time when the US government is trying to strike a grand trade deal with India, which pertains to zero tariffs on all goods except agricultural products. And well, speaking of the US president, Donald Trump has said that he has no intention of creating exemptions on steel and aluminum tariffs. He added that reciprocal and sectoral tariffs, including those on autos, will go into effect on the April 2nd. Remember, Trump imposed 25% tariffs on steel and aluminum imports from March of 12th. Now, meanwhile, Treasury Secretary Scott Bessent has dismissed concerns over a stock market sell-off amid Trump's tariff threats, saying that markets will do well over the long term.
I would have made it April 1st, but you know what April 1st is? April Fool's Day. I figured, I don't like doing it, but I made it April 2nd. But it's a liberation day for our country, because we're going to be getting back a lot of the wealth that we so foolishly gave up to other countries, including friend and foe. If they're charging us, we're charging them. It's no longer they charge us and we don't charge them.
I'm not concerned about a little bit of volatility over 3 weeks, because if you look over the long term, the reason stocks are a safe and great investment is because you're looking over the long term. If you start looking at micro horizons, stocks become very risky. So we are focused over the medium long term, and I can't tell you that the market is going to go up today, tomorrow, next week, but I can tell you that if we put proper policies in place, it's going to lay the groundwork for both real income gains and job gains and continued asset gains.
Well, tariffs is clearly the buzzword there. Now, Tata Motors and Samvardhan Motherson are likely to bear the brunt of Trump's upcoming reciprocal tariffs, according to a Moody's report. Moody's has said that the impact depends on how much of the tariffs are passed on to the customers. Parikshit Luthra is joining us now with more details. Parikshit, clearly that's the buzzword. That's the big trigger that everyone's watching towards the US for. Tell us about the likely impact.
So Moody's ratings agency has done an analysis on the impact on South and Southeast Asia because of the reciprocal tariffs from US, which will come into effect on the 2nd of April. And they've said that significant domestic operations in companies in South and Southeast Asia will provide a buffer against any negative impact of US reciprocal tariffs. But sectors which could be most impacted here are automotive, steel, chemicals and business services, and they have the highest exposure to US tariffs. Now, coming to India, Samvardhana Motherson, they could likely face cost increases and they may have to pass on costs to customers. This is because they're generating 20% revenue from the United States. But the report also goes on to say that Samvardhana is undergoing a massive diversification strategy to make sure that they don't have any major reliance on one particular jurisdiction. When it comes to Jaguar Land Rover, which is owned by Tata Motors, the report says the decline in demand from the US for JLR could be a credit negative. JLR would be exposed to higher US tariffs on EU or UK produced cars, because these are the two regions which produce cars, JLR cars, for the United States. Now, when it comes to TCS and Infosys, the report says that both these companies are better positioned to absorb increased immigration and visa costs. They won't face any impact of tariffs, but there is an impact because of higher visa costs. Business service providers are vulnerable to changes in US immigration policy. However, Indian IT companies have been increasing onshoring in the United States, and their good profitability gives them a buffer. When it comes to Reliance Industries, the report points out that strong balance sheet can absorb potential declines in demand or reduced profits, but also they could be indirectly exposed to escalating trade tensions. RIL exports around half of its production in oil to chemical segment. This is what the report is saying. So clearly there are some risks to Indian companies across these sectors, but hopefully strong profitability and strong balance sheet will provide a buffer.
Right, Parikshit, thanks a lot for breaking that down, the impact of what those tariffs could be like. But staying on the subject, US Director of National Intelligence Tulsi Gabbard held bilateral talks with Defense Minister Rajnath Singh in a bid to boost defense ties between both the countries. The two leaders discussed a wide range of issues, including defense and sharing critical information. This comes a day after Gabbard met National Security Advisor Ajit Doval. Gabbard's two-day trip to India marks the first senior-level visit from the Trump administration to India during his second term. Speaking to ANI, Gabbard defended Trump's reciprocal tariffs, citing that both India and the US are working towards finding good economic solutions.
There is an opportunity here to see more potential for the strengthening of our economic relationship. And I'm glad to see that they're looking at it in a more positive light than just one that is focused in a negative way when we look at tariffs. Obviously, Prime Minister Modi is looking out for what is in the best interests of India's economy and the opportunities available for the people of India. Similarly, President Trump is doing the same for the United States, our economic interests and the interests of the American people. So what I see as a great positive is that we have two leaders who have common sense and who are looking for good solutions.
Now, shares of IndusInd Bank surged in today's trade after the Reserve Bank of India assured customers that the bank is well capitalized and financially stable. The stock had ended 28% lower last week. It had disclosed an accounting discrepancy worth 2,000 crore rupees last Monday. Over the weekend, the RBI directed the bank's board to complete all remedial actions during the ongoing quarter and ensure necessary disclosures to stakeholders. And the Bombay High Court has discharged a case of alleged market regulation violation against Gautam Adani and Rajesh Adani. The case was pertaining to alleged market violations amounting to 388 crore rupees. Remember, in 2012, the Serious Fraud Investigation Office had initiated legal proceedings against Adani Enterprises Limited and its promoters. The agency accused them of criminal conspiracy and cheating. The Adanis moved the Bombay High Court after a sessions court in November of 2019 refused to give them relief. The High Court stayed the order in December of 2019 itself, with interim relief being extended from time to time. And SpiceJet shares surged after the company announced that its CEO and promoter Ajay Singh will infuse 295 crore rupees into the airline via its promoter Spice Healthcare. SpiceJet has said that the fresh infusion will take place through the conversion of 13 crore warrants into 13 crore equity shares. This will increase the consolidated shareholding of the promoter group in the airline to 33% from 29%. CEO Ajay Singh will dispose up to 3.15 crore rupee equity shares to help Spice Healthcare partially fund the allotment of equity shares. The NCLAT has deferred the hearing on the competition watchdog CCI's case against WhatsApp's 2021 privacy policy. The tribunal cited the upcoming digital personal data protection rules for its decision. The government has released the draft rules for consultation. The NCLAT said it will hear the case after the notification of these rules. Remember, the tribunal stayed the CCI's earlier order barring WhatsApp from transferring user data to Meta for 5 years in January of 2025. Maruti Suzuki will hike vehicle prices by up to 4% from April to offset the impact of rising input costs. This would be the third time that the company has increased the cost of its vehicles this year. Tata Motors has also announced that it will hike prices by up to 2% for commercial vehicles. Sudarshan Kumar is joining us now with more details. Sudarshan.
Two auto companies that have announced price increase today are Maruti Suzuki and Tata Motors. Maruti Suzuki has announced a price increase by up to 4% and that would be effective April 1. And Tata Motors has announced a price increase by up to 2% for its commercial vehicle segment, and this too will be effective April 1. So first talking about Maruti, it's the third price hike in the recent past. The first price hike recently was announced by Maruti in December 2024, which was effective January 1, and the second price increase announced in January was effective Feb, and today's price increase announcement will be effective April 1, and the price increase by Maruti has been by up to 4% each in the last 3 times that company has taken a price increase. So why the price hike has been taken by these companies? As per companies, price has increased for certain products, and that's the reason these companies have taken a price increase. But the question is, apart from an increase in price of certain products, are the falling sales also one of the reasons of the price increase? Because if you look at the February wholesale data, sales were largely below estimates, especially for the entry-level segment, not only for 4-wheelers but also for 2-wheelers. Especially for Maruti, Espresso and Alto's sales in February wholesales were down 30% each. Now, retail data for the first 2 weeks of March also suggests that demand remains under pressure. Now, talking the segment-wise, in the first 2 weeks of March, registration of two-wheelers has been down 16%. For passenger vehicles, registration is down 22%. And for commercial vehicles, it's down 15%. Now, company-specific data for Hero Moto and Bajaj Auto, registration is down in the range of 14 to 17%, while for TVS Motor, it's flat, and Royal Enfield has seen a minor increase of 2%. In the passenger vehicle space, Maruti, Tata Motors and Hyundai have seen a decline in the registration in the range of 24 to 32%, with Tata Motors being the biggest underperformer, and for M&M the decline is 8%. In the CV space, similar trend was seen. Tata Motors has seen a decline of 14%, and Ashok Leyland, it's a decline of 11%. So we'll have to see how the next 2 weeks pan out. Also, if other companies too follow Tata Motors and Maruti and announce a price increase.
Now, shares of Ola Electric tanked 8% in trade to hit its lowest price since listing in August of last year. This came a day after a vehicle registration agency, Rosmerta Digital Services, sued the company for defaulting on payments. It has filed a plea in NCLT Bengaluru. Rosmerta also petitioned to initiate corporate insolvency proceedings against the e-scooter maker. Parikshit Luthra now joins us with more details. Parikshit, give us a sense of the concerns that have been raised before the NCLT and what the response of the company has been.
You know, multiple factors playing as far as Ola Electric goes, and this has really been weighing on investor concerns. Now, number one, the company's net loss had widened to 564 crores in Q3. Then it has yet to achieve profitability. In fact, the company and its founder has said that they will be EBITDA positive when they achieve a sales milestone of 50,000 vehicles per month. Currently, they're not close to that mark in any way. Then you have at least 10,000 consumer complaints with the Consumer Protection Authority, and the CCPA has asked for more information on that front. Then overall, a dip in sales as well. And now you have a legal case which has been filed by Rosmerta Digital Services Limited, which was the vehicle registration agency for Ola Electric. Ola Electric has direct sales. It does not sell through dealerships, and therefore they had hired this agency to register vehicles and also provide high security number plates to customers. Now, Rosmerta claims, and under the Section 9 petition before the NCLT Bengaluru bench, they said that Ola Electric has not paid them dues worth 22 crore rupees over the last few months, and therefore they have initiated these proceedings. There are two pleas that have been filed by Rosmerta, but there is also a larger issue. Ola on the 19th of February had said that they are renegotiating contract terms with their vehicle registration agencies, and therefore vehicle registrations for the month of February may be impacted, and this will be normalized in the next few weeks. Now, as per the vehicle registration data from the government, there were 8,600 vehicles sold by Ola Electric in the month of February. Now, you cannot sell vehicles as per rules without permanent registration or temporary registration. If these vehicles have not got a permanent registration, then they have to be temporarily registered, at least for a 1 month period. That is the maximum period for a temporary registration. Ola has said that they have sold 25,000 units in the month of February. So the question that arises, if 8,600 shows up on the Vahan portal as permanently registered, how are the rest of the vehicles registered? Were these temporary registrations? Ola has yet to answer that question. Also, if you look at the month of March, for that matter, the sales as per the registration portal of the government is 7,700 units. If this is happening, then is this are these sales numbers for actual February sales which are now being registered in the month of March? So several complicated questions there for Ola Electric, which they need to explain and also tell us how they are actually now registering units or vehicles for customers who are buying their scooters.
Indeed, Parikshit, thanks a lot for that. Clearly, some tough questions await Ola Electric. The case we're given to understand is likely to come up in the space of this week. Moving ahead, the Supreme Court has issued notice to the centre on a plea challenging the government's power to appoint the Comptroller and Auditor General. The PIL has sought an independent selection panel to appoint the CAG. The court has sought for a response from the centre. The plea also argued that the CAG is tasked with auditing and is favouring the centre. Well, time now for a short break, but don't go anywhere. The news and updates will continue on the other side.
CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
The other problem is I'd like to see the market do better on a day when Trump is talking about tariffs. I've come to the conclusion that any day without Trump talking about tariffs is a good day for the markets. Well, I think a lot of us on Wall Street are disappointed with Scott Bessent. We thought he was one of us. We thought he was a market guy and that he understood that markets mattered. But now he's kind of dismissing us. He's not one of us anymore. And they're kind of like messing around with nitroglycerin. This is very, very dangerous to basically tell people that the administration doesn't care very much if we have a recession, because the short-term pain is going to be for long-term gain. This time around, the Fed has indicated quite explicitly there are no hurry to lower interest rates. They think the economy is still resilient. Meanwhile, they have all the uncertainty as the rest of us do with regards to tariffs and whether tariffs might boost inflation. And the last thing they want to do is lower interest rates.
On a bottom-up basis, now I find a lot of companies that look very interesting on valuation. So I think bulk of the damage is done. From a medium-term perspective, I think one should be constructive and do some bottom-up idea picking here. In the small and mid-cap space, there are plenty of domestic consumption-oriented stocks which are trading at extremely attractive valuations with very solid balance sheets and free cash flow profiles. One has to just look deeper. Unfortunately, I'm not in a position to share names. The one space that I think we should all pay a lot of attention to are the financials. I mean, financials are really very, very attractively valued.
CNBC TV18, the Policy Bazaar Insurance Show.
Welcome back to the Policy Bazaar Insurance Show. Today we are joined by Ankur Kharbanda, Vignesh Sahani as well as Siddharth Singhal, and the point of discussion is the role of health and life insurance policy, how policyholders should maneuver their journey through these insurance products when it comes to lifestyle and carcinogenic diseases. The next question for Ankur again. How should one go about, determining the coverage amount for a cancer policy, given the high cost of treatment? And, what should be the journey? What should be those 2 or 3 points which a policyholder should keep in mind while, comparing insurers also when it comes to a coverage, premium that he pays for that coverage, so on and so forth?
No, thank you for asking. This is the most difficult question, which I meet a lot of, people, and they ask me about this question. And the cancer care treatment costs today are like skyrocketing. There are so many new treatments which are available. So if I have to really put it in a way for viewers to understand it, easily, I'll put it in 3 sides. One is assess the treatment cost today, which is what are the cancer treatment expenses, hospitalization, chemo, radiation, surgery, post-treatment care. Second, what we should look at is the non-medical cost. The third thing, which is very important, is account for inflation. Medical inflation is today, there are some data point which says that this is higher than the normal inflation, almost 1.5 to 2 times of the normal inflation starting in the early double digits. Which means you have to think about it. If today the treatment is, let's suppose, a 25 lakh rupees of cancer treatment can be different for different type of treatments. But 20 years down the line or a 30 years down the line, this could be a 2 crore treatment, or a 40 years down the line, this would be a 3 crore or a 4 crore treatment. So you have to think through that as well. There is a difference in premium when you are let's suppose if you smoke or alcohol consumption is there. My only request and suggestion to all of you is that please be transparent in health disclosures. If you are disclosing, there can be some premium change, but it helps. And that's what we should look, because at Niva Bupa, we are committed to ensure that our customers are taken care of in terms of the highest standards against all the critical illnesses. And we have a critical care policy which offers lump sum payout upon cancer diagnosis, allowing families to focus on treatment rather than the financial stress.
I just want to understand, what if during the term of the policy, someone, let's say, completely quits smoking or drinking or consumption of, tobacco in any form? Does that also have to be disclosed to the insurer? And does that also bring the premiums down for an insured person?
There is definitely an impact of quitting, which is a very good habit. If you are quitting this, we at Niva Bupa would really encourage people to do that. So if an individual quits smoking or drinking or tobacco intake, insurers may reassess risk level and adjust premium accordingly. But the only thing I want to talk about is this typically requires a sustained period of abstinence with the medical proof. It cannot be just for a month or so I'm doing it. It has to be a sustained period with some medical proof so that we are able to adjust premium as well.
Siddharth, I want to ask you something. What are the general survival period and the waiting period clauses when it comes to critical illness policies, and how do they really impact the claim eligibility?
See, critical illness policies do cover for a loss of income, which means, during the treatment of cancer, for example, it may take a couple of months, during which period the earning capability of the individual or of the family gets impacted. And critical illness policies do offer that lump sum payout for the family, for the individual to go for the, that loss of income. So I think, when should a person buy a critical illness policy? I think, see, the first and the foremost thing is to buy a comprehensive health insurance policy for yourself and your family. Once you've already secured that, then you can additionally, purchase a critical illness policy, or it can be a part of the base policy as a rider as well, so that you can do it. Coming to your question specifically, so I think most of the critical illness policies have two type of, waiting periods, or two type of specific period that a person should look at. One is the survival period. This can range from 7 days to 15 days or slightly more, but usually most of the policies have 7 days or 15 days, typically, which means if a person is detected from cancer, then the person has to survive for said number of days at least for the claim to be eligible. That means if I buy a 10 lakh rupees policy, critical illness policy, if I get diagnosed with cancer, then 7 days the person has to survive for me to be eligible for 10 lakh rupees. So that's a very critical period that a person should look at while buying a critical insurance policy. The second period is the waiting period, the initial waiting period. In most of the critical illness policies, that starts from 60 to 90 days. I would say 90 days it starts with, which means if I buy a critical illness policy today, I could be eligible for the claim in case a cancer is detected only after 90 days. So if the plans do offer an option to reduce the waiting period, one should go for it. And I think that these two parameters impact tremendously what is your claim eligibility. A person may think that I have just bought a critical illness policy, but if the person does not survive for 7 days, then the claim obviously will not be payable. The person has to survive for 7 days and more. So I think these are very critical points while you're purchasing a critical illness policy.
No, absolutely. I mean, point well taken. Vignesh, I just want to understand, how do life insurance companies essentially assess the risk of lifestyle or carcinogenic diseases at the time of underwriting, as many policyholders would have bought the policy at a very young age. So how does the detection happen? How does the reporting happen? How from time to time do you keep the policy updated in terms of the risks that a policyholder might have?
If it's detected in the medical, then it's a no-brainer. But in case there is no medical required, maybe the sum assured is not as much, or the age is pretty young, then the insurance company is guided by smoking habits, drinking habits. So first up, I think this is all the information the insurance company asks for, and they're guided by this information.
One final question, and this would be for all three panelists. We've had a wonderful discussion so far, but as key takeaways for anyone watching the show, I mean, with the lifestyle, diseases that we spoke about becoming more and more prevalent and healthcare costs rising, insurance now is no longer an option, but it's become a necessity. As we wrap up, what would be that one advice which each of our panelists would be giving to the policyholders out there to secure a comprehensive coverage for their health? How can they make informed choices today that will safeguard their tomorrow? I mean, if I have to ask that question to start with, to Siddharth, how would you sum up, this in just one advice that you have to give?
Health insurance is no more, just a want. It's a necessity because healthcare costs have been rising and they'll continue to rise. And moreover, on that, we have, the gravity or the severity of the disease is also increasing. So I think my advice would be to buy a health insurance plan, a comprehensive health insurance plan as early as possible. When you are fit and fine, young and healthy, it makes a lot more sense, to buy it and obviously not wait for, some critical illness to happen at a later stage. And we hope nobody suffers from that, but that's the reality of life. Second point is, many people do buy health insurance, but then the sum insured that they buy at is grossly inadequate. Buying a 5 lakh health insurance policy in a city like Delhi may not serve the purpose. You may have a health insurance policy, but it does not serve the purpose. The good thing is a lot of health insurance companies now have offered 1 crore combo plans, which are very, very easy on the pocket, does not cost much, but give you a comprehensive coverage up to 1 crore. To cover for all kind of scenarios, and as we have spoken about in the in the show, that the cancer treatments can go upwards of 30, 40, 50 lakh rupees also, or even higher, depending on the criticality and the severity of the disease. So I think it's very, very important to buy health insurance as early as possible and buy a good amount of coverage.
Makes sense. I mean, if I have to put the same question to you, Ankur, how would you look at that?
This is an old phrase saying that प्यास तो लगनी है, so you dig a well much before that. Similarly, being a human, everyone will get into that phase, the bimar to hona hi hai. So it's very important that we plan for it and buy it as early as possible. Second is ensure that you are declaring personal and medical family history. Opt for a comprehensive cover. Don't just look at small cover offer. Take comprehensive cover. Understand the exclusions and waiting periods, as I spoke about on specifically on cancer, but overall as well understand that. And the last one is, I would say that utilize the wellness and preventive care benefits. They really help you to be better in your overall lifestyle as well. These are the few points I will talk about.
I mean, all points are so important in the sort of their hierarchy. So, of course, the same question finally from the life insurance side to Vignesh. Vignesh, finally, the last piece of advice from you on both those parts. What should you keep in mind? One advice, and how should you go about choosing a comprehensive life insurance plan when it comes to both these aspects, that is lifestyle and carcinogenic diseases?
I think you need to do an elaborate needs analysis with your financial consultant to determine how much insurance you need, how much money would your family need in case you're not earning for them tomorrow. It's not hit and run. It's a long consultation, financial consultation, which you need to do. You need to figure out how much insurance your family would need, what your lifestyle is, what lifestyle would you like them to have, and then take a policy which suits your budget. The second thing I would do is repeat the same thing for health. I think health insurance is very required, is very essential. And when it comes to critical illness, you can say that I have a health insurance policy, why I need a critical illness. But health insurance policy is a medical claim policy, is an indemnity policy. It is paid only on hospitalization. A life insurance proceeds go to your nominee in case, God forbid, something were to happen to you. But Yash, my experience has been that I've been in the industry for 30 years. And I've seen lifestyle diseases hitting people at a younger age every 5 years. Secondly, I think the chances of survival after a critical illness are greater than what it used to be some years back, because advancement in medicine, in technology, and in various aspects of that. So it's very critical to have some money to ride over the expenses, because there are chances that you might have a lifestyle disease or you might have a critical illness and yet survive.
The verdict is clear, and as I see it on my notes as well, buy early is one thing that you need to keep in mind. Buy enough, and most important, disclose all to your insurer. But with that, it's time to wrap up. A big thank you to all our guests for sharing their insightful views on this very crucial topic, and to our viewers, we will return back with a new episode, a new theme, a new subject, and more insightful discussions in the next episode. But till then, stay safe and stay insured.
CNBC-TV18, the Policy Bazaar Insurance Show.
Hello and welcome to News Center. I'm Parikshit Luthra. United States President Donald Trump is scheduled to speak with Russian President Vladimir Putin tomorrow to discuss ending the war in Ukraine. Shedding his usual hyperbolic rhetoric, President Trump sounded cautiously optimistic about ending the three-year war between Ukraine and Russia, where both sides have suffered heavy casualties. Trump said he will talk to Putin about land and power plants. He went on to say that both sides have already discussed dividing certain assets.
We want to see if we can bring that war to an end. Maybe we can, maybe we can't, but I think we have a very good chance. We'll be talking about land, we'll be talking about power plants, because that's up, it's a big question. But I think we have a lot of it already discussed very much by both sides.
You'll ask him.
Ukraine and Russia.
You'll ask him.
We're already talking about that, dividing up certain assets. Yeah. And they've been working on that.
President Donald Trump indicating that their power plants will be a part of ceasefire talks. Remember, Europe's largest nuclear plant in Ukraine's Enerhodar has been under Russian occupation since 2022. Russian forces also currently occupy roughly 20% of Ukraine's territory. Kremlin spokesperson Dmitry Peskov confirmed that the call with Trump has been scheduled for Tuesday. Peskov said Russia remains cautiously optimistic about the peace talks and has sent additional signals to Trump through his envoy Witkoff. Putin has already laid down what can be termed as maximalist demands for ending the war and may not be willing to compromise. Ukraine's retreat from a large part of Russia's Kursk region may further bolster Putin's position. We're now joined by Alexander Kara, former diplomat and fellow at the Center for Defense Studies. We're also joined by Ashok Sajjanar, former diplomat and ambassador. Thank you very much for being with us on the program, gentlemen. Let me begin with Alexander Kara. Alexander Kara, how do you see Putin's terms before he gets into these talks with President Trump? He's speaking about surrender of Ukraine's forces in Kursk, division of assets, including control over the nuclear plants in Ukraine, international recognition of Ukraine territory captured by Russia as Russian, limits on Ukraine's ability to mobilize, and security guarantees that EU will not come to the defense of Ukraine as well. How do you see all of these guarantees that Putin is asking for, and what would be Ukraine's red lines?
Well, certainly it's not going to fly. And to start discussing any peace talks, ceasefire, whatever, we should think about the basics of this conflict, and they are still there. Russia wants to subjugate the whole of Ukraine. It wants to undermine Ukrainian sovereignty and territorial integrity. So far it has failed by military means, so they want to use willingness of Mr. Trump to bring peace to Ukraine and Russia with aim to get this political settlement. And certainly we are not in position to agree on the capitulation with all those demands from Putin that will leave Ukraine defenseless for the further aggression, because it is the second time that Russia attacked Ukraine in 2022. The first time it was in 2014 when they illegally annexed Crimea and started a proxy war on Donbass. So certainly it's not a way how the other party is showing the willingness to find a compromise and to bring a lasting peace. So I do not expect anything good out of those talks. So far, we haven't heard of any Russian concessions to Ukraine, neither to the United States.
Okay, so these are reports that are coming in. Let me also go across to Ambassador Sajjanar. Ambassador Sajjanar, how do you see Trump's efforts? You just heard the soundbite, and he said that we can either have a possibility of ending this war, maybe we can't, but we are going to give this a good shot. And Donald Trump is pushing for a 30-day ceasefire proposal to be implemented as well. He wants to end the war. He wants to go down in history as a president who ended the Russia-Ukraine war, which really shook the world. Do you think there is a risk of accepting Putin's demands to a great extent to achieve this?
Yeah, that's what it would appear, Parikshit, because, as you very rightly said in your introductory remarks, that these seem to be the maximalist positions as far as President Putin is concerned. And, acceptance of all these demands would really mean a capitulation by Ukraine, because, as your other panelist has said, that this would be a subjugation of Ukraine. Because if Russia is demanding that, Ukraine should be demilitarized and there should be no, it should not have a significant army. You know, some of the numbers that are being mentioned is 50,000 forces. That means Putin can walk in any time at will, and it should be demilitarized. So, you know, it really is inviting Putin for a takeover of the whole of Ukraine. And this is definitely not something that would be acceptable to Ukraine or for that matter to Europe, because what Ukraine has been demanding is a fair and just and a durable peace. And what Mr. Putin has, the demands that he has put, I thought that these are demands that should be negotiated. You know, Ukraine will put its own demands and Russia will put its own demand. But this 30-day ceasefire would be an unconditional ceasefire so that the death and destruction of people on both sides that can stop. But if Putin is going to come up with these demands, that means Ukraine can also come up with these demands. And, you know, it'll be very difficult to get a ceasefire, you know, an immediate ceasefire if, you know, both maximalist positions are on the table. Correction.
Right. Alexander Kara, right now we're seeing Russia moving closer to ejecting Ukraine forces from Kursk region. This is what several international media reports are pointing out. Clearly, Russia seems bolstered with the kind of overtures for talks from President Trump in the last few days. What's going to be Ukraine's position? What are some of the guarantees that Ukraine would like to put on the table? And would Ukraine be committed to a 30-day ceasefire before any intense negotiations for actually ending the war can begin?
Well, we already agreed with the American side on this interim ceasefire for 30 days without any conditions. And actually, our delegation just abandoned one of the key positions that we hold before. I mean, the security guarantees even for the ceasefire. So yes, Ukraine is ready to commit its work to holding this ceasefire. And the Russians didn't reply to the Trump request. They haven't said that either they are interested or not. They are trying to put forward their unacceptable demands. Certainly for Ukraine, security guarantees means first and foremost NATO membership, because Russia is a major nuclear power, much larger in terms of demography and other resources. And that's why it's not possible for Ukraine to deter Russia in future if there is peace talks, if peace talks succeed. So that's why we are asking our partners to provide us with such guarantees. The second thing that we are asking during this ceasefire, that our European partners may deploy their troops on the ground, certainly not on the contact line, not to fight along with Ukrainians, but to protect Ukrainian skies with their air defense and their air force, that we can use our military to secure that the Russians are not advancing anywhere. And you mentioned the Kursk region. Certainly, it's important for Russia because for the first time since 1941, the Russian or the Soviet or Russian territory has been occupied. We are not going to annex it. We are not interested in any of the Russian territory, but we are withdrawing to the heights that will allow us to keep Russians out of Ukrainian region of Sumy, because Russians are trying to infiltrate with their saboteur groups and others, and they are shelling and they are bombing our cities, neighboring cities. So that's why we will keep our presence on the Russian territory as well.
All right. Ambassador Sajjanar, coming to you, do you think Europeans have enough leverage in these negotiations that are taking place, considering that Donald Trump is using a maximum pressure strategy? He's using the threat of tariffs against Europe on one front. J.D. Vance and several U.S. officials, including Donald Trump, have been publicly rebuking Europe for the kind of treatment meted out to U.S. in the past. So, current circumstances, does EU have enough leverage to help Ukraine?
You know, at the moment, unfortunately, it appears that it does not have much leverage, although Europe is trying to make itself relevant. You would recall that on the 28th February, there was the meeting, you know, that snafu that took place in the Oval Office. After that, on Sunday, 2 days later, there was the meeting that was organized, the summit that was organized by Keir Starmer. He's organized another virtual summit on Thursday, and then there's going to be another summit right now. So I think as far as the Europeans are concerned, they are in a hyperactive mode because they are making also their point of view very clear. Because, let me by the side also mention, that this whole thing of power plants and assets and all, that is a new thing that has come. Meaning, where do they come from? Who is going to control? Is it when Trump says that it is division of these assets, is it division between Russia and the United States, or is it division between Russia and Ukraine? So much of, confusion and lack of clarity. But that having been said, the security of Ukraine ensures and guarantees the security of Europe. And that is what Europeans are particularly worried about, that if Ukraine is left completely on its own, demilitarized and nothing to defend itself, then that is a challenge to the security of Europe also. So Europe definitely wants to be at the negotiating table. But so far, the discussions that have taken place, Parikshit, there has been no role. Even as far as Ukraine is concerned, there has been very little role. Meaning what Mr. Trump says that Russia and Ukraine have discussed these whole issue of division of assets and power plants. But I don't think we have really heard anything about it so far in the past. So we'll really have to wait and see what is discussed between Putin and Trump tomorrow. Parikshit.
All right, we've run out of time, but thank you very much, Ambassador Sajjanar and Alexander Kara, for joining us from Ukraine. Very important talks that are going to happen tomorrow. But as Alexander Kara was pointing out, it's very difficult for Ukraine to accept these negotiations because it's clearly Russia wanting everything. And as Ambassador Sajjanar Paul pointed out, this would really amount to the fall of Ukraine completely. So let's see how these negotiations go on. What about the 30-day ceasefire? And if there can be a roadmap that will be acceptable to Ukraine and Europe as well as far as ending the war goes. We're going to be taking a short break, but don't go anywhere. UAE is aiming to boost non-oil trade ties with India to $100 billion by 2030. An exclusive conversation with UAE's ambassador to India, Abdul Nasser Al Shali, up next. Stay tuned. Welcome back. You're watching News Center. Bilateral trade, excluding oil, between India and the UAE currently stands at $55 billion. To further trade ties between the two nations, UAE aims to boost that number to $100 billion by 2030. I caught up with UAE's ambassador to India, Abdul Nasir Al Shali, and began by asking him about the economic partnership agreement between India and UAE. Take a look.
So the last growth rate in terms of bilateral trade between the two countries that we have is around 15%. And that's the most recent data that we have. Today we stand at more than $80 billion in total bilateral trade. We are at more than $55 billion in terms of non-oil bilateral trade, and the target is to achieve $100 billion by 2030. So from the numbers, it seems like we are on a very good trajectory and we are right on track.
Right. Let me also ask you about your outlook on future areas of cooperation which UAE has identified.
So at the moment, we're looking at everything. We have the existing phase of cooperation. So we have done the food parks, and that has to do with food security. We're expanding the strategic petroleum reserve in India, and that's part of India's energy security. We're also looking at investments in renewable energy through one of our companies, Masdar, and that's in very specific states with very specific projects in focus. We're also looking at new and emerging technologies. So, for example, we're also involved in the supercomputing project in India. We are discussing genome sequencing. We're looking at the establishment of data centers. So basically, there's nothing that you can possibly think of in terms of cooperation between the two countries that is not already considered or is already in the works.
Right. If I were to ask you about 2025, would there be any specific areas which would get more attention, considering this is a very wide-ranging partnership? But if you were to zero in on 3 or 4 areas which would get more attention this year by the two nations, what would that be?
I'm a little bit biased, so I would say aviation is one of my key priorities to focus on. But we're also looking, for example, at space exploration in addition to the other fields that I have mentioned, emerging technologies, AI and AI-driven applications as well. So in a sense, you could think about this that we have looked at the traditional fields of cooperation between the two countries. We are still working on them. We are working on how can we make things better, faster, in terms of application and implementation and being able to get results. But at the same time, we're also looking at new and emerging technologies and other kinds of other fields of cooperation that we haven't been very active in, like defense, for example. The reason I mentioned aviation, obviously, it's not a traditional it's not a non-traditional sector. It's a very traditional sector, but because aviation is what generates and keeps momentum in all the other fields.
Right. So you mentioned aviation. How can we have a stronger aviation partnership, Ambassador?
Well, you know, everything starts by having a conversation, and I think. You know, we have been discussing a lot of things and we are able to achieve so many great things because we start with an idea and that idea gets discussed and then we form working groups or teams and they start discussing how we can make things work between the two countries. When it comes to aviation specifically, this conversation has not taken place for quite some time, which is why we don't see any significant increase when it comes to the bilateral rights between the two countries. And quite frankly, if we look at what's happening now, you have ticket prices that are going through the roof, which means that consumers get to suffer. The fact that there are so many underserved cities that could be better served. There are new airports being built, international ones. I'm not speaking simply about domestic ones, and those will need to have international flights landing at them and departing from them to be able to make economic and fiscal sense out of the investment and the money that was spent in the infrastructure when it comes to the construction of those airports.
Right. So you mentioned aviation as an important area of cooperation. Could you give us a sense of what UAE is seeking from India at this stage? What is on the table as far as a broader partnership or a win-win partnership on aviation goes?
So we understand that Indian carriers still need some time to better establish themselves in the market, to be able to refurbish, for example, the aircrafts, to be able to fly to new destinations, to pick up more traffic, and so on and so forth. And we also do realize that we're talking now about an increasing domestic demand, as well as not being able to serve the international demand, or the demand for international flights, to be more specific. And so for this to work out, we're not worried or in the business for one-time increase of 10,000 seats or 5,000 seats or 20,000 seats. It's not about that. What we're really interested in is to have some sort of a discussion at first, that a conversation has to take place. We need to agree on certain parameters to be able to grow that capacity between the two countries at a pace that the Indian government and the Indian carriers are comfortable with. And we did communicate in one way or the other a ratio that we think would create a win situation, and that ratio basically gives the advantage to Indian carriers for a few years' time until they establish themselves better, and towards a point where we don't need to discuss increased capacity, and that capacity can then grow organically as the demand grows. What we know for a fact is that if this does not happen, the whole idea of being better connected and people-to-people connection will be underserved, will continue to be underserved. The other thing that we have been also talking about is being able to serve Tier 2 and Tier 3 cities. I have been in conversation with our airlines for quite some time. They're very interested, they're very keen. In one of my visits to Andhra Pradesh, for example, the number that my airlines gave was more than 30 to 35 flights per week to 3 different cities in Andhra Pradesh. I was recently in Punjab as well, and the airlines were ready to do 30 flights per week starting tomorrow if we get things sorted out. Which means that since the government is very interested in the Udaan scheme of infrastructure, airports construction, making India not a single hub, but having multiple hubs in India, this cannot be done without having carriers from strategic, very friendly countries being able to also benefit from this, and by extension benefiting the UAE government, and of course getting those benefits passed on to the different sectors associated with aviation in India, like tourism, for example.
Right. So, Ambassador, if I can press that point a little further, you mentioned that you have recommended a certain ratio of formula. Could you give us a sense of what exact formula is that, and what kind of growth in capacity do you expect, or you may have recommended to the Indian government?
So the ratio that was floated, even though that doesn't need to be necessarily the starting point or the one that airlines would agree to from our end, but we started with 4-1, for example, and that this will be for a couple of years. After that, it can be reduced to 3-1, and then 2-1, and then 1-1, and then we agree on a certain percentage upon which the capacity will be increased gradually between the two countries, so that all cities, not only Tier 1 but Tier 2 and Tier 3, can be better served, and that tourists are able to move around India at ease, and that by extension would mean more spending when it comes to the Indian economy. It also means that consumer prices will start dropping, especially that now you don't need to only count on Indian carriers serving domestic market, but being able to have carriers from other places move passengers across all of India. Overall, when we looked at the numbers, if that capacity between the UAE and India, for example, doubles in 5 years' time, ticket prices will drop by 20%, which means great benefits for the consumer, especially Indian consumers.
Right. Good to hear that, Ambassador. Let me also ask you about UAE sovereign wealth funds. How keen are they on investing in India going forward?
Very keen. Conversations are always taking place when it comes to investments in India. As you know, ADIA has already established its fund in Gift City. Mubadala has its own conversations in India when it comes to investing in different projects. Masdar today, in its own right, is considered one of those funds, especially when it comes to renewable energy. ADQ is another one that is in the infrastructure and food security business, which is why the food processing parks are being established in Gujarat as a starter, and hopefully we will see this also in other states.
Right. Would there be any sectors where there is the greatest amount of excitement among UAE sovereign wealth funds, which you probably are most bullish about in India?
All sectors. So as I said earlier, we are not limited when it comes to sectors. So both traditional sectors, non-traditional sectors, emerging sectors, but also I know that this might sound repetitive. It's quite important to see all of this from the point of view of people-to-people connectivity and being better connected between the two countries. Because we can discuss a lot of things, we can invest in so many sectors and so many projects, but the matter of fact is if people cannot travel at ease between the two countries, then it's very difficult to be able to move the needle as much as we want to move it in all kinds of cooperation. I mentioned earlier that there will be a drop in prices when it comes to the tickets, and that obviously would make travel easier. But we're also talking about the fact that even when it comes to the UAE and when traveling for a business, I remember what the price used to be 10 years before coming to India, and I know exactly what the price is today. And I can tell you from experience, it's double what it used to be. And it will continue in this path until and unless we do something about it.
All right. So that was UAE's ambassador to India, putting a lot of focus on increasing air connectivity and the importance of doubling capacity between the two nations over the next 5 years, and how that could significantly bring down ticket prices, and also a big opportunity to serve not just Tier 1, but Tier 2 and Tier 3 cities in India as well. With that, it's a wrap on this edition of News Center. More news and updates continue right here.
Do you worry today, Sabya, that we are at a point which is almost an existential crisis for a whole host of arts and artisans across this country? I mean, you were talking about the fact that this shouldn't be treated like a charity. It shouldn't be treated like a CSR project. What kind of interventions do you believe we need at this point in time to ensure that we keep this soft power alive?
We don't need to do much, because evolution will take care of itself. Because I'll tell you, so we were at the age of influence, which is moving into the age of intelligence. AI is going to come in. And I personally think that AI in many sectors, especially in performing arts and art, will be very short-lived, because after the age of intelligence will come the age of wisdom. And when the age of wisdom comes in and people realize that the greatest gift to humanity is humans themselves, and we should not robotize our existence so much that we forget to be human beings, then people will realize that art and craft is going to be the most important expression of humanity. We don't have to do much. Evolution will take care of itself.
We certainly hope so.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now streaming live.
A 5-month-long correction that has shaved between 15% to 25% of the key indices here in India, and it has led to deeper cuts in the mid and small cap universe. For many Indian investors who are used to extremely shallow corrections since COVID, such a prolonged period of Indian underperformance has really been a bit of a bolt from the blue. Over the last 1 week, the selling has abated to an extent, but then sentiment as well as recovery are still very, very fragile, Nigel.
Well, that's right. The Nifty has recovered close to around 2 to around 3% from the recent lows with regard to that correction, but it's still 14% away from the peak. The problem is the mid and the small cap indices, they are still nursing steep losses, which are in excess of around 20 to around 22% odd. The market is now showing some signs of returning to form as valuations, well, they're a little bit more palatable. Crude and the dollar as well have cooled off, which is a tailwind from an India market perspective.
So the question is, that's the question we are going to ask to our big special guest on the show today, is that, is the worst over? Are we finally seeing light at the end of the tunnel? Hello and welcome to this very special conversation, Market Editor. Today we have with us one of the biggest bulls on the India story, Morgan Stanley's India equity strategist, Ridham Desai. Now, as we start this conversation, we must tell our viewers that Ridham feels that Indian fundamentals are actually improving. It's not that bad out there. And he feels that the markets could be at a turning point in this, time of 2025. Ridham, it's such a pleasure to have you with us in person in the studios. You know, any morning is a great morning to talk to you. This one is even special because look at the backdrop. We have so much masala to go over. Thank you so much for joining in.
My pleasure. Good to be back.
So let's actually start right there. Right? So much pessimism. 5 months of a correction. This is a market that was about 3% correction. Ko correction bolte hain pe. That's what happened, right? After the COVID rally. Now where we stand, there was this whole talk of US exceptionalism. That's my first question to you. So we were upset over the last several months because of US exceptionalism. Money was going to the home market. Now, last 2-3 days, it's become very apparent that exceptionalism is being questioned. So does that feed in further into your narrative, which is anyway very positive on India?
So I think India put a peak at the end of September last year. And the genesis, the idiosyncratic genesis of the peak, so leave aside what has happened in the world, which is a lot, and it's very complicated, was the fact that India's growth was slowing down. And this growth slowdown, in my view, was triggered by policy tightening. The fiscal deficit was compressed in the trailing 12 months by about 120 basis points, from 6 to 4.8. We're still finishing that financial year. And a lot of that compression happened in the first 6 months of the year, due to very specific factors like elections, heavy rains in August, Shraddh getting advanced, etc. And it got compounded because the RBI was also, I think, quite stringent with its policies. And leave aside rates, liquidity was tight, and the regulatory overburden on the banking sector had gone up. So we arrived in the last quarter of last calendar with credit growth slowing from a peak of 16 to under 11, and government spending really slow. So the quarter produced bad earnings and stock prices took it on the chin. Now at the same time, something I underestimated in terms of its importance was that China inflected in terms of policy. And this 27 September is the day after China's fiscal policy changed. And a lot of commentators said that, oh no, this fiscal stimulus is investment oriented, China needs consumption, but it marked the bottom on the Chinese markets. At a time when India was constraining its fiscal and monetary policy, China was actually getting more dovish. And we've had very steep underperformance, which is not visible in your headline numbers, between India and China. A complete reversal of what we had seen in 23 and 24. Yeah. So India is back to where it was in 23 relative to China. And India's growth rate is much better than China, even today, even with its slower growth rate. So the relative adjustment has been very sharp. Now what has happened is that we saw in February a policy pivot, which I will say is one of the biggest in my career, going back 35 years. The RBI has put a three-pronged correction, cutting interest rates, committing itself to liquidity, and also starting to lift the regulatory burden on the banking sector. The government's fiscal contraction continues, which is absolutely what they need to do, because you have to prepare the government's balance sheet for the next potential crisis when and as and when it happens. So you have to use good times to rein in. And this is also very good for medium-term earnings. I'll come to that in a moment. But the pace of fiscal consolidation is going to be a lot slower in the subsequent 12 months. Only 40 bips on 4.8 versus 1.2% on 6. So it's halving. And at the same time, and that's why I have termed this budget as a magic budget, the government's capex as a percentage of GDP is going up from 4 to 4.2. And they're achieving this very favorable mix by constraining subsidy spending, which, by the way, in this budget hit near all-time lows. So it's a very sweet budget for the market. The RBI policy is sweet. The market has just ignored this, what I call as policy pivot. If you put the chart up there, the policy uncertainty for India, the uncertainty rose into the end of last year, and then it has had this V-shaped recovery.
From an RBI perspective, you're saying?
From RBI and from government perspective, India's policy environment today is far more certain than the rest of the world put together, whether it's US, Europe or China. So you want to buy this policy certainty, and I think investors will buy it. Our retail investors get it. And I suspect that February may have been record inflows. And a lot of people have been quizzing me about when will retail give up. And I've got tired of saying this, they won't.
Getting the data tomorrow. And
yeah, you will get the data tomorrow. I won't be surprised if it's a record high or near about there. Retail is not going to give up because this is a shift in the balance sheet allocation that got underway in 2015. Again, because of a major policy shift, and I'm digressing a bit, when the Prime Minister's allowed retirement funds to buy stocks, that is Provident Fund and NPS, which was very similar to what Ronald Reagan had done in 1980, when he allowed 401k plans to buy US stocks. We got a 20-year bull market in America, which ended with the NASDAQ bubble. And it ended because a lot of baby boomers started retiring. And they had to take money out of the markets. Yahan pe nobody's retiring in 20 years. This has got many more legs to go. So the retail bid is persistent. Nigel, you mentioned oil prices are down. That helps. It's not a major game changer for India as it used to be in the past, because the oil intensity of our GDP has halved in the last 5-7 years. Again, due to major structural reforms that the government has taken, electrification of the railways, faster highways, FASTag, GST, I can go on and on. Yeah. But for those who've been long enough in this market will remember that 20 or 25 years ago, one of the quintessential trades in the market was to buy diesel genset companies. Nobody is using diesel to fire up electricity now. Yeah. Electricity is on the grid, and almost every household in India has electricity. So our consumption of oil versus GDP has more than halved in the last few years.
So that sensitivity to oil prices.
Sensitivity to oil has broken down, but yeah, I will take 65 on oil. Yeah. And we have the DXY, which was a source of pain. So what you should see is the real effective exchange rate, and the rupee was doing very well in December, even though the headlines would be it's going down, but on a relative basis it was doing very well. The RBI was defending it. But since then, the rupee has gone down by 6% in real effective terms, and it's now at levels that we have not seen in a while. It will go back all the way to 2017. So there's a big correction that has happened in the currency markets. The most important thing, and don't look at what equity investors are doing, look at what bond investors are doing. $900 million of inflows 2 weeks ago, last week $2 billion. FPI debt flows have turned like this. Right. They are suggesting that the rupee has now reached a level where they don't expect much more in terms of downdraft. In fact, if anything, probably an appreciation. And I think that is a very important change that has happened.
On YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable? with strategies from the market masters, macro pundits and chart wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
The other problem is I'd like to see the market do better on a day when Trump is talking about tariffs. I've come to the conclusion that any day without Trump talking about tariffs is a good day for the markets. Well, I think a lot of us on Wall Street are disappointed with Scott Bessent. We thought he was one of us. We thought he was a market guy and that he understood that markets mattered. But now he's kind of dismissing us. He's not one of us anymore. And they're kind of like messing around with nitroglycerin. This is very, very dangerous to basically tell people that the administration doesn't care very much if we have a recession, because the short-term pain is going to be for long-term gain. This time around, the Fed has indicated quite explicitly there are no hurry to lower interest rates. They think the economy is still resilient. Meanwhile, they have all the uncertainty as the rest of us do with regards to tariffs and whether tariffs might boost inflation. And the last thing they want to do is lower interest rates.
On a bottom-up basis, now I find a lot of companies that look very interesting on valuation. So I think bulk of the damage is done. From a medium-term perspective, I think one should be constructive and do some bottom-up idea picking here. In the small and mid-cap space, there are plenty of domestic consumption-oriented stocks which are trading at extremely attractive valuations with very solid balance sheets and free cash flow profiles. One has to just look deeper. Unfortunately, I'm not in a position to share names. The one space that I think we should all pay a lot of attention to are the
Rhythm, the last time we spoke, you were talking about this budget being a magic one. Unfortunately for the equity markets, the reaction has been tragic, right? Because the markets didn't really take that in its stride. That said, one of the big reasons is because of the FPI outflows in the equity markets. And that's getting very, very aggressive and excessive, one could say, with their holding at multi-year lows. What's your sense? Earnings are going to return. We have capex spends that's going to pick up. And, the tailwinds in the lower crude price as well. Do you think they're coming back?
Let me try and explain this for the 500th time. There are only two cohorts in the market, domestic investors and foreign investors. You can break domestic down by institution, retail. You can do all those things, you know, HNIs. You can do lots of breakdowns of those. But we keep it simple, 2 cohorts. Even foreign portfolio flows can be broken down into many categories. Now, every morning, 9:15, this cohort on the right-hand side, which is domestic, is putting its bid in relentlessly.
Yeah.
How can this guy buy? Can't. Because you can't get a trade in the market if there are only buyers. Somebody has to sell. So I've tried to explain this, that the only time foreigners can buy is one of the two happens. Either domestic starts selling, they won't at these levels. You put share prices higher, they will. So foreigners will have to pay a lot more to get in. Or the third player comes in, which is corporate issuers. Because net inflow into the market is what you get in terms of issuances minus buybacks. So that is your net inflow. So if corporate issuances take off, then foreigners can buy those issuances and they can participate. Otherwise, expecting that foreigners will buy without domestic selling ain't happening. It is just not, it's not practically possible.
Right.
Which is what we actually saw for a lot of early, late 23, 24, because that was the block deal buzz, right? Nimesh would come every day, talk about the blocks and the QIPs.
A lot of issuances
took place. Issuances,
in 24, last quarter. If you look at the issuances on an annualized basis, it was about 2/3 of the previous peak. And that was when foreign investors could buy.
Yes.
Once the issuances faded, their ability to outbid domestic is constrained.
Yeah.
You must understand that those who are 8,000 miles away from India understand India a lot less than those who are sitting 1 mile away from the stock market. So this was not the case 10 years ago. 10 years ago, the only buyer in India was foreigners and domestics were persistent sellers.
Yeah.
Retail took its holding in the market down from 27 to 8.
Yeah.
That's how intense, they were so scarred by the scam of the early 90s that a whole generation lost, exited the market. This is very different now.
Yeah.
But Rhythm, to come back, actually I'm coming back to the opening question with this. We completely take your point on the fact that how can FPIs buy if there's no seller in the Indian market? That point is well taken. But isn't it true that the last 5 months were also about realizing that India is not the only game in town? There was that US exceptionalism trade playing out, right? It was like the US economy and the US market could do no wrong. It was that tech trade playing out. Like you mentioned, there was China as well. China started grabbing attention as well. So from that standpoint, are we now better placed? Because US seems to have its own issues. China, we don't know. There's a lot of stimulus there, but we don't know. But from that standpoint, when you sort of hear global chatter, is it relatively looking better for India?
So the exhibit to look at, if you can put it up on the screen, is the relative valuations that India has versus the world. Foreign investors, the biggest problem they had was with respect to the price that they were paying, valuations. And India's valuations versus the world were like this. They've collapsed.
Yeah.
We're now a stone's throw from the bottom hit in COVID relative to the world. So we're very attractively valued.
Okay.
And at the same time, if you look at consensus earnings, and I am more bullish than consensus, I think growth is going to surprise to the upside because of the pivot in the policy. But let's take consensus. I have the consensus estimates for the world, rest of the world, and for India. That has actually made an inflection in the last 2 weeks.
Oh.
Yeah.
Relatively. Not because Indian earnings estimates have gone up, because world earning estimates are going down faster than India. So on a relative basis, India actually looks much sweeter than it has in many months now.
Yeah.
This is not just about the last 5 months. India was looking stretched for a long time into this. And foreign investors had cut back. Now, if you look at the foreign portfolio position in India, they are the most underweight they've been on Indian equities ever. I have data for 25 years. And the last time they were underweight was in 2007. And they've been overweight all along, and they've been cutting that overweight position for the last 10 years. They've been net sellers in the last 10 years because domestics have been buying. And now that underweight position has gone down to levels we have never seen. So, yeah, foreign portfolios exposure is low. Indian valuations on a relative basis looks better. Indian growth on a relative basis looks better. Policy is more certain.
Yeah.
And most importantly, India is now a low beta market. Unlike the past. So if you go back 10, 15 years, India used to be a market which had a beta of more than 1. And for your listeners, that means that India used to go up or down a lot more than the world. Now, if the world is in a trickier position than it has been for many years, the likelihood is that India will outperform. It's a India is like consumer staple stocks. It will outperform a bear market in the world. So it is quite attractive at the moment.
So 12 months down the line, if you put in a level for the Nifty, I mean, you're clearly sounding very, very optimistic with regard to the prospects, all the data that you put on board as well. The FI is underway. The retail, you're not worried about. I'm part of that, and I'm telling you that I'm keeping the money going in there. But, you know, what kind of return should we be looking at on the headline index from here on, post that 15% correction?
So, Nigel, I was chatting with one of our larger mutual fund distributors, and he happened to meet a lot of institutional investors, and he said, you know, these guys are not going to make money in India. And I said, why do you say that? Oh, because their time frame is 1 month to 3 months. He said, my pool of investors, which is the retail guys, they come in, they put the money and go to sleep. So don't ask me for a 1 year view. The thing is that it is very hard to time the bottom. I know Surbhi opened the show by saying, I think it's a bottom. I have no idea whether it's a bottom or not. What I know is that stocks are looking attractive. And in time, this may prove to be you know, a good time to engage. There's a lot of uncertainty around. It's a lot less than the uncertainty we experienced during COVID. But during COVID, one of the things I had read in my life, which was of great use to me, was that the point of maximum uncertainty is also equal to the point of maximum return. So we may not have maxed out on uncertainty. Maybe it gets a bit more uncertain in the next 4 weeks or 5 weeks. But as it gets more uncertain, the point of maximum return is coming in. Now, I'm not trying to avoid your question. The challenge of answering your question is that you have to put it in the context of the world. So I have no idea what the SPX is going to do. I have no idea what China is going to do. I think India will beat these markets.
India will outperform from here.
And I think small and mid caps will do quite well into the next few months. Maybe they go down first a little bit more before they turn around, but it's very hard to catch them.
So India outperforms many emerging markets from here on, and the breadth of the market, the broader markets will outperform from here on.
I think India outperforms the world at large.
Okay.
Including the US markets from here. And I think, yes, mid and maybe from a sectoral perspective, you've not asked me, but financials are doing well right now. I think they'll lead this market out of its problems, and then it will transfer to consumer and industrials and other sectors.
What makes you optimistic on financials, and within that, how important will the private capex recovery be?
So if you take it from a long-term perspective, credit to GDP in the private sector is in the mid-70s. And India's per capita income is rising. And when that happens, people spend their future. That's what debt is. You're spending your future. It ends very badly, but that's beyond our lifetimes. In the meanwhile, people will spend their future.
2008 was within our lifetimes. Even I was covering the market back then.
We were only at 50% credit to GDP. And our banking sector did not have a problem. We faced a problem in 2008 because of oil prices, not because of a banking sector issue. We had a banking sector issue in the middle of the last decade because of NPLs. But even then, credit to GDP still remains low, adjusted for our per capita income, and there is no reason to believe why this will not go into 3 digits in the next 10 years. And you can do the math. If 75 goes to 100, nominal GDP growth is 10-11%, you get credit growth at around 15-17%. Good companies like Chola can do better. And you know, more or less margins are stable. Even if they're slightly down, if you can manage your credit costs, you're delivering 15-17% earnings growth. Anybody at these multiples, there's a lot of money to be made in this.
All right, I guess with that, it's a wrap. We draw this conversation to a close. Thank you very much for being with us on this edition of Market Editor. More news and updates follow on the other side.
Financials are really very, very attractively valued.
Hello and welcome to Business 360. I'm Ashmit Kumar and here are the headlines that we're tracking this evening. The Sensex and the Nifty gain after a steady session on the Lal streets. Nifty manages to hold above 22,500 mark. Rupee gains strength against the dollar. Shares of recently listed MobiKwik, IKS and Sai Life tumble after the end of the lock-in period for the IPO investors. The lock-in period is over for 7 companies, freeing up more than 19 crore shares. India's exports and imports see a sharp drop in February amidst the US President Trump's tariff wars. Trade deficit for the first 11 months in FY25 rises 17% to more than $89 billion. Tata Motors and Samvardhan Motherson are likely to bear the brunt of Trump's upcoming reciprocal tariffs as per a Moody's report. Moody's says that Tata Motors subsidiary JLR is exposed to potentially higher tariffs as their cars are manufactured within the European Union. Adds that Samvardhan Motherson generates around 20% of its revenue from the US. Maruti Suzuki to hike vehicle prices by up to 4% from April to offset the impact of rising input costs. This would be the third price hike this year. Tata Motors also announces up to a 2% price hike for its commercial vehicle segment. Shares of Ola Electric hit the lowest level since listing after a contractor seeks to initiate insolvency proceedings against the company. Rosmerta Digital alleges default in payments and moves the company law tribunal. Relief for Gautam Adani and Rajesh Adani in an alleged market regulations violations case that dates back to 2012. The Bombay High Court quashes a November 2019 Sessions Court order that refused to grant them relief. The High Court had stayed the order in December of 2019 itself, with interim relief being extended from time to time. Supreme Court agrees to hear the petition alleging lack of independence at the Comptroller and Auditor General, claims that the CAG is favouring the ruling government and demands an independent selection panel to appoint the top auditor. US President Donald Trump says he will talk to Russia's Vladimir Putin on Tuesday about ending the war in Ukraine. Trump claims that negotiators have already discussed steps to divide certain assets. China unleashes a new stimulus plan to boost consumption vigorously. Retail, sales and industrial output data beat expectations. Top global CEOs likely to meet President Xi Jinping next week, according to a Bloomberg report. NASA astronauts Sunita Williams and Butch Wilmore scheduled to return home this Wednesday after being stranded at the International Space Station for nearly 9 months. A SpaceX capsule delivered 4 astronauts to the space station in what was a crew swap mission. Well, let's begin with a quick look at the day's market action. The Indian rupee gained some strength against the US dollar today. The rupee gained about 18 paise to end below the 87 levels against the greenback. The dollar index saw a strong rally over the last few weeks, and that appears to be losing steam, at least as of right now. Stock markets were largely steady in trade today. The Sensex gained over 340 points. The Nifty, meanwhile, gained 0.5% and managed to end above the 22,500 mark. Financial stocks gained in trade. The mid-caps outperformed the blue chips, with the index gaining over 330 points. And meanwhile, shares of recently listed MobiKwik, IKS and Sai Life tumbled after the end of the lock-in period for the IPO investors. The investors have collectively incurred a loss of 17,000 crore rupees since their listing in December. The erosion in market capitalization from their peaks stands at 30,000 crore rupees. And meanwhile, oil prices edged higher after the United States said that it will keep attacking the Houthis, the Yemeni separatist militant organization, until the Iran-backed group ends the attacks on shipping. The latest airstrikes by the US killed at least 53 people, as per the Houthi rebels. Gold prices, meanwhile, firmed up as geopolitical tensions and economic concerns over the tariff war triggered by the US fueled safe haven demand. Gold has gained around 14% so far this year. Meanwhile, Bitcoin prices remain steady but hovered below the $84,000 mark. Now, India's wholesale inflation rose to a 2-month high of 2.38% in the month of February, led by a rise in costs of manufactured food items, vegetable oils and beverages. However, vegetable prices eased, helping offset some of the inflationary pressures. As per data released this week, Retail inflation had eased to a 7-month low for the month of February. And also India's exports and imports witnessed a sharp drop in February. Exports are down 11% and imports are down 16% in February. The trade deficit for this month stands at $14 billion for the period between April 2024 to February of 2025. The trade deficit between the two of that period has widened by nearly 17% to $89 billion. Imports, meanwhile, rose 7.2%, while exports also jumped 6.2% during the period. This comes at a time the US President Donald Trump has threatened reciprocal tariffs on all countries from the 2nd of April. This also comes at a time when the US government is trying to strike a grand trade deal with India, which pertains to zero tariffs on all goods except agricultural products. And well, speaking of the US President, Donald Trump has said that he has no intention of creating exemptions on steel and aluminum tariffs. He added that reciprocal and sectoral tariffs, including those on autos, will go into effect on the April 2nd. Remember, Trump imposed 25% tariffs on steel and aluminum imports from March of 12th. Now, meanwhile, Treasury Secretary Scott Bessent has dismissed concerns over a stock market sell-off amid Trump's tariff threats, saying that markets will do well over the long term.
I would have made it April 1st, but you know what April 1st is? April Fool's Day. I figured, I don't like doing it, but I made it April 2nd. But it's a liberation day for our country, because we're going to be getting back a lot of the wealth that we so foolishly gave up to other countries, including friend and foe. If they're charging us, we're charging them. It's no longer they charge us and we don't charge them.
I'm not concerned about a little bit of volatility over 3 weeks, because if you look over the long term, the reason stocks are a safe and great investment is because you're looking over the long term. If you start looking at micro horizons, stocks become very risky. So we are focused over the medium long term, and I can't tell you that the market is going to go up today, tomorrow, next week, but I can tell you that if we put proper policies in place, it's going to lay the groundwork for both real income gains and job gains and continued asset gains.
Well, tariffs is clearly the buzzword there. Now, Tata Motors and Samvardhan Motherson are likely to bear the brunt of Trump's upcoming reciprocal tariffs, according to a Moody's report. Moody's has said that the impact depends on how much of the tariffs are passed on to the customers. Parikshit Luthra is joining us now with more details. Parikshit, clearly that's the buzzword. That's the big trigger that everyone's watching towards the US for. Tell us about the likely impact.
So Moody's ratings agency has done an analysis on the impact on South and Southeast Asia because of the reciprocal tariffs from US, which will come into effect on the 2nd of April. And they've said that significant domestic operations in companies in South and Southeast Asia will provide a buffer against any negative impact of US reciprocal tariffs. But sectors which could be most impacted here are automotive, steel, chemicals and business services, and they have the highest exposure to US tariffs. Now, coming to India, Samvardhana Motherson, they could likely face cost increases and they may have to pass on costs to customers. This is because they're generating 20% revenue from the United States. But the report also goes on to say that Samvardhana is undergoing a massive diversification strategy to make sure that they don't have any major reliance on one particular jurisdiction. When it comes to Jaguar Land Rover, which is owned by Tata Motors, the report says the decline in demand from the US for JLR could be a credit negative. JLR would be exposed to higher US tariffs on EU or UK produced cars, because these are the two regions which produce cars, JLR cars for the United States. Now, when it comes to TCS and Infosys, the report says that both these companies are better positioned to absorb increased immigration and visa costs. They won't face any impact of tariffs, but there is an impact because of higher visa costs. Business service providers are vulnerable to changes in US immigration policy. However, Indian IT companies have been increasing onshoring in the United States, and their good profitability gives them a buffer. When it comes to Reliance Industries, the report points out that strong balance sheet can absorb potential declines in demand or reduced profits, but also they could be indirectly exposed to escalating trade tensions. RIL exports around half of its production in oil to chemical segment. This is what the report is saying. So clearly there are some risks to Indian companies across these sectors, but hopefully strong profitability and strong balance sheet will provide a buffer.
Right, Parishit, thanks a lot for breaking that down, the impact of what those tariffs could be like. But staying on the subject, US Director of National Intelligence Tulsi Gabbard held bilateral talks with Defence Minister Rajnath Singh in a bid to boost defence ties between both the countries. The two leaders discussed a wide range of issues, including defence and sharing critical information. This comes the day after Gabbard met National Security Advisor Ajit Doval. Gabbard's two-day trip to India marks the first senior-level visit from the Trump administration to India during his second term. Speaking to ANI, Gabbard defended Trump's reciprocal tariffs, citing that both India and the US are working towards finding good economic solutions.
There is an opportunity here to see more potential for the strengthening of our economic relationship. And I'm glad to see that they're looking at it in a more positive light than just one that is focused in a negative way when we look at tariffs. Obviously, Prime Minister Modi is looking out for what is in the best interests of India's economy and the opportunities available for the people of India. Similarly, President Trump is doing the same for the United States, our economic interests and the interests of the American people. So what I see as a great positive is that we have two leaders who have common sense and who are looking for good solutions.
Now, shares of IndusInd Bank surged in today's trade after the Reserve Bank of India assured customers that the bank is well capitalized and financially stable. The stock had ended 28% lower last week. It had disclosed an accounting discrepancy worth 2,000 crore rupees last Monday. Over the weekend, the RBI directed the bank's board to complete all remedial actions during the ongoing quarter and ensure necessary disclosures to stakeholders. And the Bombay High Court has discharged a case of alleged market regulation violation against Gautam Adani and Rajesh Adani. The case was pertaining to alleged market violations amounting to 388 crore rupees. Remember, in 2012, the Serious Fraud Investigation Office had initiated legal proceedings against Adani Enterprises Limited and its promoters. The agency accused them of criminal conspiracy and cheating. The Adanis moved the Bombay High Court after a sessions court in November of 2019 refused to give them relief. The High Court stayed the order in December of 2019 itself, with interim relief being extended from time to time. And SpiceJet shares surged after the company announced that its CEO and promoter Ajay Singh will infuse 295 crore rupees into the airline via its promoter Spice Healthcare. SpiceJet has said that the fresh infusion will take place through the conversion of 13 crore warrants into 13 crore equity shares. This will increase the consolidated shareholding of the promoter group in the airline to 33% from 29%. CEO Ajay Singh will dispose up to 3.15 crore rupee equity shares to help Spice Healthcare partially fund the allotment of equity shares. The NCLAT has deferred the hearing on the competition watchdog CCI's case against WhatsApp's 2021 privacy policy. The tribunal cited the upcoming digital personal data protection rules for its decision. The government has released the draft rules for consultation. The NCLAT said it will hear the case after the notification of these rules. Remember, the tribunal stayed the CCI's earlier order barring WhatsApp from transferring user data to Meta for 5 years in January of 2025. Maruti Suzuki will hike vehicle prices by up to 4% from April to offset the impact of rising input costs. This would be the third time that the company has increased the cost of its vehicles this year. Tata Motors has also announced that it will hike prices by up to 2% for commercial vehicles. Sudarshan Kumar is joining us now with more details. Sudarshan.
Two auto companies that have announced price increase today are Maruti Suzuki and Tata Motors. Maruti Suzuki has announced a price increase by up to 4% and that would be effective April 1. And Tata Motors has announced a price increase by up to 2% for its commercial vehicle segment, and this too will be effective April 1. So first talking about Maruti, it's the third price hike in the recent past. The first price hike recently was announced by Maruti in December 2024, which was effective January 1, and the second price increase announced in January was effective Feb, and today's price increase announcement will be effective April 1. And the price increase by Maruti has been by up to 4% each in the last 3 times that company has taken a price increase. So why the price hike has been taken by these companies? As per companies, price has increased for certain products, and that's the reason these companies have taken a price increase. But the question is, apart from an increase in price of certain products, are the falling sales also one of the reasons of the price increase? Because if you look at the February wholesale data, sales were largely below estimates, especially for the entry-level segment, not only for four-wheelers but also for two-wheelers. Especially for Maruti, Express and Alto's sales in February wholesales were down 30% each. Now, retail data for the first 2 weeks of March also suggests that demand remains under pressure. Now, talking the segment-wise, in the first 2 weeks of March, registration of two-wheelers has been down 16%. For passenger vehicles, registration is down 22%, and for commercial vehicles, it's down 15%. Now, company-specific data for Hero Moto and Bajaj Auto, registration is down in the range of 14 to 17%, while for TVS Motor, it's flat, and Royal Enfield has seen a minor increase of 2%. In the passenger vehicle space, Maruti, Tata Motors and Hyundai have seen a decline in the registration in the range of 24 to 32%, with Tata Motors being the biggest underperformer, and for M&M the decline is 8%. In the CV space, similar trend was seen. Tata Motors has seen a decline of 14%, and Ashok Leyland, it's a decline of 11%. So we'll have to see how the next 2 weeks pan out. Also, if other companies too follow Tata Motors and Maruti and announce a price increase.
Now, shares of Ola Electric tanked 8% in trade to hit its lowest price since listing in August of last year. This came a day after a vehicle registration agency, Rosmerta Digital Services, sued the company for defaulting on payments. It has filed a plea in NCLT Bengaluru. Rosmerta also petitioned to initiate corporate insolvency proceedings against the e-scooter maker. Parikshit Luthra now joins us with more details. Parikshit, give us a sense of the concerns that have been raised before the NCLT and what the response of the company has been.
You know, multiple factors playing as far as Ola Electric goes, and this has really been weighing on investor concerns. Now, number one, the company's net loss had widened to 564 crores in Q3. Then it has yet to achieve profitability. In fact, the company and its founder has said that they will be EBITDA positive when they achieve a sales milestone of 50,000 vehicles per month. Currently, they're not close to that mark in any way. Then you have at least 10,000 consumer complaints with the Consumer Protection Authority, and the CCPA has asked for more information on that front. Then overall, a dip in sales as well. And now you have a legal case which has been filed by Rosmerta Digital Services Limited, which was the vehicle registration agency for Ola Electric. Ola Electric has direct sales. It does not sell through dealerships, and therefore they had hired this agency to register vehicles and also provide high security number plates to customers. Now, Rosmerta claims, and under the Section 9 petition before the NCLT Bengaluru bench, they said that Ola Electric has not paid them dues worth 22 crore rupees over the last few months, and therefore they have initiated these proceedings. There are two pleas that have been filed by Rosmerta. But there is also a larger issue. Ola on the 19th of February had said that they are renegotiating contract terms with their vehicle registration agencies, and therefore vehicle registrations for the month of February may be impacted, and this will be normalized in the next few weeks. Now, as per the vehicle registration data from the government, there were 8,600 vehicles sold by Ola Electric in the month of February. Now, you cannot sell vehicles as per rules without permanent registration or temporary registration. If these vehicles have not got a permanent registration, then they have to be temporarily registered, at least for a 1-month period. That is the maximum period for a temporary registration. Ola has said that they have sold 25,000 units in the month of February. So the question that arises, if 8,600 shows up on the Vahan portal as permanently registered, how are the rest of the vehicles registered? Were these temporary registrations? Ola is yet to answer that question. Also, if you look at the month of March, for that matter, the sales as per the registration portal of the government is 7,700 units. If this is happening, then are these sales numbers for actual February sales, which are now being registered in the month of March? So several complicated questions there for Ola Electric, which they need to explain and also tell us how they are actually now registering units or vehicles for customers who are buying their scooters.
Indeed, Parikshit, thanks a lot for that. Clearly some tough questions await. Ola Electric, the case we're given to understand is likely to come up in the space of this week. Moving ahead, the Supreme Court has issued notice to the centre on a plea challenging the government's power to appoint the Crompter and Auditor General. The PIL has sought an independent selection panel to appoint the CAG. The court has sought for a response from the centre. The plea also argued that the CAG is tasked with auditing and is favouring the centre. Well, time now for a short break, but don't go anywhere. The news and updates will continue on the other side. Welcome back. Now back to our top story. India's trade deficit fell to a 3.5-year low of $14 billion for the month of February, thanks to a steep fall in imports. Lata Venkatesh is here with more details. Lata, what do you make of the trade data and the implications for the economy?
Well, first up, the goods trade deficit coming in at $14 billion is the lowest we have seen since August of 2021. 3.5-year low. Now, normally, in normal month, the monthly trade deficit ranges, that I'm only speaking of goods. Goods trade deficit ranges between 15 billion and 25 billion, more in the 20s. 1 or 2 months, it has even been $30 billion. So 14 billion is really abnormally low for a normal month. Remember, 2021 was COVID lockdown months, as was 2020, when we had these low trade deficit numbers. Commerce Ministry officials, however, in their press conference said this is only because of a high base in February when imports were high. Crude prices have fallen a bit this February, and gold imports were a little lower. That's their explanation. But let me tell you the positive. If you count the services plus goods, then this month we are reporting a surplus in trade, which is again the first time we are reporting a surplus since May of 2021. And at that time we reported a surplus because we imported almost nothing. Those were COVID lockdown months. So this surplus is something we can thump the table about. The February surplus number implies that a similar thing could be repeated in March, because services is really going strong, services exports, and therefore for the full quarter, Jan, Feb, March, we may report a current account surplus, and that can push the whole full year current account deficit from the 1 to 1.2% of GDP that was estimated all the way down to 0.5% to 0.75% of GDP, which is remarkable considering that we have a capital flows deficit this year. The very low current account deficit is very welcome. Now, what is the negative? The February deficit falling to 14 billion is because imports have fallen to a 3-year low at $50 billion. That is the worry. Is this because the economy is not able to consume enough imports? Is there a slowdown? Remember, the PMI in February also came at a 14-month low, and auto sales were also pretty poor. Entry-level cars, two-wheelers, domestic sales generally did badly. So that's the only fear about this number.
Right, Lata, thanks a lot for breaking that down for us. That big question mark there in terms of what it means for consumption. But at least as far as those headline numbers are concerned, some saving grace there, silver lining there as far as these trade data numbers are concerned. Thanks a lot for that input. But that's all the time that we have. With that, it's a wrap on this edition of Business 360. More news and updates will continue right here on CNBC TV18.
and welcome to Startup Street. I'm Shruti Mishra. These are the top headlines from the startup space. Shares of recently listed MobiKwik, IKS and SciLife tumble after the end of the lock-in period for IPO investors. The lock-in period is over for 7 companies, freeing up more than 19 crore shares. Shares of Ola Electric hit the lowest level since listing after a contractor seeks to initiate insolvency proceedings against the company. Rosmerta Digital alleges default in payments and moves the company law tribunal. Purple Style Labs, the parent company to Pernia's pop-up shop, has secured approximately $40 million in Series E funding. Purple Style Labs has delivered 100% plus CAGR growth between FY21 to FY24 with 500 crore plus revenue in FY23-24 on a consolidated basis. Uber is in early talks to acquire Blue Smart Mobility, boosting its electric cab presence in India. As per a report, the move comes amid Gensol Engineering's financial troubles, increasing competition and Uber's strategic focus on the mobility sector. OpenAI and Elon Musk have agreed to fast-track a trial over OpenAI's for-profit shift, the latest turn in a grudge match between the world's richest person and OpenAI CEO Sam Altman playing out publicly in court. Musk and OpenAI jointly proposed a trial in December, according to a federal court filing. Well, those were the headlines we've been tracking for you this evening on What's Brewing Today. AI-driven contract lifecycle management platform SpotDraft that helps in-house legal teams manage their contract ecosystems has raised $54 million in Series B funding. Vertex Growth Singapore and Trident Partners were the lead investors, and existing investors Exceed VC, Arkham Ventures, Process Ventures and Premji Invest also participated in this round. To talk to us about the road ahead at SpotDraft, joining me now is its co-founder and CEO, Shashank Bijapur. Shashank, welcome to Startup Street. Like I mentioned, SpotDraft streamlines legal processes. Can you tell us how SpotDraft has improved efficiencies for legal teams, particularly with high volume contracts and reviews?
Well, thank you for having me on the show. If you look at contracts, we look at them as the very building blocks of any business. So every dollar coming in or out, or every rupee coming in or out, is because somebody signed a piece of paper. And the question is, how do you get that done right and on time without having legal as either a bottleneck or business taking the decisions without really the kind of things that they need to know in order to make a legally valid document? So what SpotDraft does is it helps businesses of all sizes help create, manage, analyze, and collaborate on contracts. So an MSA that would have taken a few weeks to complete now takes a couple of days to get signed and done.
Right, so from a few weeks, you've brought it down to a couple of days. But Shashank, tell me, what are the key areas the Series B fundraise of $54 million will focus on? And how do you plan to utilize the funds to drive SpotDraft's global expansion plans?
Yeah, absolutely. In fact, there are 3 key areas that we are looking to use our Series D funding. First is in product expansion and product development. Second is market expansion. And third is building the team out. Now, specifically in terms of the product itself, with AI coming in, we were always the AI first company, but I think we've got a lot of superpowers and a lot of research that's going in there. Then, of course, the market expansion as well. We were predominantly a company that was based with a customer base in the US and the APAC region. Now we are expanding into the Middle East and European regions as well as going deeper into market segments. And finally, the team. Ultimately, every company does well because of the fantastic team that it has. And, we are expanding teams across the board.
Okay, so how do you see AI transforming the legal tech space, and what new AI features are you excited to roll out in the coming months?
Great question. So if you look at AI, AI is powered by what's called large language models, and language being sort of the key term there. Now, apart from the most difficult part of language that you're probably going to read today is Shakespeare, followed by a contract that perhaps reads something like, notwithstanding anything contained in this agreement and subject to clause 3.4. And it is this kind of language that costs $1,200 to $1,800 an hour if you were to go to a law firm. So the reason we are sort of excited about what AI can do is take something that is slow, expensive, and extremely manual, and which is contract review, and turn that into a fully automated review platform using AI. So we feel like this is the next generation of how legal documents will be both drafted and analyzed.
Okay. Shashank, you've previously mentioned that 2025 will be an inflection point for spot draft. So what milestones or strategic moves are you aiming to achieve this year to solidify spot draft's leadership in the CLM market?
Yeah, I think, look, we are on sort of track to expand both our revenue as well as our number of logos that we have. So what we feel is that given where AI is right now, 2025 will add a lot of value into going deeper into markets and really truly establishing ourselves as a